I think in Wimbledon and the U.S. Open in 2013, but there's not a lot of sports where your biggest competitor, one of your biggest competitors, you go and say, you know what, you're so good and so great and I love you so much, I want you to be my coach. Think about that.
Yeah.
Unbelievable.
It's a beautiful story.
Yeah.
And reading what Murray wrote about him too, just how he knew he was better, that he brought this great thing out of him. I think the first time meeting him and things, it's amazing to see these two do it. I didn't realize they were only a week apart.
Right. When Murray won Wimbledon, where was Joker that year? Where was Djokovic that year? Maybe he got beat by someone else in one of the earlier rounds or something. Or I'm just wondering. He did get past him there because Murray won. I don't know how many grand did he win? Just one Grand Slam?
No, didn't he? Okay, if you go back, I think in the Open 2013, I thought that he actually beat him in the. Did he not beat him in the finals?
I don't know. I don't know. That's a good question.
God.
I mean, he was the pride of obviously of
11
Great
and 8
Britain.
in finals. They did play in finals.
Well, 25 out of
Which led him 11 out of 8 in finals that they played.
8 out of 11.
11 to 8 in finals.
11 to 8.
Finals that they played off against.
Oh, okay. Amazing.
Their encounters were played in majors, with Djokovic leading 8-2 in the majors.
8-2 in the majors. I mean, it is a commentary on just what a complete beast Djokovic is.
Yeah.
You know, he's still probably, it'd be hard to say he's even on the other side of his skills.
Training camp together. I didn't realize that either.
You know, one's a coach and one's still playing. And I mean, Djokovic is going to win more Grand Slams, don't you think? I mean, more Grand Slam events.
Yeah.
Right. You got to distinguish that, Andrew, because Grand Slam is something very specific. It's a Grand Slam. It's one of the events that go into winning a total Grand Slam.
All right, when we come back, holiday travel season kicks into high gear. We're going to talk gas prices right after this break. Right now, as we head to that break, though, let's take a look at the biggest pre-market gainers in the NASDAQ 100 today. Super microcomputers at the top of the list. It's up by 6%. Squawk Box will be right back.
Good morning. It's the futures. Another 300 points big day on Friday too. So a couple of big days for the Dow. When it looked like it might be petering out a little bit. Look at Bitcoin. It hasn't been able to get through 100,000 yet, but close. Yeah, Andrew, as your update, right? So Murray won, beat Joker in 2012. Djokovic in the Open, and then
In the Open, and then again in Wimbledon 13.
Wimbledon. But then
Australian Open too.
no, Djokovic beat him in the Australian Open. Andy Murray won one more Grand Slam event, I think 2016 in Wimbledon, and Sam Querrey had beat Djokovic in a huge upset at one point in 2016, and then I guess Murray beat somebody else though in the final. Milos Raonic, R-A-O-N-I-C. So yeah, Randy, I didn't realize he won two Wimbledons and one U.S. Open.
In the 2013 Australian Open, Murray had to get through Roger Federer to get to the finals.
And then lost.
And he was exhausted. It was a 5-set win over Federer, but he had to play Federer right before he played him.
Played Djokovic.
But right before he played Djokovic.
All right, so we got that all squared away. So 2 of the 3 are gone, and who knows how long Djokovic. Maybe it'll be Tom Brady. You know, maybe he'll be playing when he's 45. I mean, he's unbelievable. Tennis is different than, of course, those hits.
Linebacker.
Yeah, getting hit.
That's pretty.
I know. I could get hit once and be resigned. Have to resign. Yeah.
Gasoline prices are expected to be at multi-year lows this Thanksgiving. You've got 30 states right now that are averaging prices below $3 a gallon. Gas Buddy says that 72% of Americans are actually planning to take a road trip over the holiday. That's up sharply from a year ago. And joining us right now to talk about it is Patrick DeHaan. He is Gas Buddy head of petroleum analysis. Patrick, first, let's talk gas prices. We are looking at some pretty low prices relative to what we've seen in recent years.
Yeah, that's right, Becky. The national average has really been persistent in trying to get below this $3 a gallon mark, and it could happen just ahead of Thanksgiving. We're just a couple of cents away from there this morning. As you mentioned, we actually had 2 more states join the sub $3 club overnight. Now we have 32 states where gas prices are below $3 a gallon, and again, with millions of Americans preparing to hit the road for travel this week, it certainly couldn't be better news. And by the way, 72% of Americans telling us that they'll be traveling over Thanksgiving. That even beats out 2019. So consumer sentiment really does seem to be rather optimistic.
Yeah, 72%. I think that's a 75% increase over, is it just last year?
Yeah, that's right. Last year, inflation was sapping the sentiment of consumers to hit the road. Of course, gas prices were modestly higher. The national average going into this Thanksgiving about 22 cents lower than last year. So it's not like gas prices are hugely lower this year, but certainly more notable that 32 states are below that psychologically critical $3 level.
When you say hitting the road, how far of a trip is that to qualify as actually traveling for Thanksgiving?
Well, Becky, almost 2/3 of Americans are going to be driving in a realm of bucket between 1 and 3 hours. That was about 30% of respondents, and another 30% that were going to be driving between 3 and 6 hours. So, I mean, 3 to 6 hours, that's probably crossing a state boundary, maybe 2. So some of these travels are pretty significant. Keep in mind, too, TSA expecting record-setting air travel numbers as well. So Americans taking just about any way to get to Grandma's house this year.
Scott, Patrick, how closely does gas prices track with what you see in terms of activity? Is there a tipping point? Is $3 that tipping point? $3.50, $5? What really shuts down travel?
Well, you know, especially when it comes to a holiday season, I think some of those record-setting prices, the $4 and $5 a gallon prices that we saw just a couple of years ago, were really shutting down travel. But it's not just gas prices. Keep in mind, a lot of it is inflationary as well. When consumers are taking these longer road trips, they're very much in tune with the cost of things like eating out and things like hotel stays. So it's not just the price of gasoline, and I think that's why the numbers in the last couple of years have really fallen behind. Gasoline hasn't been too much higher the past few years, but again, Americans really felt like they were getting taken to the cleaners with runaway inflation.
Patrick, what does this match up to? You said this is more than we even saw in 2019 beforehand, but is this close relative to what we'd seen? Have we gone through the pandemic and come back out the other side, or is this just like nothing we've ever seen before?
Yeah, it is very close to where we were in 2019. The pandemic prior to the pandemic back in 2019, about 2/3 of Americans were going to be hitting the road for Thanksgiving or did. So we are a little bit above that. Keep in mind, though, we're still kind of navigating this post-COVID world where a lot of Americans really have kind of limited their amount of travel, at least when it comes to some of these holidays. Last year, kind of signaling as well that worry. And keep in mind, too, that over Thanksgiving the last couple of years, we have had resurgence of illnesses that have kept a few Americans home. Of course, this year, there's been flu, there's been walking pneumonia, but I guess that's not holding anyone back, especially with the allure of very low gas prices.
Yeah, bite your tongue too. How much of this is geographic? Where you see the highest prices? I guess you'd see someplace like California. Does that slow travel down, or are they used to those higher prices?
Yeah, to your point, it's all what you're used to. Californians are very much adjusted to paying prices over $4 a gallon, but even in California, prices are significantly lower than last year, whereas you get to the interior country, there's actually over 20 cities in the interior that are below $2.50 a gallon. So it's all par for the course. Californians kind of feel like their prices are a little bit lower. Of course, they're so much higher than areas like Oklahoma, Texas, Mississippi, where prices are below $3 a gallon. But I think almost everyone feels like they're paying far less than they have since the pandemic.
All right, Patrick, thank you. Or, I'm sorry, Patrick, we'll see you again soon. Patrick DeHaan, thank you for your time this morning.
Thanks, Becky.
It is just before 7 a.m. right here on the East Coast, and you're watching Squawk Box on CNBC. I'm Russell, along with Joe Kernan and Becky Quick on this Monday morning. We've got a whole bunch of big stories to tell you about. Perhaps the biggest, President-elect Trump announcing key cabinet members, including his long-awaited choice for Treasury Secretary Scott Bessent. That happened on Friday night as he's beating out former Federal Reserve official Kevin Warsh, who was also seen as a front-runner for the job. Warsh now possibly in line for other White House positions, also beating out folks like Mark Rowan, who runs Apollo. Meantime, in corporate news, the Biden administration reportedly planning to reduce Intel's preliminary $8.5 billion federal CHIPS grant to less than $8 billion. The change apparently taking into account a $3 billion contract that Intel had been offered to make chips for the Pentagon. And shoppers now expected to spend an average, ready for this, $650 between Black Friday and Cyber Monday. That's up 15% from last year. This is for a new survey that just come out today from Deloitte. The entire holiday shopping season, consumers are projected to under $1,200.
That gets me right there, he says.
In 2023. So I'm actually surprised.
He says that's up 15%. I say, yeah, because your freaking inflation is up 20.
Week. I mean, I'm always late with all the presents, so that's why I'm thinking later.
I already have your present. I already have it picked out for
Can I
you.
get back?
Oh,
Can I
she's
get
showing
back
us.
to you?
Oh.
Andrew, can I get back to you on how I do it? I have no
You
idea.
don't do it, period.
Exactly, that's what I mean. I need to check.
Penelope's realm.
I need to check. I'm glad to have a role. I am. And I don't mind the actual role itself. Because the other thing is,
Wrap.
no, I cover,
No.
make sure things, yeah, exactly. But the other thing is too hard, the actual finding things that, don't you think you should let people decide what they really want? Andrew, do you still try? Do you still try with Pilar?
Are you a gift certificate guy? So
No.
how do you feel like
Oh, yeah.
a gift certificate?
No, I thought,
Versus
there's this new vacuum cleaner I got my eye on for Penelope. It's and a Peloton and exercise. No. I wish I could pick the jewelry out. I'm telling you, I wish I could.
Okay, so
but I can't.
So you
still try?
let the other person choose the gift.
Yes,
Or do you
yes.
you just do cash? I don't know how I feel about cash as
You
a
can't
gift.
do that. You gotta. It's a very difficult ritual. It's like a mating, where it's like a courtship. But let's go to the mall. What is it you think? Let's go together. Let's find. Get exactly what you want.
But then there's no surprise to it. No surprise.
No, there's no. All the surprises I've had in the past have been bad surprises. For both. Can you do it? You really can get something for that your wife would not want to take back.
I try to find out what she wants through other channels, and then I go and try to buy it and hope she doesn't return it.
Has that ever happened?
The returning, actually,
No.
I think I've done pretty well.
What she didn't return.
I'm very fickle. I return a lot of things. I'm a terrible gift getter, actually.
Yeah.
Wow.
I don't really.
I got you something you're not going to return. A debt.
Really?
Oh, I'm very excited about it.
I don't want it. I don't. There's nothing. There's absolutely nothing that I don't have, which is a good way to be, isn't it?
Good, that's what I got you.
Yeah, good. That's good. That's perfect. You don't even have to wrap it. You can say it's wrapped. Here it is. Beautifully wrapped.
Imaginary present.
And then I just heard a wrap. I said wrap. Actually, someone suggested what I can get for you, Andrew. I'm thinking about doing it. I hear Matt Gates is sending personal messages on Cameo.
That I would love. That I would love.
That's what Evan
Can't
suggested.
return that either.
So I'm going to send you that. It's SOR, checking the futures, up 300 points, up a lot on Friday. And NASDAQ with NVIDIA help. Let's get to Dom Chu with a look at this morning's market mover. Dom doesn't seem like someone who has any idea what to get the misses.
No.
Do you, Dom?
No, I do. In fact,
You
I'll
do?
tell you what, unlike the stats that Andrew just reeled off, I would say given all these early shopping events, early Prime Days and everything else, I'd venture to say more than half of my shopping is already done and was done even prior to this week. So we'll see what happens on that. Anyway, Joe Vecchiangelo will kick things off with your morning movers with a check on Bitcoin prices of all things. Of course, it's right near the 98,000 mark, 98,349, up 1.5%. We're trying to creep up towards that 100,000 level. The crypto sector has been rallying, of course, since the election, with Bitcoin coming within $300 of that 100,000 mark on Friday before
$300.
The incoming Trump administration is viewed as crypto-friendly, a tailwind for the entire industry. So keep an eye on Bitcoin prices and those Bitcoin stocks that go along with them. Now let's turn to a couple of analyst notes that are getting some attention. Robinhood in the crypto sphere as well. Those shares up nearly 3.5% after Morgan Stanley upgraded that stock to an overweight. They also lifted their target price to $55 from $24. The analysts say there that revenue growth looks stronger after the election, with more crypto support and possible M&A opportunities opening up. So Robinhood shares up 3.5%. And then shares of Target, beleaguered Target, are up around just about 1% or so. Oppenheimer naming that stock a top pick, saying that shares appear to be at or near a bottom, with a very compelling risk-reward scenario developing. The firm pointed to negative investor sentiment, achievable fourth quarter guidance, and potential support for an attractive dividend yield. So Target shares, which are down 11% year to date, maybe finding some bottom. Now for that and other key analyst calls of the day, just head over to cnbc.com/pro. Subscribers get access to more detail and analysis behind those big calls. Joe, I'll send things back over to you as I go back and try to finish what is left of my holiday shopping list, guys.
Okay, Dom. Thank you. And if I'm on there, take me off. I don't want anything. Maybe a new golf swing.
I got you a sleeve of Pro V1s that have a CNBC Pro logo on them.
That'll last like 9 holes, probably. Thank you.
All right,
See ya.
got it.
Okay.
So how about a gift from this next story? Bath and Body Works. I feel like I could get you some soaps that you might
That's a
like.
good idea.
You basically say you stink.
Yeah. I
No,
need soap.
Give that
it's
to
to
your
wash your mouth
You need
out
soap.
with.
You need
Wash your
deodorant.
mouth out with soap.
Oh, why from that?
That's good.
Why from during the break? Was your mic on? Or the audio? My mic was on. Shoot.
That we should just say, beyond people buying lots of soap to wash people's mouth out with, they are rising in double digits after quarterly results. Maybe a lot of people need to get their mouth washed out with soap, and they're buying a lot of it. Earnings of 49 cents a share, 2 cents better than estimates. It's on revenue of $1.60, or I shouldn't say $1.60, I said $1.61 billion, beating expectations of $1.58 billion for the fourth quarter. Bath and Body Works expecting earnings in the range of $1.94 a share. That's to $2.07 a share. In the street looking for earnings of $1.97. The stock up about 11% on the back of that news. Who knew that people were spending billions of dollars on soap from Bath and Body Works? Unbelievable.
Yeah, we're not spending any on soap.
Ivory. You use some fancy, so you must. You're such a metro, whatever they are. You don't use just Ivory or something, Andrew?
Hand soap?
Hmm?
Hand soap?
Just in the
Oh,
shower.
no, I like Dove.
I use Dove.
Dove, I don't know
Dove
why.
The same.
Dove.
Oh man, I just realized.
You use Dove?
Some weirdo who's been asking me on X for forever.
Oh
so
my God, don't.
I just answered it.
The same guy with the feet?
Yeah,
What do
well,
you,
I don't know if it's the same guy with the
do
feet.
you use soap on your feet?
Never mind.
I like lava with pumice. Do you remember that?
Take your skin off.
Yeah,
Got the
basically.
EMA and
You know,
yes.
if you're gonna do it once a month,
keep an eye
you
on
need a
that one.
good scrubbing.
All right.
Cole's
when we
had a
come
little
back,
sell-off
we're gonna have
right
much
here,
more
so
on
this might be something
President-elect Trump's
interesting to
pick
watch.
for
Find
Treasury
out what's in the
Secretary and
news.
what he brings to the table for investors. Up next, though, we're going to talk technicals and the move in Bitcoin with Katie Stockton of Fairlead Strategies. Squawk Box will be right back.
She can break out, start to move. BBWI. People got to stay clean. So yeah, I'm gonna just kind of a bearish look here. Hewlett Packard, another resistance area. This thing could pull back and then bounce back up. BBWI, we got kind of a bearish look here. Needs to break the 63 EMA on the daily and run up, start to break that resistance level, but that's a pretty hard resistance. That's a triple top, so if it comes up one more time, could be a quad, maybe a 5. So yeah, I'm gonna just keep an iffy eye on Bath and Beyond. Got a little flag though. She can break out, start to move. BBWI. People got to stay clean. Zoom. Real nice run on Zoom. We could probably consult. Okay.
We have covered the surge in Bitcoin since the election, as it has soared up close to $100,000 a coin. Join us now to take a look at the market technicals. As Katie Stockton, Fairlead Strategies founder and managing partner and a CNBC contributor. Because it hasn't gone over Wednesday, Thursday, Friday, or the weekend, it's stalled, I think. So that's how Bitcoin's so volatile that it has not exceeded 100, but it ran up.
Doesn't have to, Joe.
To above 99,000 at one point. How can you use technicals once it gets above anywhere it's ever been before?
It's an imaginary.
That's a good question. We don't have a way of gauging upside potential from
Oh
here.
God, I do.
All of the price objectives.
$100,000 is a hard number, girl. So we'll consolidate and pull back. That's what we're doing. I mean, it's just natural. That's a big number. It's like when a penny stock hits $1, and if it breaks $1, other traders start to come in. It's like $5. You got, once stock hits 5, you got hedge funds traders that want to start buying the stock. So it's a pivotal area when you hit 100 grand and you have to consolidate on such a huge run of 50%, you dingbats. 100% gain just because of Trump being elected.
Insignificant though otherwise, except for just a round number.
And then
You accept the round
whenever I
number.
ask you what the downside support is with Bitcoin, it's always so much bigger than any other market we follow. So if it holds 40,000, then we're still in an uptrend or
Well, I
something.
think with Bitcoin,
I'm kidding, but what do you think? Where do you see the first support?
the first support is around 74,000, just simply based on minimum resistance. I know, but you don't need to be willing to let it ride down to that level. But I think actually people should be. It's not to say it looks like it's going back there, but they need to be willing to give Bitcoin and the cryptocurrencies in general more room because of the volatility there, and also because I think of the long-term potential. I think investors should have small positions in their portfolio, something that they almost forget about, don't look at that often except when they want to, and just watch this sort of long-term advance unfold.
The other important, and we started with Bitcoin, I don't know if I would have started with it. Obviously it's been in the news a lot, but I think we're more interested, or most people are more interested in the S&P or the NASDAQ. And I don't know why since they're at all-time highs, I don't know why your work is any better on those, because those have never been this high either. So you don't have a map for what's going to happen there either, do you?
Yeah, you know, the price objectives that we could have gotten for the S&P are again also basically in line. So it does put us in a position where we're more sensitive to any loss of momentum. Right now, momentum is neutral short term, and intermediate and long term is still, of course, very much positive. So we are still, staying the course with existing long ideas that have maintained that momentum. But where we're seeing sell signals, and there are those out there for sure, with the breadth having faltered to some degree, we're being respectful of those sell signals.
And same with the NASDAQ. You could have been talking about the S&P or the NASDAQ.
Either or, but the NASDAQ has definitely lost some relative strength, and with that, the semiconductor sector especially has lost relative performance. Massive underperformance. NVIDIA is stalled, but looking outside of NVIDIA, that underperformance has been magnified recently, and we feel like that's a bit of a challenge for the market, because typically when we see upside leadership from semis, that's a strong tape, and vice versa.
And I'm not asking you to talk about fundamentals. We'll just talk about another market, because the market, the equity, S&P and NASDAQ seem to stall when the 10-year the yield starts moving up, because there are concerns that some of the things in the president-elect's, in his playbook could be inflationary, or for whatever, then Jay Powell says maybe we won't cut again. So there are reasons to watch the 10-year. So tell us, what is the 10-year?
We feel that there's a major low in place as of September based on our indicators.
In yield or in yield?
So around that 3.6 level for the 10-year. And that's sort of a new development on the chart, and it's based on the monthly data. We have the indicators turning up from oversold territory. So we do expect a retracement here in the near term to the downside, but we're looking for a higher low versus that 3.6 now as the start of another advance. So we are looking for them to work
That
higher.
didn't sound that
You look
scary.
at the 30-year too, only because mortgages are tied to that, and I think anybody who's been waiting for rates to come back down may be thinking, uh-oh, what now?
What I fear, we do, and they're of course all very correlated, is that the retracement is pretty short term. So we're looking for it near term both in the dollar and in yields. And we're talking about weeks, really not months. So I think that might take or not be enough to really manifest itself in that market.
How about gold?
Gold, I mean, listen, it's still maintaining that cyclical uptrend and has long-term upside momentum, but we think it's a bit of an off period for gold, needs to digest its gains alongside other precious metals. Copper seems to be breaking some support as another aside in the metals complex.
But that's going the wrong way if the inflation trade is back in vogue, is it?
Right, that's right.
How about the Russell?
Yeah, the Russell really outperformed last week, up 4.5% versus 1.7 for the S&P.
Really?
So it's kind of intriguing, right? If we see both of those benchmarks exceed their post-election highs, which are really not that far from current levels, we think we could get maybe one more push higher before we get into a consolidation phase. So that's what we're watching very near term. We're not highly convinced that we're going to get sustained outperformance from small caps. That would require a really strong tape typically. We think it's going to be more of a balanced relative performance between small and large.
Really? The consensus is that the Russell is going to outperform. But you don't see it yet.
Well, I think people would be intrigued by the names that comprise the Russell if it is a really strong tape. And we think the tape's going to neutralize to some degree. So we don't think that that's a really compelling environment in which to buy small caps because they are higher beta. They hold a little bit more risk. And with that, sometimes more upside potential, but in a range, maybe not as much.
Okay. So I was right. That's it. Support, it's at 100,000. The support's 74,000. I mean,
74,000.
well, you've got to just have a calm demeanor to play in that market.
I think it's just a key to just
Would you buy a
watch it. Check it once a month and you'll be
I bet you the put premium is so high on
I
Bitcoin.
can only imagine. I haven't looked, but it is a big spread to support, and that's the risk, of course, right? Especially when we really don't have a way to gauge upside.
Exactly. All right, Katie. Thank you.
Of course.
Katie Stockton.
Macy's is delaying its third quarter report over an accounting issue. It says that during the preparation of its financial statements, it discovered that an employee with a responsibility for small package delivery made erroneous accounting entries to hide between $132 million and $154 million in delivery expenses. That worker is no longer employed by the company, as you might expect. It says there is no indication that the erroneous accounting had any impact on the company's cash management or vendor payments, but it is delaying its earnings release and conference call to allow for completion of an independent investigation. That stock is off by about 3.4%. In the meantime, the company did offer some preliminary numbers. It says that third quarter net sales dropped by 2.4%, but comp store sales in November are trending ahead of third quarter levels. Again, a lot to digest there. It looks like the market's still reacting. Stock is off by about 3 1/3%. Andrew?
It's interesting to see with the trending up on one end. I'm just thinking about Target, which of course was an outlier, and where Macy's might fit in the retail world, but we're going to have to dig in and find out more in the coming days. When we come back, a lot more on Squawk. President-elect Trump naming his pick for Treasury Secretary, hedge fund manager Scott Bessent, and then later, why Europe is the new holiday getaway and what it could mean for the airlines in the fourth quarter. A lot more coming up this Monday morning as Squawk Box rolls on.
right, welcome back, everybody. President-elect Trump has picked investor Scott Bessent to be his Treasury Secretary. And Evercore ISI's latest note, they write, this pick should please markets given Bessent's in-depth understanding of financial markets and the economy. In particular, the bond market the Trump administration will need to keep on its side if it is to advance its agenda successfully. Joining us right now is Evercore ISI's public policy chief strategist, Sarah Bianchi. And Sarah, this is a pick that took longer than many of the other top cabinet positions. It seemed that there was infighting that kind of broke out into the public eye. How do you think Wall Street's feeling about this? This is something that kind of calmed some nerves?
I think that's right. You're right to say there was a lot of swirl around this and potentially some infighting. And then I also think there was this tension, and there always is this tension in Trump world between tariffs and some of the immigration agenda that people express economic concerns about, and a market-friendly Treasury Secretary of the likes that we've seen for the last a few rounds from different administrations. So I think the market's really relieved to see this pick.
You see it in lower Treasury rates.
Absolutely.
We're watching it across the board. The 10-year at 4.36 after elevating close to 4.50 last week. The idea from the markets is not that tariffs are not going to be an issue, but maybe they're manageable. Maybe it's more of a negotiation tool. Maybe there is a deal that can be done with some of our partners internationally.
I think that's right. That's certainly his approach. But I'm waiting to see how the overall economic team shakes out. Because if you remember last time, we had Secretary Mnuchin in Trump 1.0, and I think some similar kind of ideas from him. But we also saw Lighthizer at USTR, and we saw China tariffs on average go up from 3% to 10%. So I think we're going to have to watch that mix. We understand that President Trump likes to have all those different viewpoints arguing in front. So I think the markets should be optimistic about this pick, but they also should wait and see how the dynamics really play out.
So what would be dynamics that would be concerning for Wall Street?
Well, I'm still very much watching to see if Robert Lighthizer lands in this administration in any capacity, whether it's White House counsel. I understand he doesn't want to go back to USTR, but trade is super technical, and he knows his way around not only every statute that ever was in trade, but also around Trump world. And
but that concerns you if Lighthizer is in this administration?
Well, I think it will point to a more aggressive, coherent, and very active tariff platform, and ones that the Treasury Secretary is going to have to make his case against. So I think it will put a more kind of even balance in the...
I don't think there's any way that we're going to go through 4 years of a Trump administration and not see tariffs ratcheted up in some areas. So what would be areas that the market would maybe take more willingly? What would be things that would really make the market think, hold on, this can't happen?
Right. Well, so I think when you're talking about using tariffs as a negotiation or something around, digital taxes in Europe or other things like that, fine, okay, tariffs around Chinese electric vehicles. We don't have a lot of those coming in directly to the United States, fine. But anything really aggressive on Mexico, I think, is something, particularly the auto sector, is going to have to watch for.
Even when Chinese imports are going into Mexico and then coming here because of our trade policy with Mexico at this point?
They're certainly fine to deal with that isolated issue. That's not going to concern the market. But anything like a 10% across the board tariff, again, I'm not saying...
About 60% on Chinese, anything manufactured in China. 60%, if that gets ratcheted down to 30%, would that still concern you?
I think anything coming down from 60 is going to feel a lot better, but 30 across the board would certainly have some impacts. Last time the Trump administration was more strategic about what they hit on tariffs, so I would like to see a little bit more balance and alignment. But of course, you're right, the global economy can handle some tariffs. There are certainly areas. Biden got at that a different way with export controls and investments, and actually some pretty targeted action on Chinese EVs coming through Mexico. So these are, I think everybody kind of maybe agrees on the goal, but again, tariffs are, if you go too broad, you can cause inflation and other things.
Let's look at the tax picture. I mean, that's another area where there were a lot of promises made in the campaign. 15% on the corporate level, lots of exemptions and exclusions. What do you actually expect to see? And what would be a point, again, where you would say, hold on, maybe this doesn't look as friendly to the markets as we thought?
Well, this is a little bit where we see the tension between some of the things Vicente said about trying to get our deficits down to 3% of GDP and a tax cut that even if you just extend the Trump tax cut, you know, it's in the $4 or $5 trillion range over 10 years. That's before all the campaign promises, and we were getting almost one a week at the end, some of them quite costly. So I think they are going to have to ratchet. But either way, I expect next year them to pass a deficit increasing tax cut. I think the market will be happier if they do start to look for some pay-fors, some offsets, some way of showing the trajectory. If it's just gimmicks by, you know, nipping and tucking and cutting the length of the tax cut, I don't think that should be as much comfort.
Okay. Sarah, thank you. Sarah Bianchi. By the way, folks, we're going to talk more about Trump's economic plans and Doge with former CEA Chairman Jason Furman and former CBO Director Douglas Holtz-Eakin. That is coming up at 8:30 a.m. Eastern Time.
All right, coming up, big weekend at the box office for Universal and Paramount. Details next. And the futures are strong again this morning. Come off a little bit from the best levels, up 260 points. We'll be right back. That's the Dow. That is.
Universal's Wicked, bringing in an estimated $114 million in the United States and Canada. This according to ComScore, and that is the biggest opening for a film based on a Broadway musical. Meantime, Paramount's Gladiator 2 coming in second with about $55 million, and this is Ridley Scott's sequel to his original blockbuster, which came out back in 2000, and of course won Best Picture. The two movies helping get Hollywood to its best weekend since Deadpool and Wolverine came out back in July, Becky.
Andrew, thank you. When we come back, international travel has been unusually strong for this time of year. Phil LeBeau takes a look at why the holiday getaway is now in Europe as we head into the final weeks of 2024. Plus, a big week for retail as people kick off the holiday shopping season. What it could mean for retailers. Squawk Box will be right back. a news alert on Warren Buffett's Berkshire Hathaway. In recent years, Buffett has written a letter to shareholders. This happened last year, and this is a letter again this year, talking about some of his charitable giving. He says that today he's going to be converting 1,600 A shares into 2,400,000 B shares in order to give those to 4 family foundations. That's a total of $1.14 billion if you add it up just on the math today. He says that the gifts that he's making reduce his holdings in Berkshire Class A shares to 206,363 shares. That is about $147 billion, 147,400 million billion if you look at the math today on this. And that points out that stake that he now holds of $147 billion plus dollars is down 56.6% from when he first started giving Class A shares away back in 2006 when he made that pledge. He goes on to really lay out what he thinks of his kids in these letters. He says that his 3 children, Susie, Howie, and Peter, will be giving away. They'll be responsible for all of these shares at his death. He says the children have now more than justified their hopes. He and his wife, his wife Susie Buffett's, their hope upon their death that they will have responsibility for gradually distributing all of those Berkshire holdings that now account for about 99.5% of his stake. In this letter, he also says that he has 3 potential successor trustees who have been designated in case his children, who are now ages 71, 69, and 66, are not able to distribute the assets themselves. This is a little different than that 2006 pledge. That was for a lifetime pledge, where a big chunk of it would be going to the Gates Foundation. But his 3 children will be the trustees going through with this. Also says that they have to vote unanimously for anything that will be done with these shares, which is kind of unusual. Not too many families do that. He says that they're comfortable financially. They will not be preoccupied with wealth. Their mother, from whom they learned these values, would be very proud of them, as am I. Those are the closing words for that letter. Joe?
All right. U.S. airports going to be jammed this week with travelers for Thanksgiving, and more Americans are booking flights to Europe during the holiday season, which is giving the air carriers a boost. And Phil LeBeau joins us now with more. Hey, Phil.
Hey, Joe, this is a trend that really started a couple of years ago. Coming out of the pandemic, we saw as airlines adding flights, more people had greater demand for taking a trip during November or December across the Atlantic. And look at how many seats that we'll see this year. Now, it's fractionally down just a little bit compared to last year, but it's an improvement compared to where we were back in 2018. 6.53 million seats. Now, that's just not U.S. carriers. That's all airlines. Transatlantic seats for November and December. And United, among the U.S. carriers, is really leading the way. Its capacity this November compared to November last year, up 2.5%. In December, it's going to be up 7.3%. Just take a look at shares of United, which are close to an all-time high. They are expecting their busiest holiday season ever. This is good news, not only for the bottom line, because airfares on transatlantic routes are going to be greater than on domestic routes, but you see this across the industry, though we should point out, among the U.S. carriers, Delta's essentially flat with where they were last year, down 1.8%. But you have seen a pullback in capacity from American. They've had too much capacity in the system for some time. And we know about the issues at JetBlue as they're redoing their route network. They had issues with geared turbofan engines, limiting the number of aircraft that they have at their use. So as you finally take a look at the airline index, this is interesting. While United has been off to the races, Delta has had a nice move. We haven't seen this across the board, and that's why the airline index, despite passenger levels being close to record levels this year, guys, it's up compared to where it was at the beginning of the year, and certainly over the last 3 months, but nowhere close to the kind of levels that we've seen with both United and Delta and the moves they've had in the last couple of months.
Yeah, the far right side of the chart is kind of difficult to understand, Phil. What do you think plays into that? Top 3 things, you think?
Well, you've got a few things here. Obviously, airline index is not just Delta and United, and we've seen a number of issues with some of the other airlines. Obviously,
not overcapacity, is it?
Yeah, overcapacity. Overcapacity coming out of the system. We know what's going on with Spirit. Frontier is also adjusting itself. So all of that factors into it.
Okay, all right, Phil. Are you going to like O'Hare or something tomorrow? What are you doing? Where are we gonna?
I don't know. Put in a request. Maybe you'll see me there.
I don't.
Joe says I should go there. That's what I'll tell my editors. Joe wants me at O'Hare.
I think you're there every Thanksgiving.
That's what I mean. He usually.
Usually I'm there.
I can't remember the last.
You go
That's
because they
what
have one of those. Well, they got one of those Annie's stores or something right nearby, or maybe a Cinnabon. I mean, you don't mind going
On the other
there.
side of security. On the other side of security, Joe.
Oh, that's right. That's right. Okay.
Okay, folks, so we come back a lot more on Squawk. Maybe some Phil LeBeau from O'Hare, but between now and then, U.S. intelligence warning defense firms of a possible Russian sabotage threat. We're going to discuss that next. And then later, the owner of the soccer club Orlando Pride in Orlando City, and the NFL's Minnesota Vikings, Mark Wilf, is going to be joining us. We've got a lot more coming up on Squawk on this Monday morning when we come back. Welcome back to Squawk Box. U.S. agencies are warning now of increased Russian sabotage targeting American defense firms, urging heightened cybersecurity as tensions escalate over Ukraine. Joining us right now to discuss this and more is Teresa Payton, Fortaleza Solutions CEO and former White House Chief Information Officer. Good morning to you. Teresa, how concerned should we be about this? And to the extent there's something to do about it, what is that?
Yeah, thanks, Andrew. It's great to be with you. We should be very concerned because what we're learning from these reports is that the operatives are getting very creative. So instead of doing the things that we're used to them doing, they're actually leveraging cyber criminal syndicates of physical world criminal syndicates, and they're leveraging insiders. And so it really makes it hard to protect against something like this when they're using sort of an all of the above multiple choice playbook.
Speak to this idea of using insiders and the physicality of it all, because historically it was something we thought about hacking, we always thought it was electronic.
Right, and now they know that a lot of companies have done really great work here with beefing up their staffs, beefing up their security. So they're looking for opportunities to recruit insiders. But there is something that companies can do about this. So they can be looking at failed login attempts, looking at accounts that are trying to log into different parts of systems that they shouldn't be accessing. You know, they're not working on those projects, for example. They can be using AI for anomaly detection, again, doing sort of a behavioral-based analytics of what is a typical profile of our employee, of our third-party vendor contractors, because the supply chain is definitely a weak link in the security chain. And then they can also be looking at sort of unusual behaviors, and those can be captured if you have a really robust insider threat program.
So when you have this idea of these insiders trying to take this stuff, how are they finding the insiders to effectively pay off to do this?
Well, it's interesting. A lot of the recruiting happens on LinkedIn. This is a great place for all of us to stay connected and share information and be connected to our colleagues in the industry and learn from them. But it's also a place where cyber criminals and nation state operatives can recruit. Some individuals who are doing this a lot of times don't know who they're working for. They may not even realize that they're being duped into doing some of the insider threats. So you have knowing insiders who...
Hold on, go backwards now. How would you not know? If you're being asked to effectively, go into a file and get it and send it to somebody, how would you not know that that's what you're doing?
They may not know they're doing that for nation states or cyber criminal syndicates. They may think that they're actually providing information to be featured in a research paper. I mean, there are all different types of techniques and tactics being used. This is why an insider threat education and awareness program is so helpful. So for example, reminding employees on a regular basis that company proprietary information is exactly just that. And even if you think a researcher or somebody at a conference is reaching out to you to ask for information, that there should be internal protocols where that has to be approved before that information can be provided.
Teresa, I have heard of certain companies, especially when it comes to the technology units, certain security units inside companies, where they tell their employees you cannot actually identify yourself on LinkedIn. Do you think that's a good policy?
I think it can be an incredibly helpful policy. But the recruiting also happens at conferences where people trade business cards and trade information. And, I remember, for example, our protocol when I worked at the White House was, well, first of all, we didn't go to conferences, but second of all, if we were out traveling and somebody even asked us where we worked, we were told to say, I'm in program management in the Treasury Department. And so that way you wouldn't attract undue attention to you and the role that you were playing, why you were traveling, why you were out and about. So there's, again, I think things that organizations need to be thinking about and understanding the typical way that you think they're going to break into your company. Yes, they're still going to try to do that digitally, but they're also going to find different ways to reach out to your employees. LinkedIn is only one of multiple ways they can reach out. They can reach out on gaming platforms. They can meet them at conferences. They can sit in employees' favorite coffee shops for employees that may, congregate in a coffee shop near the workplace. There's all different creative ways to do this. So again, having employees be more aware of their surroundings, who they're interacting with, and doing, kind of interesting scenario-based, role-based training and education awareness on a regular basis can be incredibly helpful.
Teresa Payton, thank you. It is fascinating and something we all need to be watching a lot more, it sounds like. Thank you.
Thank you.
Joe, are you an insider? Are you an insider?
I don't think so. I like to think so, but I think it's in my mind. Maybe you?
Yeah, I am an insider. The question is whether we've been breached by somebody that we don't know that they're working for a foreign government.
You guys tell everybody everything you know on air, so
I don't need breaching.
We all do.
Yeah, I don't need
You don't have any secrets.
the open book. Coming up, the holiday shopping season almost upon us. We will get an update on an outlook for retailers after the break. We're on Bitcoin Watch. It's right at 98,000, been above, been below. Creeping closer though to that $100,000 mark. More on that in just a bit. Squawk Box. Be right back.
Best Buy, Macy's, Kohl's, Dick's Sporting Goods, all of them ready to report quarterly results tomorrow. Macy's we actually just got a preview of, and you can see that stock down by 3.3%. All of this as we approach the holiday season. We're going to talk more about that right now with Sucharita Kodali, who is Forrester Research's retail analyst. And Sucharita, let me talk just a little bit about what we heard from Macy's. They had this erroneous accounting entries that were found. As a result, they are going to be putting off their official results, but they did give us preliminary results that show net sales down by 2.4%. What do you think of what you've heard there?
Well, certainly any type of an accounting irregularity is never good news for a public company. But in terms of overall how Macy's has been trending, this is a company that has definitely been struggling. I think that last quarter, it was really just that they exceeded some of the low expectations that were there, which is why there was a little bit of a recovery overall. But for the most part, their numbers are definitely challenged. This is a company that is challenged on one side by internet retailers like Amazon and Temu and Shein, and certainly at the high end by consumers who don't necessarily want to purchase at some of these mass department stores either.
The preliminary net sales down 2.4% to $4.74 billion. The street was looking for $4.77 billion. They did say that comps in November were trending ahead of what they'd seen in the third quarter. So what does that tell you?
I am, well, I guess it all depends on what the specific numbers are and what they are comparing versus the past. The truth is that November sales so far are likely to be soft. And it really, really is going to depend on if this Thanksgiving week is going to turn things around. The consumer, for the most part, is going to be waiting for these big announcements that are going to happen Thanksgiving week, and really a significant part of holiday sales are going to really be pushed into December this year because it's such a late Thanksgiving. So I think we really, really need to see the specifics here to see what exactly is meant by trending ahead. It could just be all relative to a relatively low number.
We heard good news from Walmart. Expectations from Dick's too. The Dick's Sporting Goods has been one highlight that a lot of people have pointed to. Where else do you see consumers shopping?
Well, certainly it looks like some of the home sectors are recovering as well. Within the retail world, we continue to see the non-store retailers. So essentially, that's really an Amazon number where consumers are going to e-commerce, which continues to outpace physical goods retail. Walmart certainly as well, as you had pointed out. Dick's is certainly one of the highlights in big box retail overall, but many of the mall merchants continue to struggle, particularly in the department store sector, and even a lot of the vertically integrated retailers that are mono brands, whether it is an H&M or the family of Gap brands. I think that they're challenged as well.
Any good news outside of Walmart or Dick's, though?
Well, overall, the consumer is spending. I mean, the consumer continues to increase how much they're spending. We expect overall retail to be in the 3% year-over-year growth range, which is higher than inflation, which means that it's a better year than last year. Where those numbers are going isn't necessarily always to publicly traded companies. And I think therein lies the challenge, is that there are a lot of small companies that we may not always have heard about because consumers discover them on TikTok or Instagram. These are companies that players like Shopify or BigCommerce are supporting through e-commerce platforms that aren't always household names. So there's absolutely growth happening. It just may not be in some of these large players that are at malls.
Sucharita, thank you.
Thank you, Becky.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. And among today's top stories, the Biden administration is planning to cut Intel's $8.5 billion in grants from the CHIPS and Science Act to less than $8 billion. That's according to the New York Times. Intel has seen its business struggle lately. CNBC has reached out to Intel for comment on the matter. Macy's is delaying its third quarter earnings release. The company says an independent investigation revealed an employee intentionally made erroneous accounting entries to hide between $132 and $154 million of delivery expenses between 2021 and 2024. The company said there's no indication that the bad accounting entries had any impact on its cash management or vendor payments, but you can see the stock is down by 3 1/3%. And closing arguments set to get underway this morning in Google's ad tech trial, the government trying to prove Google illegally dominated online advertising technology. This follows a 15-day trial back in September.
Meantime, take a quick look at the futures this morning. We've got some green on the screen. The Dow up now about 322 points. You look at the NASDAQ up 113 points. We've got the S&P 500 up about 30 points. Meantime, let's check your treasuries as well, because on the one side we've got equities have been screaming and just moving higher. The bond market a little more complicated. 10-year 4.341, the 2-year at 4.337. I want to get down to Mike Santoli at the New York Stock Exchange. Pardon the pun, he is combing through what he's dubbed the mullet market this morning. Good morning to you, Mike.
Morning, Andrew. Yes, that's right. The mullet, the hairstyle, not the fish. Business in the front, party in the back. That's how this market feels. It's very split. Now, the front straight-ahead view on the S&P 500 is very, very orderly. You had this little 2-week sideways consolidation after you got a little stretched after the election. Really has done nothing wrong. Rotating within it, value overgrowth a little bit. You have cyclical sectors working, banks, doing well. Really just a mild pullback, and it seems like we might go challenge those highs from a couple of weeks ago. And you see that comes as part of a very sturdy longer-term trend. However, recently you've seen this eruption of kind of speculative, fast-moving money into other parts of the market. Naturally crypto, but also just everything outside the S&P 500. So take a look at this relationship of the VXF is an ETF that has literally all U.S. stocks that are not in the S&P 500, small caps, mid caps, but also big companies that just don't qualify for the S&P or maybe are more recent IPOs. And you see that this is obviously against the quality ETF has just ramped in the last couple of weeks. Now, quality was the place to be for a long period of time for the 2-year bull market. That really was where the gains were coming from. Strong balance sheets, lots of big mega cap growth stocks, that kind of thing. This is now a change in character of this market. Now take a look too at Robinhood and Coinbase. This goes back to 2021, shortly after Coinbase came public. That was that real excitement. Remember SPACs and unprofitable tech IPOs and all meme stocks and all the rest. That was in here. Long kind of convalescence period after that big crash, and now rebuilding toward it because of options trading, leveraged ETFs, obviously everything crypto adjacent. So I'm not saying that the market's gone fully crazy. We're not even back to early 2021 levels, but it is interesting to me that this is the kind of activity that's gotten kicked off, and yet the average large cap index, Andrew, is really just kind of hanging in there and doing what it really should do seasonally and based on the longer term trends.
Mike, 2 questions. One is, looking at that Robinhood Coinbase chart that you're talking about there, and the thing that I'm unclear about is, should we think about them in the same sentence always, or do you think about them in 2 different sentences? Because Robinhood's business does have a crypto component, but for the majority of the business, it is not crypto.
The majority of the business is non-crypto, but the majority of the incremental growth and revenue is crypto and options. I mean, if you look at the breakdown of Robinhood's activity, it is crypto and options. And in terms of the idea of what's going to, kind of be a bigger part of the mix down the road, it's probably crypto. But I think more importantly it's that crypto and a lot of the other kind of retail trader-oriented plays, they travel together. And so they're kind of feeding off of that same source of energy.
And what do you think the bond market's saying? I mean, we have, as I said, we've seen this remarkable ride on the equity market, but clearly the bond market's getting a little nervous.
Well, it had been getting nervous in some respects. There was a little bit of a sense out there of, maybe, kind of growth supporting policies on top of already decent growth when inflation hasn't fully come back to 2%. On the other hand, really never got out of bounds. You never got to 4.5% of the 10-year. Today you're seeing treasuries rally and yields come in, probably on the Treasury Secretary nominee, this idea that it's a little more of a careful attention to some fiscal issues and not necessarily just a pure tariff maximalist type point of view. So that's my take on how the bond market is now kind of moving back a little bit from the border of what was going to seem like it might be more of a threat if yields became unanchored.
Mike Santoli, thank you, sir. Joe? We will definitely touch on those issues right now with our next guest. Let's welcome Jason Trenner, Chairman and CEO of Strategas Research Partners, a Baird company. I'm fascinated by, good to see you. I'm fascinated by you. I'm always fascinated. But you point out that in the last 15 years, we've had a grand total of 2 months in recession.
That's right.
Which gives us the idea that we have managed the business cycle and learned how to do that, which is, we know that's impossible, probably.
Agreed.
So let's look somewhere else for why we've been able to do that. Could be perennial nonstop QE and perennial nonstop deficit spending, which gives us this sense that we've done it. But that all seems to be setting up for a day of reckoning, because you can't do it that way.
I agree. I feel I'm very skeptical of social engineering, and I think QE is one of the greatest sources of social engineering, or greatest examples of that I've ever seen. I think it misallocates capital, and it also makes it very difficult. Very difficult for regular people. Regular people get zero on their savings for 12 years, where people with leveraged investments like private equity crush it. That's not fair. And I think it's also one of the reasons I feel very strongly about this, one of the reasons why Donald Trump was elected 8 years ago, because there's a general sense that these policies are not working for average people. So it looks like we managed the business cycle, but we've been doing it with massive government deficits and government spending, which we can't afford. No one likes to see recessions, but if you believe in free markets, recessions are a necessary part of the business cycle, which resets things and allows for creative destruction and productivity.
Part of the problem is the deeper we get into this, the more people who have made big bets on never having a recession, the louder they scream anytime there's any risk of something like that, and basically demand help from the Fed bailing them out or somebody else along the way.
Amen. And that's the problem with meddling is once you start, you can't get the toothpaste back in the tube, right? Once you start meddling in the economy, it generally tends to lead to more meddling. But also, again, it is a very poor way of allocating resources. I don't believe in small groups of unelected people, particularly unelected people with PhDs, making decisions for 330 million people. I'd much rather have the 330 million people make their own decisions about what's best
So a big part of it is the elected
for
officials
them.
who are doing what the people want, which is to make sure they keep giving them
There are certain voices that speak more loudly.
You don't want to go in this administration then. I don't know whether you are, but what a horrible time to perhaps have to face these things. So you point out, we've been in a late expansion phase of the economy for a long time. It makes it hard to invest because capital is not being allocated, right? Should the Trump administration rip the Band-Aid off and go cold turkey on all this? What would that feel like? Is that what Doge is going to do?
No, but listen, I think, first of all, Doge, in my opinion, is one of the most exciting things that's come out of Washington in a long time. Simpson Bowles is interesting, but it was a very big government type of inside the beltway type of approach to this. This is the real thing, with people that are real people that have managed
For people that just want to be spending, not revenue, this is the way to go.
This is, to me, this is an easy. I don't want to say it's easy, but it's a much
But it
more
seems like it would bring on
sensible.
austerity in the recession you're talking about.
Austerity for Washington, D.C., but not for the rest of us, not for the taxpayers, right? And the idea that we're taxed too much or that you're not paying enough in taxes or that our own income is some sort of dispensation from the government is crazy to me. Washington, D.C. is the only city that has basically had never has recessions. As a matter of fact, when recessions come, it tends to grow. Its power grows.
More people are there lobbying for more money to come their way.
Precisely. So this administration, I'm very excited for this administration. I think I've been talking to institutional investors the last several weeks.
It sounds like tough medicine, Jason.
Well, no, I think you can manage it.
Maybe
I think
combined with deregulation.
precisely, deregulation and cutting wasteful government spending can offset some of the tougher medicine that you might have, but you don't have to raise taxes. I feel very strongly about that. You can have tough tariff policies and tough trade policies because we have the most important chip in the world, which is the U.S. consumer. And so getting to fair trade is a good thing. And I think we're long past the idea that we have to subsidize the rest of the world, the rest of the world's middle classes at the expense of our own middle class.
Well, you're saying all the right thing. Are you auditioning for the Trump? I think that he watches and others watch. And there was the Treasury Secretary sweepstakes. I don't know if you saw that.
I saw a little bit of that.
And one of our contestants, Scott, was on multiple times.
Yeah.
Got dusted. And look what happened.
Yeah.
Is that what this is? Are you going to be in the Trump administration?
We'll find out. Scott's a very good friend of mine and been a client for 20 years. I'm thrilled that he got it. I think it's a great choice for President Trump.
Wait a minute. You're running his money?
What's that?
What do you mean?
Well, we're a research firm, so so Scott gets our research,
Holy
and we've talked a long time.
Mackerel. I thought it would have been the reverse.
No. I
He's
wish he
getting advice from you.
was managing
He's
my
getting
money.
advice from you. That's unbelievable.
Yeah, well, we have institutional clients all over the world.
It's a big attaboy for you, JT.
Yeah.
All right, it's good. Good, and keep us updated. So you got nothing to tell us now.
I have nothing to tell you now. I'll let you know if I hear anything.
Okay.
All right.
Thanks.
Thank you.
Okay. Coming up in just a moment, we got a lot more on President-elect Trump's pick for Treasury Secretary. The hedge fund founder, Scott Bessent, will talk tariffs and takeaways for the markets. Stay tuned. You're watching Squawk Box, and this is CNBC. Welcome back to Squawk Box this morning. President-elect Trump tapping hedge fund founder Scott Bessent for Treasury Secretary. Join us now with his reaction is Michael Falkender. He served as Assistant Treasury Secretary for Economic Policy in the first Trump administration. He's now Chief Economist with the America First Policy Institute and a finance professor at the University of Maryland's Smith School of Business. Good morning to you. I'm curious, just before we get into it, what your reaction was, especially given what's been described now in some reports as a knife fight over the last week between so many different names. Obviously Howard Lutnick, who's now become the Commerce Secretary, but Mark Rowan flying in from China last week to meet with the president. Kevin Warsh, who's been on that short list before. What do you think of this pick?
I'm elated with the pick. I think it was exactly the right person for President-elect Trump to have selected at this time. Scott's experience with markets, his guidance that he's offered to President-elect Trump during the last year on economic policy, I really think he is the right person to implement the president's agenda. When you consider the tax negotiations, the interactions with foreign nations over retaining our status as the world's reserve currency, and negotiating with China over the current trade relationship, I think all of those things, Scott's experience serve him very well. In addition to that, of course, managing $36 trillion of debt, his experience in bond markets are going to serve him well as he looks to continue to refinance and extend that debt.
Having been someone who's worked inside this administration, or at least the previous version of it, how is it going to work with Howard Lutnick on one end running Commerce, which is going to have a huge portfolio, especially as it relates to tariffs, I imagine, and Scott Bessent in the Treasury, if in fact they are at odds, at least on some issues, specifically, it sounds like even around tariffs.
I mean, at the end of the day, it is the Commerce Department and the U.S. Trade Representative who lead the efforts on implementation of tariffs. But of course, Scott has demonstrated that he is fully supportive of the president's use of tariffs, both as a revenue generating device, but also as a negotiating piece. And so I think you're going to see Scott Bessent support the president when he decides to use tariffs as an opportunity for us to improve our trading relationship, not only with China, but with a number of trading partners around the world. At the end of the day, it's going to come in front of the president, and Scott is going to be fully on board with what the president chooses to implement.
Michael, Scott has clearly been a brilliant investor. He has not managed nearly as large a team, though, over the many years that he's been in the business. And I'm curious, in terms of the people he surrounds himself with, the deputies and the like, what kind of person you would want, given that he is going to oversee, I think, something like 300,000 people.
Yeah, there's about 100,000 people at Treasury, most of them over in the IRS. But Scott has been in large organizations, and I have every faith that he is going to surround himself, and that the president-elect's office and the transition team is going to help him identify people who are going to complement his skill sets. The Treasury Secretary is a very important person on an external basis, negotiating with not only markets here in the United States, but with foreign finance ministers. And he is going to surround himself with a highly competent management team who has experience managing the Treasury Department. There are a number of people who served in the previous Trump administration who have experience working with the Treasury team, who understand how that building operates, and are going to be in a position to advise him on how to harness the talent at the Treasury Department, both among the political staff and the career staff, to achieve the president-elect's mission.
Michael, I asked you about that. I just wanted to read it on air, and I might as well for you. We heard from Senator Elizabeth Warren this morning, new statement. Wall Street may be breathing a sigh of relief at Scott Bessent's nomination, but working people see no help coming their way. Mr. Bessent's expertise is helping rich investors make more money, not cutting costs for families squeezed by corporate profiteering. What do you think?
I think that it's funny to see Elizabeth Warren going back to the red herring of corporate profiteering. I've had the opportunity to testify in front of Bernie Sanders on this. There is no evidence that profit margins went up or that exercising of market power during the Trump administration was at all an issue. If anything, it was remember, the increase in inflation was during the Biden administration. During the Trump administration, inflation stayed below 2% on average. There's no evidence that corporations are engaging in any kind of abnormal activity. This is just gaslighting the American people to try to take blame away from the socialist policies that people like Elizabeth Warren, Bernie Sanders, and Joe Biden have been trying to implement over the last 4 years.
This is probably the last we'll hear of it. But there is something maybe that you could say if you were a populist, that putting another, like a hedge fund manager in charge of the U.S. Treasury, I mean, it's an easy mark to say it's just going to help his rich friends, right? I mean, it's almost a knee jerk. So we shouldn't be surprised, I don't think.
We should not at all be surprised. But if you think, again, we, under the Biden administration, have seen these massive budget deficits that are going to continue as far as the eye can see. Janet Yellen has moved the weighted average maturity of treasuries outstanding towards the short end of the curve. We're going to have to roll over quite a lot of debt. And so bringing somebody in who has experience with Wall Street, who can immediately on day one understand how to work with markets so that we can get interest expense down. If there is confidence in the bond market because Scott Bessent is there and we can bring down debt service costs so that we can also simultaneously meet our defense needs, pay those Social Security beneficiaries the benefits that they have earned, and try to bring our fiscal situation in order, that's to the benefit of all Americans, not just the rich people that Elizabeth Warren wants to gaslight over.
Michael, I want to thank you for joining us this morning. I'm sure we'll talk a lot more with you in the coming weeks and months. Thanks again.
Still to come this morning, Orlando Pride, Orlando City, and Minnesota Vikings owner Mark Wilf will join us after a very special winning weekend for all three of his teams. Stay tuned. Squawk Box will be right back. next guest had a pretty good weekend. Mark Wilf is the owner of the Orlando Pride. That won its first ever National Women's Soccer League championship on Saturday. He's also the owner of Orlando City Soccer Club, which yesterday punched its first ever ticket to Major League Soccer's Eastern Conference Finals. And he is the owner of NFL's Minnesota Vikings. They, of course, pulled out a thrilling overtime win against the Chicago Bears yesterday. So, Mark, you're capping off that great weekend with a visit here to Squawk Box. Which of these three teams is your favorite?
Didn't have to be thrilling, Mark. Didn't have to be thrilling.
Well, it was so exciting, and they're all our favorites, and just winning so tough in professional sports, but so exciting, and winning a championship and a parade later today in Orlando, their first ever major league title. So really exciting.
And by the way, doing that just in the couple of years since your family purchased this club too. Why expand into other sports? We talk about it all the time about how sports are kind of the future when it comes to broadcasting, when it comes to any of these streaming things, that there's an audience and you can find them with the new ways of distribution.
Well, sports is on the upward trend, as we know. It's just a great platform. It brings communities, people together, and just the growth of it is unbelievable. And just look at women's sports in particular, over $1 billion business now. And the way it's grown and the way people rally around it, it's remarkable.
The Pride, the women's club, has really had a huge amount of momentum since your family came in and bought it. What investments did you make in the business? How are you looking at this?
Well, everything's on the upward trend, sponsorships, ticket revenue, and we're putting a lot of resources in terms of dedicated people. I mean, it's the global sport, having players like Marta, the greatest women's sports soccer athlete ever, but just women's sports in general. I think people are rallying around it and want to watch it, and it's just a great product.
What drew you in?
Just, I think women's empowerment. I think the fact that it's a great sport, and the way sports brings people together. I think it's a great asset for the community, and the way the fans rally around it, and the fact we have great ownership around the table now at the NWSL. And having the best athletes in the world. You see the U.S. soccer team and how it rallies every 4 years in the World Cup. So all those things point to a really great upward trajectory.
I think it used to be the thing where you saw sports teams and people would say, okay, really wealthy people look at sports teams and this is kind of their vanity. They get to go and do something fun. They cheer for a team they care about. But it seems like it has become much more of a business over the last 5 to 10 years. Would you agree with that?
Well, it is a big business, but you have to love it, and we happen to love it. We grew up as big football fans, and that's what our engagement was, to get into the Minnesota Vikings and be part of the NFL, and just to see how all these other sports leagues are growing, like the NWSL, like MLS. I think it's saying that people want to be in great places, have great experiences, and sports and being part of the sports experience as a fan is the greatest thing of all.
So what's the most important part of this? Getting fans in the seats or getting distribution so that you can get even broader reach?
All of the above, sharing the great stories about our players and our clubs, and just growing everything. The business community is recognizing it's a great way to talk about their own companies, so we partner with great companies like in Orlando with Orlando Health, and Internco Bank, and the same in Minnesota with US Bank and Twin City Orthopedics. So we have great sponsors, great partners, and our fans are loving winning. And it's hard to win in all these leagues, but it's exciting when you do.
How do you go about picking the new franchises, the new teams that you got involved with it? Did it start with the sport? Did it start with the city? I just wonder, because there are so many up-and-coming new sports that are seen as powerhouses, whether that's F1, whether that's even something like pickleball. How do you go at it and say, okay, this is where we want to be and why?
Well, it's a combination of the business metrics and the community you're in. So we've been fortunate in both Minnesota and Orlando to have great markets, and the ownership, the level of ownership with deep pockets that can invest in these sports are the kind of ownerships that the leagues want. And that's where the direction is. There's a lot of expansion going on. For instance, MLS has had great ownership. Now the NWSL looking to add a 16th team. So there's a lot of good stories out there, and it's about investing wisely and making sure that the community benefits and the business grows.
So MLS and the NWLS, those leagues, did they come to you? You found them? What happened?
It was a combination, part of our Minnesota Vikings experience. We started poking around in our stadium the possibility of getting into soccer, and we spoke to the leagues, and we just learned and were around the game and saw the growth, saw the great stadium experience you get. Of course, the NFL, that was a lifelong passion of ours, but when we saw in soccer was just the great experience in the stadium and starting to get into the media landscape more and more. And so the growth trajectory was very positive, and women's sports in particular, the NWSL is a growing brand, and we're excited about the future of both MLS and NWSL.
Did you play soccer? Your kids play soccer? How did you come into this?
Well, I was a soccer parent for our 4 kids all played soccer, so it's something we were around. But everywhere I go, when I see team sports and the way a community rallies around a team, it's something special. Like I said, what's going on in Orlando. Of course, the Vikings, should we ever be successful enough to get to that ultimate goal of a Lombardi Trophy, we know what the fandom will be like there. So these are the things that drive us: winning championships, creating great fan experiences, being part of the community. Those are the kind of things that excite us as ownership, and being stewards and having the privilege of being part of these franchises.
NFC North, man. 10-1, 10-1, 9-2, 8-3. Tough. That's competitive. That's parity, right? But is there a changing of the guard, you think? Detroit's the best team in the league all of a sudden?
The NFL, as we know, nothing's for long really in the NFL. So there's always parity and always highly competitive franchises out there. So we're in a very competitive division, and we're just really excited about our coach, Kevin O'Connell, and Kwesi, our GM, and the way we're building. So you got to keep knocking on the door.
Who figured out that it wasn't Sam Darnold, it was the Jets that caused what happened with Sam Darnold here?
Well, that might be your viewpoint if you're a Jet fan. I don't know. I'm not going to speak about that.
Big. He had so much potential. That's why they picked him. That's why they picked him, right?
Well,
but it took your coach to bring that out in him. Do you think? I mean, what a year he's had.
All I know is Sam's had a great year. He's been. What we're trying to build is a great culture where all our players can hone their craft and really work on their game, and Sam's a tremendous talent, so we're fortunate he came on here, and Kevin O'Connell and our entire coaching staff have done a great job with Sam, but it's really a whole team operation. That's what's great about the NFL.
I think Woody Johnson's ready for another ambassadorship. I really do. He's like, please, I'll go anywhere.
Well, you can't watch?
Mark's you're just laughing at me.
We're just thinking purple and rooting for our Minnesota Vikings.
Well, it's been, it's been a while. It's exciting because, and you see Kansas City again. I mean, they have a horseshoe up their sleeve.
It's a full-time job just focusing on the one team we got in Minnesota in the NFL, so that's what we'll worry about.
Mark, very quickly, of the 3 leagues, where, as a team owner, do you get the biggest return on investment?
Well, obviously the NFL is the premier brand in the world of sports.
So clearly, how much you're putting in, how much personal?
Well, personal, of course, the NFL is a well-run league as the other 2 leagues are, but I will tell you, I spent a lot of time on the Women's Soccer League because as a growing brand, as a relatively new brand, I think the upward trajectory there is very strong as well.
So investment might be best there.
Well, percentage-wise, but the absolute dollars, of course, the NFL is the big league out there, and like I said, it's a great privilege to be stewards in a franchise in the NFL, and just to be in sports in general is just such a thrill.
Are you majority owner of Mike's?
We are. Our family is. Yes, that's correct.
I mean, got to be worth what now?
Well, I'll leave that to you.
What's the last valuation?
I don't follow valuations. It's enough just following the Sunday day-to-day and making sure we try to get a win every week, which is tough enough in the NFL.
Mark Welf, thank you.
Congrats.
Thank you.
Amazing year, and more to come. Coming up, I don't know what happened at the end of that game. I mean, 11 points in 30 seconds. It's crazy. We'll get into
win.
Yeah, okay. We'll get into everything we know about President-elect Trump's economic agenda and talk about whether Elon Musk Doge Commission has a real chance of streamlining government bureaucracy. This is agenda. Welcome back to Squawk Box on CNBC. The futures right now, as you can see, back above 300 points up on the Dow, and NASDAQ looks solid. Friday was a great day for the averages. S&P indicated up 32. Take a quick look at Treasuries. I thought Katie Stockton was very interesting that she actually thinks we don't immediately head right up to back above 5 at 4.5% or 5, but 3.6.
It was the low.
Backing and filling maybe to 3.6, and then Bitcoin been hovering right around 98,000, 97 now, 656. Andrew.
Meantime, President Trump's White House agenda is now taking shape, and among the highlights is the Department of Government Efficiency, headed by Elon Musk and Vivek Ramaswamy. Its goals, they are lofty, but will they be able to match the inertia, if you will, of Washington? Joining us to talk about that and so much more, two folks who know about the inertia of Washington: former Council of Economic Advisors Chairman Jason Furman, he's now at Harvard's Kennedy School, and former Congressional Budget Office Director Douglas Holtz-Eakin is with us. He's now president of the American Action Forum. Good morning to both of you. I will start with you, Jason. You know the numbers better than anybody. What do you think can actually get done through executive actions?
On the spending side, very little. On the regulatory side, probably quite a lot. But even there, it takes patience. You need to sort of dot your I's, cross your T's, or it's not going to get done.
So when we look back, now they've set a date, as you know, July 4th, 2026, for when this project is supposed to be completed, if you will. If we were to sort of project out and we were to meet on that day, Independence Day no less, do you think that they would have achieved this $2 trillion goal?
I'm very skeptical. The spending cuts are actually well known. There's a bunch of career staff at OMB. By the way, they are career staff. They're so-called government bureaucrats. They work really hard. They're really knowledgeable. They know where all the spending cuts are. There's people throughout these agencies that know. The problem is that members of Congress don't want to do it because it's coming out as something that they care about. Some of it's a little bit harder than you'd think. And so the only way DOGE, I think, could help on the spending side is if it provided cover for the types of efficiencies that everyone's already aware of and would like to do. But it's really that political cover that could matter. But by the way, if it also just slashes and burns, it's not gonna work.
So Doug, what kind of cover do you think they can provide, and what kind of numbers do you think are realistic here?
Well, I want to agree with Jason. I mean, it's one thing to improve the efficiency of the government and to reduce costs, and no one should oppose that. But it's another thing to completely reshape the size and scope of the federal government. That's what they're promising. They don't have the tools to do it. And so I think we're looking at tens of billions of dollars of savings. That would be great. But $2 trillion is simply not realistic. And they can provide some political cover. I mean, the precedent for DOGE is the Grace Commission back in the Reagan administration. And one of the things that went on in the Grace Commission is that the agencies went to the commission and said, hey, you should order us to do X, Y, and Z, because those need done, and we've not been able to get Congress to agree. So if they can identify those things, highlight them, they are well situated to put some pressure on Congress to clean some things up. That'd be a good outcome.
So what kind of stuff would you put on that list? I mean, for example, would you start means testing Social Security? Do you think they could provide cover for that? That would have some impact, I would imagine, on the real big numbers.
So that would have a real impact. I mean, I think one of the things that I've noticed so far is they seem obsessed with the head count. But Social Security is not an expensive program because it has a lot of employees. It's because it sends out a lot of checks. And Medicare is expensive not because it has a lot of employees, but it sends out a lot of checks. If they, in fact, identify ways to improve the checks, the actual spending programs, and get the president to back them, because it's not going to happen without that, and they get Congress to go along, that would be an enormous accomplishment. I guess that's not happened for, 20 years since President Bush tried, and so I'm skeptical they can pull it off, but that would be an amazing outcome.
Jason, one of the things that they mentioned actually in that op-ed in the Journal last week is this idea they were going to go after stuff that they said either was unconstitutional or was not really intended by Congress. One of the things they cited was the Corporation for Public Broadcasting, which I thought was sort of an unusual example, not because it's not something that people don't debate the merits of funding necessarily, but because that was something that was created effectively by Congress back in '67, and that budget is effectively authorized by Congress every 2 years. And so what are the things on the list that you think that they might start to look at that realistically they could shift? Or maybe it's a political cover, by the way, for ending the Corporation for Public Broadcasting, which is about a 500 some odd $1 million project every 2 years.
Yeah, I mean,
or
that's
every
a
year.
trivial part of the budget. First of all, I mean, the notion of efficiency is the idea that you can get the same output at lower cost. There's some savings in the government for efficiency, but most of the savings are deciding that certain output is not worth the cost. So as Doug was just saying, means testing Social Security, that might be worth doing, but that's not efficiency. You're going to get less money to some people. That's how you're going to save money. That's where the budget conversation needs to go at some point. And it's how do we do a combination of spending cuts, tax increases, make it a bipartisan compromise, and go at the big stuff rather than whittle around the edges of these little things. And by the way, I mean, so far they haven't done their homework. Vivek Ramaswamy put out a list and said, let's get rid of everything with an expired authorization, everything that's not authorized by Congress. Well, you know what the biggest thing in that is? Veterans benefits, veterans health care. His $500 billion of savings would have eliminated all support for veterans. Now, I don't think he means that, but that's just indicative of how sloppy he's been so far and how much harder it's going to get when he really tries to dig in and understand these numbers in a way that right now, frankly, I don't think he does.
What kind of people do you think should be brought around the table? Because one of the things they're trying to do, from what I understand, is bring people from outside of government. The idea being that people who are already inside the tent are I don't know if they're deep state, but they're too close to the action. You need fresh eyes. Apparently Mark Andreessen is trying to help them with some of the recruiting efforts. We've heard that people like Travis Kalanick, who used to run Uber, and Bill Ackman and others have been engaged in certain ways. What kinds of people in your mind should be on this quote-unquote volunteer council?
Oh, I know who you're asking, but I mean, I would do a combination of people from outside the government, but also people with a lot of government experience. People who worked for Doug at the Congressional Budget Office, people who work at the Office of Management and Budget. You know, a lot of the Pentagon savings I know about came from the deep state within the Pentagon. They'd have like a helicopter carrier that they really didn't want, didn't think they could deploy, but it would be made in some critical senator's state and they'd want to get rid of it. There's a lot of expertise and knowledge within the government itself. Combine that with outside if you actually want to get something done, rather than just having, we got rid of the Corporation for Public Broadcasting and find some program at NIH to make fun of. I mean, you can do that all day long. That's great politics. If you want to save real money and improve the government, you need a combination from outside and inside.
Doug, you want to be on this group? You can get enlisted.
So Andrew, I just want to make a couple of points on that. I mean, there are places where they could really do some improvements. So think of the Department of Education and the FAFSA rollout. 5 years of preparation, they can't even deploy it effectively. That's literally indefensible. And so if you want to bring the tech giants in and bring some managerial expertise to those efforts, great. That's long overdue. On the other hand, businessmen often misunderstand the goals of government. So we don't try to minimize costs in the government. We have contracts which are set aside for veterans, set aside for minorities, for women-owned businesses. That's not an exercise in getting the cheapest contract. That's other goals, and they often come in with the notion they can wipe those out. That's not going to happen.
Jason, Doug, it is a longer conversation, and I hope we get an opportunity to continue it, and I imagine we will be talking a lot more about this. So I want to thank you both this Monday morning. Thanks.
Yep.
When we come back, Bitcoin's march to $100,000. We are just a hair away, sitting just below $98,000 this morning at $97,749. We're going to talk about where the cryptocurrency could go next. Squawk Box will be right back.
WSBG.
Bitcoin, as you probably are aware, came within just a few $100s of the $100,000 mark at the end of last week. Joining us now to talk about what's next for Bitcoin, other crypto, Anthony Pompliano, founder and CEO of Professional Capital Management. You're a viewer. You saw both Michael Saylor and the other individual. I have to look up his name to find it again. But I thought it was really interesting that the usage case for Bitcoin in a portfolio, it can augment certain conservative strategies, and I'm wondering, are we going to see more of that? And is it for fiduciaries and for pension managers and people that, he was talking about narrowing the liability gap for state and municipal employees and their pension plans using Bitcoin to augment the return. Is that prudent in your view?
Well, I think there's a couple of things going on. First of all, when you talk about corporations, historically they've had two levers to pull in terms of improving their business. They can drive more revenue or they can cut expenses. What Michael Saylor really introduced is this idea of taking your balance sheet and creating a third lever that you can pull. It's not really that new. Real estate has been doing this for a long time where they use that to secure loans and do other things. It's just that we haven't thought of software companies or others being able to do the same thing. And so now you have an asset that obviously is growing very quickly. There's only 21 million of them, and it seems to be working out. Now, what I do think is interesting is because there's only 21 million of these, anyone who buys it, if there's increased demand, the price goes up. And so, we had a fund that was anchored by two public pension funds that we raised in 2018. We bought Bitcoin around $5,500 for those public pension funds. They're up really big on it. And so I do think that anytime you buy an asset, whether it's Bitcoin stocks, commodities, real estate, etc., and it goes up a lot, it will help close those funding gaps. Now, what I do think is really important, though, is Bitcoin in particular was a bottoms-up adoption story. So historically, technologies are top-down. Governments and militaries adopt it first, then corporations, and eventually individuals. Here, you actually had individuals first. The reason why that's important is Bitcoin is the only asset that I know of in financial markets. As the price goes up, it becomes less risky. And so now you have the biggest pools of capital showing up and saying, it now is only big enough where I can start to buy it. And so you have central banks, you have public pension funds, et cetera, that are saying, okay, now we're getting close to $2 trillion, I can start allocating to this thing. And so individuals front ran it, but the largest pools of capital still are heavily under allocated to this asset. I think it's gonna be very good for price.
So to augment a fixed income investment for an insurance company or pension, there's some underlying Bitcoin that has to rise. I think he said over a 4-year period, it has to rise 6% per year. Remember that's what he said and you break even on that. Anything above that, you're augmenting the return because rates have been obviously so low for a lot of these fiduciaries that are trying to guarantee, retirees or whatever, a certain income. So you would take that bet. You don't think it's going to be 50,000 in 4 years.
Well, what I think is really important is if you go and you look at the data of putting just a little bit of Bitcoin, you don't have to put a lot of Bitcoin, we can put 1% of Bitcoin into a portfolio. It not only has the price appreciation, but it also drastically improves Sharpe ratios and many other aspects that these fiduciaries look at. Now, I do think that the underfunding or that funding gap for public pension funds and many other these large pools of capital is drastically under-discussed. What are they going to do, right? They don't have many options. And so it doesn't mean that you should go and throw a Hail Mary and put 50% of your fund into some risky asset, but it does mean that if you can take a risk-reward asset, which according to Fidelity has been the best risk-reward asset over the last 10 years, and you can put that in your portfolio. We're talking about, right now you have it at zero, just get off zero, put something.
The interesting thing about the gentleman who presented this to us on the real estate asset side of it is he shares in the upside potentially, doesn't take any of the downside risk.
Correct.
The downside risk is entirely taken on by the individual taking out the mortgage or the loan on some of these things that come through, and that's a pretty good deal. I would like to take something where I get to share in the upside and have none of the downside risk too.
I think there's two main stories going forward that we're going to see. The first is Bitcoin is just now entering into the financial world in terms of traditional finance. There is nothing better that Wall Street likes to do than create financial instruments. And if they can now introduce Bitcoin into those financial instruments, they're going to find creative ways to do that. The second thing is that MicroStrategy has now pioneered this idea of using a balance sheet. And so I think that there's going to be many companies that are going to do this using other assets as well. In Canada, there's companies like Soul Strategies, Hut 8, DeFi Technologies, et cetera, that are all putting these assets on their balance sheet, and they're saying, I'm going to control revenue, I'm going to control expenses, but now I'm also going to go on offense using that balance sheet. And I think that that is something that is going to permeate not just in public markets, but we're also seeing small businesses start to do this. I have multiple people who've reached out to me describing this, and I think it's going to become a big, big story in 2025.
Gensler, we know the date when he's going, and I think that's part of the move too. Anthony, thank you.
Absolutely, thank you so much.
Okay, I like that tie. I like it last time, the time before that, and the time, same tie every time.
I'm gonna wear it till I lose it, Joe.
Attaboy. Squawk Box, we'll be right back.
Dom Chu joins us right now. He's got some of the pre-market movers this morning. Dom, what are you seeing?
All right, so Becky, we'll kick things off with an earnings mover that shares of Bath and Body Works, rather. It's up right now 21.5% after posting third quarter earnings that topped estimates. The soap and fragrance company also lifted its full year guidance. And the company's CEO said that she believes Bath and Body Works is well positioned to navigate a volatile retail environment and shorter holiday calendar. So watch those shares. Let's turn to a couple of key analyst notes. Shares of Target up nearly 2% right now after Oppenheimer named that stock a top pick, saying those shares appear to be at or near a bottom with very compelling risk reward developing here. The firm pointed to negative investor sentiment, achievable fourth quarter guidance, and potential support for an attractive dividend yield. So those shares up 2%. And we'll end on Palantir. Those shares up right around maybe 4.25% after Bank of America raised the stock's target price up to $75 from $55. They also said in a world where efficiency, innovation, and safety and speed are the most valuable assets, Palantir is the enabler and winner in this new era. So watch those Palantir shares. And by the way, for more on all other calls of the day, just head over to cnbc.com/pro, where subscribers get access to all the detail and analysis behind those calls. Becky, Joe, Andrew, I will send things back.
Okay, Dom, thank you very much. Let's get one more look at the markets. The futures have been picking up all through the course of the morning. When we started 3 hours ago, Dow was up by about 300 points. Now we are up by close to 400 points, a gain of about 388 points above fair value. S&P futures right now up by about 41. The NASDAQ indicated up by 156. It's all happening as Treasury yields have come down. That does it for us today. Make sure you join us right back here tomorrow. Right now it's time for Squawk on the Street.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Some calling it not the Trump rally, but the Bessent rally. Stocks up, yields down on news of Scott Bessent being Trump's pick for Treasury. 10-year yield about a 2-week low. The curve briefly inverts on this holiday shortened week. Our program begins with rally mode. Wall Street is coming off a winning week as the post-election rally does pick up steam once again.
Plus, back to Trump's Treasury pick, he is hedge fund manager Scott Bessent, what that choice could mean for global markets. And Warren Buffett is speaking out against creating family wealth or dynastic wealth. He's giving away another $1.1 billion to 4 family foundations. A lot more in an interesting letter from Buffett this morning.
Let's begin with the markets as we do enter this holiday shortened trading week for the Thanksgiving Day holiday. Jim, even you mentioned these yields in early hours of the morning today.
Well, look, I think that we've been controlled by the 10-year. I think that there was a sense that every time we get near 4.5, it's time to sell stocks. Anytime we get back down to 4.25, it's time to buy stocks. It's such a simplistic thing that, David, you know that it's completely algo-derived. People at home might think, well, isn't it silly that it could be such a big change? But I think it all has to do with the deficit and the idea that if it goes 4.5, that's because we can't handle the bond load. We can't handle the sales. 4.3 says we can. So it's pretty weirdly cut and dry.
Well, you make 2 different points. One is you think a lot of it is algo. We talk sometimes, or maybe not often as we should, about how much money every day moves in this market based on algorithmic, whatever you want to call it, trading. There are so many firms, obviously, that have that at the core of their strategy at this point. But then you're also talking about the deficit. I'm not.
Well, I just
explain the two to me, like the relationship there that you're trying to.
The Treasury designate cares about the deficit, which is it could. I think there are a lot of people who felt maybe what we're going to get is a Treasury designate who just frankly just cares about growth, or just cares about no taxes and just says, look, we don't need taxes. Carl, we get someone who actually sounds like any previous Treasury Secretary, then we start thinking maybe it's going to be a little more business as usual, which, by the way, we like. I mean, I know that there are a lot of people who criticize the Biden administration, but the stock market was really terrific under that period, and we got to remember that. I think people, they make a decision that, wow, Biden was bad for business, so therefore the stock market was bad. It's actually not true.
Back-to-back 20% years, we'll see. It's been happened several times in the past. These 3 arrows that Bessent talks about, right? Reducing the deficit to 3% of GDP, 3% GDP growth, and then oil production up 3 million barrels a day.
Well, there you go. I mean, I think that these are all good. The last one's going to be hard. It's going to be hard, particularly even if you do the so-called the drill, baby drill, because we did see oil go down under Trump because there was too much drilling. David, you know that drilling's gotten more expensive. We also don't know where to put all the oil, given the fact that China's not strong.
Not to mention, we're still in an environment, which we've been in for some time, where the investor base of many of these companies is not encouraging more drilling, but encouraging capital return. And that's certainly been the case. And by the way, investors in that industry have benefited from that trend. Namely, yes, of course you have to drill more here, and you want to be as efficient as possible, but return capital as well. That's been what? How many years has that been now? The case last 5-7 years at least, right?
Well, I think Scott Sheffield, the former CEO of Pioneer, was the first one. I remember speaking to him after a board meeting. He just said, we're done. We've been the most aggressive. We're not going to do that anymore. We're going to start returning capital. And then bingo, he gets a bid from Exxon. So that was obviously the right thing to do. I do think, by the way, if you can make it so that we have good growth, but we don't have an increase in the deficit, Well, then I think we get to the Larry Fink world. And Larry Fink, the CEO of BlackRock, was talking about right here, was saying, listen, we can grow our way out of it. And because we have such reverence for Larry, of which I think he's totally deserved, it doesn't sound like a Pollyanna plan. I think there are a lot of us who would just say, you know what, we can grow out of this. And there'd be people saying, give me Bitcoin, because I know we can't grow out of it.
If you put it on the right trajectory, I think is the point, then you can convince the bond market. If you're on the right path, then you're not going to be as concerned. And so I think that's a key. I'm not quite sure I understand the 3 million, how that equates to... Or
3 million barrels?
Yeah. I mean, the 3% I get a lot more in terms of goals, but I mean, prices would come down, wouldn't they, conceivably?
No. Oh, geez, would.
And they would never stop drilling because you don't want prices to come down? Is that...
Well, the headline on the front page of the Journal over the weekend was, the drillers don't want to drill baby drill.
No, and we don't want further natural gas land. We finally have natural gas going up. So we hear there's going to be more natural gas. No. But you can end the pause on infrastructure for liquefied natural gas. That's going to end immediately. And so therefore you can start planning export. And there is still plenty of export demand because we're the lowest cost natural gas in the world.
Those are the headlines this morning on the tape. Sources that the administration will lift the pause on the LNG export permits, asking for Congress for more money to refill the SPR, maybe withholding IEA funding if they don't refocus on oil and gas?
Yeah, I mean, look, I think that Rusty Brazil from RBN has this really great piece this morning about how there's great infrastructure training, big projects right now to make it so the SPR works. So the SPR cannot take in all the oil that the Trump administration would like just because part of it is down. A big part of it is down. You just can't take the oil in. David, you can buy what you want, but if you can't store it, it doesn't matter.
That's a good point. That's a good point. And obviously natural gas is also a part of drill, baby drill, I guess. So
yes, it is. Very much
we
so.
have talked many times about Europe and the fact that we need to be exporting to that market, which is no longer taking Russian natural gas.
No, I'm pretty close to a lot of the pipeline companies and all of the natural gas companies. And what was hysterical was that they woke up one day and they heard there was a pause. I mean, these guys were spending billions of dollars in infrastructure to get natural gas, liquefied natural gas. That takes a process right there. And then the export, including really making the channel, dredging channels, multi-year. And then you just threw this monkey wrench in. And, well, I mean, now we're trying to figure out what to do. But this would be, it would happen immediately.
So then the bigger question is whether or not Treasury can shrink the deficit, at least as a percentage of GDP, while giving no tax on tips or Social Security income or overtime.
Or even giving up or getting rid of the salt tax cap.
Or taking corporate to 15.
Or just being really happy if you're wealthy. Is that where you're going?
Yeah, or corporate to 15. I mean, the number of...
who has dividends?
The number of tax cuts as potential. And by the way, that's the one they're going to get started on and need to right away in the new Trump administration. I'm talking about the tax bill because they're going to want to do it under reconciliation.
Right.
They're going to have to do it while they have control of both houses of Congress.
And who do those tax cuts go to?
A lot of them go to wealthier people, potentially. Although you also want to avoid the expiration of the Trump tax cuts from his first term,
extend those,
because that was broader based. But yes, it obviously as well a lot of not people here who are dealing with the salt tax, where it was the biggest tax hike of our lives in many ways. But yes, for many.
But I mention it just because there are so many anomalies about the election. The Democrats forgot to talk. They didn't stress inflation. The Republicans, many people are in states where there's not as much wealth, voted great tax cuts in. So there's just, I mean, there's so many anomalies that it's really difficult other than to say it's good for the stock market.
Right. Then, of course, there's the Doge Commission. Big piece last night looking at the players that are reportedly involved in the Washington Post. Not just Ramaswamy and Musk, but Joe Lonsdale, Mark Andreessen, trying to get data that they believe, government data about the workforce that's siloed in these antiquated buckets.
Sure, but I think, again, you come back with the amount of money that the whole, like the Defense Department you spend, it doesn't come, they could cut $2 trillion in it. Well, it doesn't really work.
$2 trillion from the seven, it
just doesn't
seems
matter.
possible. Now, there are some who believe when they think about $2 trillion in Washington, they think about it over 10 years because that's the way they will do these bills. So then you're talking $200 billion a year, which is obviously a lot more doable.
And you know you got to go after public broadcasting because every single Republic, boy, you can't kill that public broadcasting.
That's really going to save them a lot there. In public
that
broadcasting.
is right
That's
there.
going to take care of a whole thing.
Just the hell with them, man.
Yeah, that'll be it. Then they can move on.
How about?
Well, this podcast we don't need that anymore. Is that what they say? What are they? I don't know. I guess it doesn't matter.
Shorter term,
I
Jim.
kind of like.
Goldman over the weekend saying year-end 6,100 that we're entering a really historically sweet spot for the markets.
And there's these great. Look, I thought that there was an RBC capital market. 10 things we're thinking about, and they were almost all great. But I think the one that's best is sentiment setup is modestly constructive in 12-month view. There are not a lot of people who are really bullish after all this run. I don't know how that happens. There are people who fight this move. This was the first night last night, David, where the futures were not down big, and I think a lot of that is because, frankly, the Treasury Secretary was not someone who wanted to throw a bomb.
Although you're referencing Calvasina's strategy
I like her. She comes on.
She's great when she comes on. 5 to 10% potential decline, though, is what she's talking about.
But again, I just like the idea that sentiment remains neutral to negative. I don't really understand it. Carl, why are people negative when things are so good in the market? I mean, now we do have this element of froth. I think we all admit, I'm working on that tonight, where the bulls are in control of certain stocks and they're not going to let go. And a lot of them are like I put them in the app-loving category. Yeah. App-loving. But you have something that happened at Macy's this morning. There's like 100 million, and it's not missing because the capitalism didn't change. They didn't really hit the numbers. It's 120 million. It's ugly. And the stock's barely down. I mean, what do you have to do?
You're referring to the fact that they did not acknowledge expenses for delivery, I believe. Perhaps as high as 154 million over a number of years.
But shouldn't that stock be down a lot? I mean, honestly.
I don't know. I wondered as well why it wasn't really giving up anything.
But that's the kind of thing I'm saying, that
when you see an accounting error of that type.
Those always mean sell. Accounting errors mean sell.
Well, maybe not here.
Well, it doesn't matter. It's my
I see.
Meantime, the Bath & Body Works guide is good. It was up 18 pre-market, and all the names, Jim, that raised last week: Walmart, Williams-Sonoma.
They have adherence. They have adherence. Gap, by the way, of the ones you mentioned, Williams-Sonoma was on. Laura Albert. I think that stock can go appreciably higher because a lot of things are just going right. They weren't even acknowledged. And the Gap numbers were incredible. And Athleta inflected. I mean, Richard Dixon did such a great job, and people just keep. They don't acknowledge the turn in Gap. It is magnificent. Old Navy's turning, David. Banana Republic is even turning. Gap has already turned. We're going. We're going to go to the Banana Republic. There's a brand new Banana Republic, and David, you're going to be a real upgrade.
I went to the one at 30 Rock last year, I think. Yeah.
Did you really? You went there? What?
Last
on
year.
the way to Porterhouse?
And it had gone higher end again, sort of, I noticed.
It
right?
did. He's got it. Richard Dixon has it. And well, what happened is you used to be able to go to Gap, and then you would go to Banana Republic, and they were kind of the same. They're like interchangeable. And that had to change. You can't do that.
Right.
You can't ask people to pay a little more for the same stuff.
Right.
Meanwhile, tomorrow, Jim, Best Buy, Kohl's, ADI, Dick's, Burl, and then that's kind of it for the week.
But Dick's is up 7 already, the pre-market. You got to watch Best Buy. We sold some for the Travel Trust Nice Game. But the notes on Best Buy are very much like Bath & Body, which is that, look, this is really bad. Everyone knows it's really bad, so buy it. They're like, the club is so crowded, no one goes. Right? It's a Yogi Berra stock.
Berra's, yeah.
It is. I think, was he from Montclair?
I believe he was, that's right.
Right, he's from Montclair.
Yes.
He was a leading intellectual. His kids go to that school. He's a leading intellectual school
there
district.
for many, many years.
Right.
Yes, a long-time resident.
You always meet people in Jersey.
Yes,
Went to
yes.
Montclair. Oh, good school.
By the way, this is usually a pretty good week for the XRT relative to SPY.
Oh, I mean,
the week between Friday before Black Friday and Black Friday itself.
Well, look, I think that if there's a good game on Friday for Amazon, hey, just keep hitting buy. It's like, boom, boom, boom. But how, like, you see that stuff.
This is courtesy of B of A here. Look how many times XRT outperforms the broader market.
How about Treasury Secretary do during that run up there? New Secretary. The performance of the new Treasury Secretary.
We don't have a new Treasury Secretary yet.
Okay, you're right. Designate. Absolutely right. I see. I think that McCormick is no longer designated. He's it.
McCormick.
For Senate in
Oh, yes,
Pennsylvania.
yes, that race is done.
Yeah.
Casey,
There you go.
Casey conceded, yeah.
Yeah, he conceded. As long as I've been alive, there's been a Casey in the Senate or governor. There's always been a Casey. Never knew what they did. I voted for him. It was important.
Although to David's point about salt, I mean, it only takes a few in the House, and there have been some vocal, there's been some loud voices in the Northeast about the tax bills. It's not going to be smooth sailing necessarily.
But at the same time, we do have lots of articles about how Trump is being welcomed in New York again, which I think is kind of interesting and counterintuitive. How badly did the Democrats blow it? Did they do anything right? The Democrats did. Give me something that they did right. Come on. Come on. Oh, give me a break. Come on.
Jim, the popular vote margin is the narrowest since Bush v. Gore.
Why couldn't you say that?
Popular vote margin is the narrowest since Bush v. Gore. Well,
There you
Gore
go.
won that one popular vote, but
There you
lost
go.
the electoral college.
In the meantime, I am amazed. I just want to point out, if NVIDIA's down, I think that may be the second day in a row that NVIDIA's down. Now that'd be something.
That's the, Dan Niles made the point this morning, Jim, that broader market was up 1.5% last week, even despite the nuclear rattling out of Russia and the NVIDIA guidance, which wasn't necessarily blowout guidance.
I mean, given the fact that it is the greatest performing story of all time,
yes,
I call it the Saquon of our market. It's a Saquon aspect.
I assume they won last night.
What country?
You would know it if they hadn't.
Where does he live?
He's in
I
such a
think
nice
maybe we
mood
show
today.
some of these these runs where he breaks through the front. Oh, shoot! Hey, look at him. He seems to be faster than everyone on the
That's
field.
why
So-
when it takes him a little bit to get up, you worry,
Yes.
don't you?
Oh, right. But he bench presses 650, so I'm not all that concerned. What?
The Giants let him go, and then they let Xavier McKinney go as well. The other guy in the McKinney also is one of the best players in the league.
Oh, look,
Genius.
Let's show Jones versus Saquon. Wasn't that
Genius.
Jones versus Saquon?
What a year.
Was Jones on the couch? What was he on? Was he on one of Williamson on West Elm couch? Because
You guys are dominant, and what did Washington lose?
By what?
Yeah, that was crazy.
Yeah, that was a great game. No one wanted to win.
Everything happened in the last 4 minutes. They
My
scored
wife reminded me last night, Push went to, she goes, don't forget, you don't play for the Eagles. When you say that that is just incorrect. You don't play for the Eagles.
You don't.
And I'm not even in the front office. But there's my buddy Howie Roseman.
You did give them the speech, though, years ago.
I used to give him a speech every year, and then somehow I just got excluded. I don't know. What happened?
We're right. You're welcome with
I'm
people.
on the outs with
Can
the
I
Eagles.
tell you?
I'm on the outs, but that's all right. I got us.
You'll always have us, Jim.
Thank you.
We'll take a break here, take a look at the pre-market. Obviously looking for a strong open at the opening bell. We'll get to some box office stuff over the weekend, interesting numbers. Dow futures up 400 and a bunch of calls on Affirm, Meta, Procter, Monster, and a lot more in a minute. Take a look at the futures here. We'll see if the S&P can make another run at least a closing high, which was about 6,001 a couple of weeks ago. Oil, by the way, down a full $1 here on now multiple headlines that Israel and Hezbollah have agreed to terms of a ceasefire. We'll get to that. Kramer's Mad Dash in the opening bell in a minute.
All right, let's get to the first Mad Dash of the week, and we're going to talk about the second largest company in the world.
Right. Well,
after NVIDIA, it's neck and neck.
Neck
It could change
You
today.
kind of look at it. It's a nice horse race, and this is a Morgan Stanley piece I think will move Apple ahead of NVIDIA because it's a great survey, and it's talking about, yes, the Apple AI is bringing people in. They're talking about the idea that they could easily get a $9 a month fee. I mean, this is the type of thing where I'm starting to say this is the way that the revenue stream, the service revenue stream, could go up dramatically. The gross margins on this, on anything like that, is big. David, AI may be a hit for them. And I think it's interesting because there are a lot of criticism about Microsoft Copilot. A lot of ads this weekend about it.
Ads, positive ads or negative ads?
No,
I'm sorry.
ads by Microsoft.
By Microsoft.
Yeah, and the
I thought
ads
maybe
were
it was Benioff running ads
No, I was
about
going to say,
how...
he hasn't done that yet.
Okay.
The ads don't show me, I mean, it's like the ads just look like, I don't know, a lot of lines going on the thing, and I didn't really understand it. It didn't make me want to buy it. Now, we'll hear from Best Buy exactly, and by HP, exactly how big the AI PC is. So far, everyone just says it's big, 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 except for the people who buy them, which is not a big number. But I do like this, David. I think the iPhone upgrade cycle is elongated. This has been my plan for why you got to stay with Apple. Don't trade Apple. Just own Apple, because it's going to be elongated. And David, the big final thing, competition, a lessening headwind to iPhone demand in China, where Tim Cook is. Now, China has just been a gigantic headwind.
Yeah, well, Huawei has become much more of a significant competitor again to Apple in that market.
Well, I don't know. The PRC seems to look the other way when it comes to Apple.
All right, we'll keep an eye on Apple shares, of course. We'll also talk a bit about Warren Buffett, who, by the way, has sold a lot of Apple shares, still owns quite a few as well. And don't forget, you can catch us anytime and anywhere. Listen to and follow the Squawk on the Street Opening Bell podcast.
Target's moving higher in the pre-market. Oppenheimer returning the stock to top pick status, saying that shares are at or near a bottom. Sees a compelling risk-reward scenario. Jim, they say the updated guide that we got last week does capture some of the discretionary headwinds and the markdown risks.
Yeah, look, I think it's possible. I still feel that the price differential too much to order in Walmart to e-com versus shipped, which is Target, is so great that you can't do it. I think that Target has to, this is something I've been really hard on. Target has to find multiple places, multiple aisles where they are selling below everybody else. Right now it's price, and I don't think that piece really targeted what the difference is and what went wrong. They're too expensive. Period. End of story. They're just too expensive.
Well, inflation, buddy. Profit. That's what you want. Okay, Spies Knifing. Good morning.
Wow, we haven't seen breadth this
Okay.
far in a few days here.
When the hell's my...
Well, I do think that apropos of the split, when
All right. Woo!
Alto split,
What is going on here?
I had thought for sure that the animal
Watch the spy off the 200 right at open.
split would start to matter.
First scalp of the day.
That's actually a relief to some degree.
Come on.
Those splits create no value. But at the same time, I thought for sure that people say, ooh, it's splitting, let's buy some, which had been the ethos for the last couple of years. Something to watch. Doesn't seem to be encouraging buying right now.
Right. So, NVIDIA comes to mind and a few others.
Again, the David, maybe, do you think the market's gotten smarter that there's no value created from a split?
Maybe. You know, on NVIDIA, guys, listen.
Oh, don't tell me you have something NVIDIA.
No, I don't really. I'm continuing to pay close attention
Okay,
to
26th.
this ongoing debate about
The 601 strike.
pre-training and whether there is a deceleration in the rate of improvement. We've talked about this.
Call.
Many others have as well. Most recently, I was listening to my new favorite podcasts, Brad Gerstner and Bill Gurley, talking about it.
Come on, baby. 81 cents.
And Jensen says no. He says there is no deceleration in the rate of improvement for these foundation model pre-training. Now, by the way, even if there was, there's certainly an argument to be made that given growing inference and so many other areas where you need
There's a buck.
more and more
Take some profit. Take some profit.
well, it's not really going to impact demand, but it's still interesting
Well,
and worthy of being aware of.
Well, I'm coming back and saying, well, Jensen's sticking by a 5-to-1 ratio of how
Out at
much money
103.
Right. But I am saying that it's time for the Mag 7 to break up. And I say that because when NVIDIA did well and said that there was no price degradation, you still had to pay full price, all the companies that buy, all the hyperscalers went down that day. Now, people attribute it to Google being attacked by the Just Part. Completely untrue. And by the way, Google has a really good rap on the Just Part, really involves it. Maybe in 2027 something will happen, so don't get all excited. But I think that the more that NVIDIA makes, it's now extracting its worth from the hyperscalers. And people are not, I couldn't believe no one recognized it. I said, wow, Eureka, am I really alone in this? But those stocks all went down because NVIDIA's going to hold price point. Now, there's another article today about how Amazon...
with demand...
I'm out.
absolutely
110, 103.
Deceleration.
Sold through.
For potentially years to come.
Yeah, and look, the gross margin 75. They could go up to 76. That would be
We're
aggressive.
not making improvements in the models any longer. I mean, or if the improvement is so much smaller.
That was an easy no-brainer right there, people. I'm going to explain the trade.
GPT 2 years ago.
God, 116. There's your 3 white soldiers. So we should consolidate here. But I'm going to explain why I wanted to take the trade. It was a beautiful play. So we had breakout, this pre-market here, which is telling you something that, you know, this could be very bullish. And then we had the knife right straight to the 200. Now I hit the 200 EMA and I have the 200 SMA. So when that hit the 200 SMA, I jumped in it as soon as I could. To me, that was a magnificent way to get in and out of a trade within a couple of minutes. We're at 121 now. So now we have a 1, 2, 3 up here. So we're going to look at puts. This is one of the big, this is a good week for trading. 135. Damn it. That'd been that'd been a grand. I mean, I was so confident in that trade, I got 20 contracts. That's a good way to start. AMC is celebrating a little bit of them, that Wick or whatever, Wicked or whatever it is. I ain't watching it. I just can't stand actors anymore, so. Baba bouncing up a little bit. All right, Tim, 111.12 resistance. Woo! It's right where is that where I mentioned it? Because I got that bottom of that flag there. I wonder why I didn't put price lines on it. $11.22 is next if it doesn't break. Comcast. Where's my earnings watch list? Tim and Jim. 25th, okay. Ooh, BBIW, Bath and Beyond. Real nice run. We got CrowdStrike this week. I've got the earnings watch list here, so I hope you went back and watched the Washboardjim's video. Dang, 148. We're about to resistance, 674. Okay, now this is it. This is a double top, if I remember right. Now let's see if we get the puts. The 599 at 101. 101, 109, 110. This is a 5. This is a little bit more riskier. There's a little bit more risk to this one. I think I have 3 white soldiers here. I might, if I don't break out real soon, I'm going to get out of it. I mean down. Ah. Drop. In the name of love, before you break my heart. We were at 110. There we are, 110. Drop. I want you to drop. You better get that grading pen out and sharpen that lead, my friend, because Jimmy ain't stopping. Jimmy's not stopping. NVIDIA? Ah, damn you. Okay, here's 110. The 21 could hold. Here, use your brain, dick. Use your brain. $619. Hey, Nancy, before you give me that Valium and coffee, vodka, would you warm the water up in the tea kettle for me, baby? You say you're worried. You're at the shredder. Why are you at the shredder? Oh, Trump. Okay. I understand. We gotta hide how we made them millions, right? All that secret documentation that we got from the government, we need to hide that too. Tesla, watch Tesla here with a double bottom. Okay, here we go. 112. I'm out. Out of the puts. 113. We could probably drop more, folks. Look at it. Here I go again. I left 50 bucks on the table. That's a bunch of bullshit. But I hit the 21, so I got out of the trade, right? Jim, I'm new to trading, and what is a moving average? Well, you've got a slow moving average and you got a fast moving average. The EMAs, they're a fast moving average, great for scalping and day trading. And then you got the SMA, which is more of a 20-day average of a stock at a slower pace, so it's a slower indicator. I use both of them on my charting because I like to have a little mix. So once we breached that 21 in my support level, I had two confirmations to get out of this trade, and we're at 119. I mean, this sucker can go all the way back down here and do a double bottom off the 200 because we've done it before. You see the bodies of the candle. So this thing could easily drop down and be a $1.40, $1.50 in the put. And I just left 120 bucks on the table because I'm trying to explain my strategy. So how's that grab you? Say real good. Randy, say it. So that grabs my butt cheeks just perfect. Although I haven't been to Diddy's place. Damn, Randy. Who are you on the phone with? Your secret admirer? Look at that. Yeah, I was told to hold NVIDIA, and I said, I ain't holding this shit no more. My theory on NVIDIA is correct. Fat cats do not like this market cap. They do not want to see NVIDIA at $3.5 trillion. So this just might be a market cap trade. If it gets under 3 trillion again, it might be a strong buy. And then it bounces up around a couple times and finally breaks it. Hey, Oprah. So is it true that you slept with Diddy? If you did, I want you out of my house tonight. Tesla's pulling back to the first support. Let's look at the options. Wall Street's going to start getting nervous. There it is. Okay. Tesla. Watch Tesla. Watch the Tesla. I'm on a roll. We're going into this week. We're going to scalp it. We're going to scalp it at the 265 or the 360. I'll do them both. I'll do the 360. Okay. $360 this week. Now I've got two other supports down here waiting for it to pull back. Now this is a stock that I'm going to say small positions to go long. The 360 at 595. November the 29th at strike 360 at 5.95. Okay, we're at 570. Now this thing can drop more, huh? Damn. Okay, you can't go much further. I'm going to grab another one. That's all I'm going to do with this one. Let me get this support level here. 525. Okay, we went below support. Better not fuck up. Okay. Uh-oh. 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 And get two more when I think it's ready. But $5.95. They call me Flipper, Flipper. It's faster than lightning over the sea. It's trading for me. SPY double bottom. I've got Tesla right now. They call me Flipper. We're at 605. And our average is 560. I'm on a roll, man. I'm on a roll. I will not stop until I get the crown of the best trader in town. Not even Hillary can stop me. They call me Flipper. Let's break the 9. Just use this YouTube. We're just going to use the moving average. You see this resistance right here, this pullback? You see the 21? I have 2 confirmations to get out of that trade. Now I can get out right now and be up a couple $100. But I'm bullish on Tesla. $645, $655.
Mala, is it a dance party with Beyonce? Beyonce, Beyonce, Beyonce. Dance party with Beyonce. Dance party with Beyonce. Dance party with Beyonce. Dance party with Beyonce. Beyonce, 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 Beyonce. Party with Beyonce. Beyonce, Beyonce, Beyonce. Dance party with Beyonce. Dance party with Beyonce. Dance party with Beyonce. Dance party with Beyonce. 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 Party with Beyonce. Beyonce. Carry on. Dance party with Beyonce. Beyonce. 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 Dance party with Beyonce. Dance party with Beyonce.
Dance party with Beyonce.
That's all,
folks. That's how you do it. $6.50, baby. Yes. 650. I think we can. I got it. Oh, I forgot I was got to go do something today. I might be gone. I got a little bit of carpet I have to shampoo. Here we go for a double bottom. Now, this one candle here is a little lower than this, so we really have to stay right here right now for it to be bullish. The market's not too happy right now, I don't think. Are you in the trade, Randy? Not yet. Good. This is the double bottom. If you want to take the trade, put a tight stop. But I've got two supports still. I think we could pull back, and really for the long, to go long, we want it to drop a little bit more. But right now, these are at 510. The 360 strike. 10-4. Snake, breakout, pullback. All we're waiting for now is the boom. Dance party with Beyonce. I got to look at the SPY too. What is this? November the 29th. 510. Dance party with Beyonce. Dance party with Beyonce. I just love that song, man. The Oh Mama, whatever he says in there, it's just like, I can hear that thing over and over and over again. Just the sound. I'll tell you what part of that I like. Oh.
Mala, is it a dance party with Beyonce? Beyonce, Beyonce, Beyonce.
That.
Dance party with Beyonce.
That whatever they're saying there. I love that. It's so cool. I mean,
Beyonce. Dance party with Beyonce.
I'm trying to figure out what he's saying, what they're saying. In my.
Beyonce. Dance party with Beyonce.
Whatever it is, it's excellent. It's perfect. We want to break the 9. Uh-oh. Randy? Make sure your pants are zipped. Ooh, my. 1, 2, 3. We broke it. Now we need to go much higher. My. 580. Oh, 595. Break the 21. You see where the resistance is, right? We got a double top, so we're going to try to break past the double top. Then I got to pee. I don't know what just happened. What the heck happened right there? Remove. My. Oh, you sunk. Uh-oh. $6. Munich, Paris, everybody talked about what music talk about? What was I gonna do? I'm gonna draw a line. I gotta pee, I can't think straight. We're at 6:05. Oh yeah. Oh yeah. Buy it support, sell it resistance. 625. $6.25. Elon Musk, this guy is delusional. I don't think the government understands what we're going to do here. We're going to fire that dumbass Garland, that's for sure. We're at resistance. We need to break it. This is like, I could be trading anything, I think, today. I don't know. I think SPX can pull back. We got some good earnings coming out tomorrow. A lot of apparel, brick and mortar. Macy's had an issue with, Macy's is in big trouble. They found a huge mistake in their accounting. Target's in trouble. Let's see what Target's doing today. There are people, I did a video on Target. You know how I feel about it, but fat cats, they don't care. It's a buy and a hold right now at this price, especially going into Christmas. Be sure to put stops. Good night. Bitcoin, big. I'm watching it. I'm watching. Watch Spy. Man, I got to pee bad, and I'm going to trade the Spy. I got to pee. No. I'm going to keep wearing Zach's watch. I can't believe Zach Morris gave me this watch. Him and I's had some hard love with each other, and it was kind of him to give me this watch. Anybody my whole life, I mean. The most expensive gift I've ever received. Okay, we're getting ready to watch the Spy here. Let's look at the SPX. I haven't traded it yet. Okay, but now I'm gonna go. Well, let me take my. I don't want to leave, but I gotta pee. Okay, here we go. The 6,000 strike. I got it 610, the 6,000 strike. Oak. $8.10. Woo! Now take it. 850. $8.80. $9. 9.10. Did it. See you later. Spies at Tesla, still at my entry. Okay, well, I can't stop winning. Blondie. Target hit my target. Target hit my target. Woo! Jimmy said it. Target hit my target. Give me a grade for poetry, for punism. Target hit my target. It's such a pretty day today. Look at the pun. Listen to my pun. Such a pretty world today. Look at the sunshine. I'm dreaming of a white Christmas. Baba has a gap filled. We're squeezing on SPX. Squeezing. And I think I'm gonna go do some stuff here afternoon. I've had a good day. I don't want to ruin this.
Dance party with Beyonce. Dance party with Beyonce. Dance party with Beyonce.
Dance party with Beyonce. Dance party with Beyonce. Mr. Drop to 350. See the squeeze happening? Jimmy called the squeeze on the SPX. And I'm still in Tesla. I'm gonna go make my lunch and I'll be right back.
Markets and have public, they're all reasonable, both with regard to tariffs and tax bill. And I think what everybody's missing about the tariffs,
Won't you just shut up?
Produce revenue, it can be a pay for.
These idiots, man. They're talking about the wrong stuff. It makes me just feel like they're dumber than shit. A lot of these people on Wall Street. They'd rather see America get ripped off and us, small taxpayers, pay the buck for their expenditures. And we're going to put a stop to it. They better start to understand it. I heard, what, $50 million went to in the green energy budget, 50 million went to the Palestine protest. 50 million.
Having a big budget deficit tends to strengthen the dollar, strangely, because all those flows coming in, investing in our bonds are required. So if we were able to reduce the budget deficit, Besson is saying he wants 3%, which could be possible if we have strong economic growth, then that should lower the trade deficit. Financial flows equal real flows. That's an economic rule.
This guy's
so
an idiot.
If you lower the budget deficit and have a lower trade deficit, you tend to weaken the dollar, strangely.
Who is this?
So that would be positive, but I would just not worry about the dollar. It's kind of just going to do whatever it's going to do.
Yeah, fair enough. Okay. Kind of the point I've been trying to drive home. It seems like targeting the dollar for policy is just like the wrong way to go about it. All right, so then what's the timeline here, Jay, for seeing if these things come to fruition? How frothy is the market on a valuation basis? Does it give us a lot of time? Does it give us runway? Can we be patient at 30 times earnings in a lot of these big tech companies?
Well, overall, we do think the market's fairly valued. And one thing...
When I hear somebody say deficits are a good thing, they're talking... they need smacked around a little bit. They don't know what it's like to be debt-free.
From 35 to 21. And so that really raises the long-term growth rate of the market because it's driven by reinvestment, after-tax reinvestment rates. And so fair value, in all things being equal, is probably between 19 and 20. But here we have the biggest thing on the deregulation side is a deregulation of the merger market. And that's enormous and is likely to drive higher valuations as you get small caps taken out by larger caps. It's also great for all the investment banks. So I think that the fact that we have a pro-growth administration for the first time in 4 years justifies a higher multiple, even if rates don't drop as low as we're expecting them to into the 350 range. So we're not nervous about valuation. You know, we did say at the end of this, about 2 or 3 weeks ago that we're likely to stall. Usually we rally. So I wouldn't be too clever and try to trade this market too much. I would stay long, at least through the normal seasonality, which is the February-March timeframe.
Okay. All right. I like the take on the macro, the stock specifics as well on the sector side with the bank so firm, the Russell up. Small caps are jamming right now. Regionals are up 3.5%. KRE going ballistic. So does that mean that we can attribute some of this morning's move to bonds? Do bond yields need to stay down to facilitate the frothiest version of this rally, Jay?
Yeah, we do think so. From a theoretical perspective, if you're going to justify a 22 multiple, you really should have a 350 10-year. If the 10-year goes to infinity, that's not just bad for fixed income. That's our main focus is preferred stocks, but also regular stocks. So if you're a bond bear, then you shouldn't be a stock bull. But we think that this pessimism about the Trump administration's spending proclivities is totally misplaced, as evidenced by the Treasury Secretary pick. Rates are way too high. They're very, very high relative to the rest of the world. We're 120 basis points higher than Canadian 10-year.
Exactly.
Makes sense. The rest of the world is very weak. Should drag our rates down. We're seeing that today. But that is, to get a broad-based rally other than tech, you definitely need at least contained rates, probably below 4%.
Okay. Jay, the only catch is if this other stuff is pro-growth, then how come yields go down? I mean, are we really going to
Tesla?
have like a massive
Let me look at it.
disinflation move from here if things go right according to the bullish plan for the
Yes.
economy?
Well, to be fair, we did recognize that the growth prospects increased with the Republican sweep. And higher growth, particularly M&A, does generate demand for capital. A lot of times there's leverage buyouts. So we raised our target really to more of a range, like 350 to 4s.
I'm gonna clean this chart up. Oh, I gotta keep the suit. Yes. Okay, we got an inverse head and shoulders here on Tesla with a fallen wedge. And we're getting ready to squeeze right now, Randy. Whoops, that didn't look too good there. We'll know here in a minute. It's squeezing right now. Better do something here real fast. We got a double bottom, and I think that would be where you'd want to put your stop. Right now. Has to hold here. Has to hold here. Come on now. don't know, Randy. It's not. That buy has to stay above that line. And it didn't do it. More patience. Could add one. That'd keep me really, really nice. I should have added one anyway, but break it. Another squeeze. I'm going to boil up my soup and I'll be right back. And I want to see this thing at the 63 at 352.32. Yeah, heck, if I'd added that, I'd been good. So people on YouTube, as I was talking about this trade, I had a double bottom here. So I'm using the bodies of the candle. Now, for this thing to become very bearish, a body would have to be totally under that trend line. So you're really, you don't know what it's going to do yet. But if one of these candles created a whole body under it, I would start to worry. But right now, I'm not that worried until that happens. I got one at 510. Could have added it 435. And I'd have two of them now. I'd be up if I did that. Come on, Randy. Let's give it some love. You probably added. We're at 5. Back to even.
Ourselves and how we treat the planet. Can we make
wanna make love to you.
I don't want you to be no slave. I don't want you to work all day. I don't want you to sail blue.
We hit the 63. That's all I wanted to do. Way that you barely walk. Crying shame, yeah. 354, 27.
I just wanna make love to you.
Wanna make love to you. Whoa! Fog hat. I just want to make love to you.
And then we saw shares lower. I don't think that let that be indicative of like how strong of TJX's report really was. Same with Rossler's. Both names like were not exciting that week. I think that nothing would give you any signs of caution into Burlington's report. We've been in a really healthy uptrend. We hear the consumers trying to find good deals. Sure, right?
I had a letter of intent by Magnificent to start trading Tesla again. Damn! Randy! Woo! You were down on it, weren't you? Jimmy said, stay in. Went from down, woo! Congratulations. The hardest thing to do, and it is the hardest thing to do, and I proved it over and over and over with a few exceptions, that I hardly ever sell at a loss. When I'm down, I'd stat on a couple, and boom. Why? The key is trade good stocks. I'm gonna go make me a cup of coffee.
Burlington Coat Factory with $600, you are literally a king.
Yeah, you really are. Well, it goes a long way. All right. Nice. That one kind of looks like the Dick's one a little bit, but maybe even better. I mean, definitely better, right? Because it kind of had that base, formed the support, bounced, ripped, broke out. Definitely more momentum, at least. Reliability on the chart. Thanks. Good context, right? Appreciate that. Rick Duquette, Jenny Horn. Nice look. The retail earnings coming up this week. Right now, it's the Russell's game. We'll come back from market meetup, talk about the small caps.
We don't want to lose money.
All-time high. It's been a long time. Russell.
That's the tar. That's the problem.
Moment, and it's here. Also a little.
I got tired of losing money.
Nasdaq and Bitcoin.
Because I'd be down just a little bit and say,
markets are in pretty good shape.
I got to get out, man. And then watch it turn around on me every single time. Turn around on me they turn around almost every 30 and I was in and out of it twice. Okay. Now, I traded that first time and I did real good on Tesla. Then I was asked, are you going to trade it again? And I said, what the heck? Yeah. I can do that a lot with a lot of these stocks because they always want to pull back. Everything's flagging out. Fog hat. Okay. George.
You know, I think right now too, the Russell 2000 obviously is picking up quite a bit because of the rate sensitivity. But you know, like I said, you know, earlier today, I think right now we're probably going to move into a valuation framework in the marketplace, just because, you know, looking at some of the commodity space, Bitcoin obviously, and MicroStrategy, everyone's really talking about this whole group of stocks, Coinbase, Palantir, and so, you know, that, you know, speaks to potentially some short-term, maybe, you know, pullbacks in those names, and of course valuations come to the forefront. So this is just how my approach right now, but nonetheless, I think the rates market was ready to move down, and we're seeing that in the 10-year closer to 4.25 now.
Yeah, bingo. With the Russell, the regionals really going berserk here. That's a pretty strong vote of confidence, I think, by the market, Nick, that we're going to get some pro-growth.
Well, it's definitely pro-growth. I think it's exactly the right point on interest rates as well. So you think, you know, this sort of equity strong policies, or, you know, trying to be equity strong policies, coupled with you know, potentially a more lenient Fed. I think it would be awfully hard if you just take an unbiased point of view to look at how the Fed has brought the inflation rate down and what they've done to say they did a horrible job. Now, however that goes, right? You can say they didn't act quick enough and they caused part of the problem, like, all the way back. But to where we've got to this point,
Tesla at 560.
It was a complete failure, right? Right. If they become more lenient, I think now we're going to start getting into sort of
go higher.
George was mentioning, how inflationary are some of these new policies, and if we couple that with what a more lenient Fed would do, I don't know. That could be, but nobody's thinking about that in Thanksgiving week, right? 2024. We're thinking about, hey, this is strong for equities in the near term, and rates are willing to come down, so it looks good. I think what's really interesting to me, kind of sentiment-wise throughout the overall market, good on the Russell, got it. Seeing this happen without NVIDIA rallying, seeing this happen without some of the big tech really taking out, the rest of the market participating, I think is really good for breadth, and it's really good for sort of the overall market, you know, breadth dynamic, just because of the fact that we've been so supported by a few names for so long. Like, if we can participate upside, you know, new highs without those, that's pretty positive.
Equal weight this morning, up 1.1% versus the S&P's 40 bips. So, I mean, there it is right there. That's the rub, basically. Breadth in the market. 9 of 11 sectors higher with tech down, and we're cruising without it. Good thoughts, guys. Thanks, George Tillis, for your help this morning. Thanks, Nick. Caroline hosting Trading 360 from New York. Then Nick for Fast Market. I'll see you. Market on close, 2 p.m. Have a good session. Have fun.
We're having fun. Bitcoin sell off.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Do 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 do.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
I'm gonna go make me a cup of coffee.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Do 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 do. Do 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 do. SMCI is doing good again.
Good morning, happy Monday. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Caroline Woods, in for Nicole Petalides, live from the floor of the New York Stock Exchange. Coming up on today's show, in our 360 Spotlight, we'll look at the recent move higher we've seen in Bitcoin. It's a big one, and of course in MicroStrategy, though both are showing some weakness so far today to kick off the week. Today's disruptor is Palantir after a couple of bullish analyst calls on the stock. And in our panel, we'll look at the payment space as the Consumer Financial Protection Bureau could be expanding oversight on digital pay. Before we get to all of that, let's take a quick look at the markets.
I've been chit and chat with Stormy Daniels for a week now. Me talking to a movie star. Stormy Daniels. She wants me to be her fan, and I said I can't do that. I got to be friends first. Friends with benefits. Stormy Daniels said yes to me. Nobody tried to take her away from me either. I'll hunt you down. You hear me? Don't take her away from me.
But fill us in on Macy's, this delay, and these accounting issues.
Yeah, and Caroline, I'm glad you mentioned off-session lows because I was seeing things a bit worse this morning. So 2% to the downside feels, 2.3% we'll call it, feels actually like a bit of a relief. But shares dropped, obviously, as the company did postpone their quarterly earnings and did say that they're right now completing an investigation into an employee who made an inaccurate accounting entry. And so what we saw from this report is that a single Macy's employee intentionally made erroneous accounting accrual entries to hide approximately 132 to 154 million worth of cumulative delivery expenses from the fourth quarter of 2021 through their fiscal quarter that ended November 2nd, 2024. The company did say in this press release, but during that period, Macy's recognized about $4.4 billion of delivery expenses. The company also added that there was no indication that the erroneous accounting entries had any impact at actually on their cash as well as their management or vendor payments, which I think is a win. But the employee held responsible for tracking small
We're at
delivery expenses is no longer with the
560.
company, they said, and the investigation has not really shown me any involvement
Here we go, Randy.
of another employee, so it does seem.
Can we break it? Break it. Give me $6, please. Remove one. Snake. Wedge. A 1, 2, 3. A 1, 2, 3 to the VWAP. Jingle bells, jingle bells. Santa laid an egg. Frosty the snowman had a very shiny nose. 585 is 590. Randy, we're going 590. Oh, 595. Blanket. If blanket. Tell it to break it. $6. I don't mess around. 605. Well, I'll tell you, little fella. 610. There's $100. 620. I'm going to email message here to Elon. Thank you. Oh, darn, which one? Which is the real Elon? I'm so confused. E-L-O-N-E. That's him. 206 million followers. That's the one with the rocket. Hike. That looks wicked. Stunning image of Jupiter taken by NASA's Juno spacecraft. $5.95. We need you to break. $6. Caroline, what's up?
Is quite simply that yield is back. I know we've come off, money or Fed funds rates and money market yields from these 5.5 levels down, and we're approaching 4.5. But there's still yield relative to what you saw in a large part of the global financial crisis through to pandemic cycle, where rates were ostensibly zero, and in large parts of the world they were negative. So finally we have income back in fixed income. And the certainty that comes with that income is really great for investors, particularly investors looking at balanced portfolios, some sort of combination of risky and risk-free assets. And with that level of yield just means if there is a crisis or if there is a material downshift in growth or a material uptick in unemployment, the Fed has a lot of buffer to cut rates. And so that's where you can really get the negative correlation to the risky aspect of your portfolio.
What happened to Netflix?
Capital price appreciation.
6:05. Go get my water. 6:10. I got to stick it. We're going to break the VWAP and go to the 200, and I'm out. Maybe go higher even. But if you're in this trade, double top at the VWAP. Double top at the VWAP. VWAP bucks. $200 SMA.
Globally, a should game in, Bila.
Dix. Oh, this was the one I was going to watch. Dix got earnings coming out this week. Dix. Now, they had great earnings last time, if I remember right. Man, if Elon buys MSNBC, I just sent a message to him. I told him I could run it. I'm so tired of this hateful messaging on TV. We've got to stop
so
it.
Everything near about that's kind of the level that the bulls would be looking to break out above. Notice as well, RSI on the move to the upside, breaking above the 50 midline, actually looking like we may invalidate this longer term red downward trend line too. But remember, so now we can consider we have that trend line. If you were to draw it across the high point though, this high point right here, that gives us quite a bit more room and it lines up more closely with our purple 252-day EMA. So that's more near like 176. So it kind of depends on how you're looking at this. this would be the, there's a couple different ways you could judge how severe this downtrend is. Nevertheless, if we were to zoom in a little bit here, you can see, for starters, 146, our light blue line here. This was the price Joel mentioned there. And notice as well, like I said, notable resistance, confluence right there. If we were to move to the upside, 163, low points, high points, high points, and then a gap right here at our pink line near 172 that matches up with our +1 standard deviation channel. So 163, 172, and 155 to the upside are the notable points. To the downside, the lows, and then our -1 channel, 112. That would be quite a slide there. That's just where the math comes in for this study. Not saying it's going to go there. That's one way to watch to the downside.
Okay, all right, a little bit longer term, I always like to take a look at the median price target. That has come down quite a bit, but that's at 192.50 now, so some considerable upside according to Wall Street analysts as well. All right, Joel, your next trade is Dell, a company reporting earnings this week. Shares are basically flat right now, but it's had a really impressive move higher this month, up about 16.6%, up 89% year to date, and you maintain bullishness on Dell?
I do. I think, we know some of the narrative around the chip stocks. We know NVIDIA and those names, but I think to talk those names, you must talk about Dell as well. I think Dell is definitely in that conversation, and this is just another opportunity to play that optimism. So I'm definitely a bull here. In Dell, I'm looking at a price target right around that 140-ish, if you will, 141 and change. I think there's optimism to maybe break out. We're currently trading about 144 right now at the moment, and we've had a 52-week high of 179. I think there's definitely some potential breakout to maybe get to a little above that 151-ish level. So I'm going to be watching for an opportunity here to definitely play Dell to the upside, looking for ideally a 140 and change entry if we can get there.
Okay, we'll keep an eye on that level. As you can see, trading just below 144 right now. Rick, what do you see in the chart for Dell ahead of earnings?
Some notable spikes as we look back on the price activity in this name. You can see for starters here, we topped out near 180, just shy of 180, 179.70. Rather steep downward sloping trend line. Here was another sharp spike to the downside that took us below this support level. This was an old low point here and there. We had a bit of a drawdown after we breached it, but then once we made our way back up, it once again became supportive. And notice there was this red candle here that we had on earnings, but we quickly righted the ship. It looked like we found some support, not only at our purple 252-day EMA, but also our old blue trend line that was broken. These trend lines can become, resistance and then subsequently support after they're breached, and vice versa. Now the prevailing trend is more this upward sloping white channel here, our two parallel trend lines trending upward here. We've retaken our moving averages, yellow 21-day, orange 63-day, tested them again here, and tested our shorter term yellow one here. Once again, we've held true for the most part here. 130 green line, frequent stopping point for price. Once again, you can see there's gaps and highs and so forth here. But if we were to keep moving upward, and it looks like that could happen, we're breaking above our downward sloping red trend line on RSI. Not quite making new relative highs yet, but that could happen if we get a boost from earnings. But 150 is one area to watch. You can see this old set of highs back here. Now if we were to zoom in and look a little bit more closely, you can see 140.32. That was the level Joel mentioned, our blue line right here. Then we've got the red line matching up with our trend line near 150, +1 standard deviation near 161. To the downside, trend line and 21-day EMA near about 134. Green line, support line 130. Those are some near-term areas to watch.
Okay, so we'll keep an eye on those. Joel, your final trade is Ulta Beauty, a name that was a huge COVID winner.
You are beauty.
Really pretty well up until
earlier
this year. Shares off about 27% year to date, although up about 6% today. Doesn't report earnings until early December, but talk to me about why you're bullish on Ulta Beauty.
Yeah.
I think this is a name that's going to rebound here. I know
Man, you're cute.
had some recent weakness. And yes, you're exactly right. I think it was one of the stocks that was a COVID winner. We saw a low,
Can I have a smooch
of about 318 and a recent low of about 331-ish or so just a few days ago. But we're seeing some optimism today. It's up over 6%. Trading right now 359. I think there's more optimism to come in a name like this. I want to get long though. on a bit of a pullback right around 344 so and change if we can get there. I mean, today, just looking at today's action, it doesn't look like that price is going to be revisited. But, we know how this market goes. We have some pullbacks, some price does fluctuate. So if we get back there, 344 would be an ideal place for me to possibly get long.
No.
If, we could
You
see
stay
those
above the
70s,
9.
Who knows, maybe even somewhere along the lines of that in the very near future. But this is a name I want in the portfolio because I do think that there's just some strength in a name like Ulta for consumers. And the consumer names have been very, very strong of recent times. I think that's going to continue in 2025.
Okay, yeah, retail is ripping today. Aside from Macy's, we're seeing really strength across the board. Rick, when you take a look at Ulta's chart, what stands out to you other than this 6%?
Right now, you're at a pivot point.
Kind of like our first chart, there was a notable gap that was the start of a prevailing downtrend. You can see here that we had this big gap downward. We opened below our 252-day exponential moving average, our purple line there, and we really never recovered above it again so far. Now you can see we've got this white dashed line here. We tested it again rather recently, couldn't quite crack it here. 390 horizontal level here, this pink line, kind of an important area. It looked like to me repeated high and low points. Also basically the point of our volume profile point of control as well here. So the area of heaviest trading could be a significant point to clear. We can also see our red line here, another post gap up low points, and then we had a more severe breakdown after breaching it. Now we're making our way back above that very level once again today after bottoming out at this green line 333, which represents the high points from back here. So you can kind of see why we keep track of these gap levels and these high and low levels, because they can frequently come back into play. RSI a little bit muddled right now, to be honest with you here, because on one hand we have our light green and pink trend lines. Those are kind of the broader themes here, but in the short term we have this green trend line that was broken pretty severely here across into the oversold area, but now our short-term red trend line has also been broken. So in terms of the near-term read, we are below the 50 midline, but not really a clear trend in play right now for the RSI. So to zoom in a little bit here, once again, 344, Joel's price he mentioned there, that's our blue line right here. We've also got our blue linear regression line that's been supportive. It seems like we've made a bit of a bounce there. This level right here, red line 358, that's the mark to hold above here. Ultimately, we'd want to clear this area between like 385 to 390. That's an important part to break above. 318, low point on the year, -1 channel, comes in near 274. So those would be some areas to watch to the downside.
Okay, so we'll watch those. Joel, before we go, just want to get your views on the overall market, because you're clearly bullish on these three names, Boeing, Ulta, and Dell, but you want a little bit of a pullback before actually buying. So what do you think about this overall market? Do you expect to see a pullback heading into year end, or is Santa Claus coming to town?
I definitely think that we're gonna see a bit of a rally. I think the bulls are very strong here, but as you know, it taken just a couple weeks back, looking at the election and how we just rallied aggressively. That was just the market movement was euphoric when we think about how aggressively we moved to the upside and how we're constantly seeing so much bullish momentum. I do anticipate a bit of a pullback, but I think it may come after the new year of a pullback of significance. But between now and end of year, I do think that we're just going to see price fluctuation.
God, I like this sticks.
Rally, because I don't think that this optimism is going to fade between now and end of calendar year here now.
I think Dick's is going to have a real good Christmas. And it's right now it's at a Head and Shoulders on 190 days, 1 hour, and we just hit resistance. So we're kind of at a resistance spot on Dick's, DKS. I really thought the last earnings were great. And we had a nice little breakout for 4 days, about a week. And then she pulled back. I particularly don't like that. And we've already had a huge breakout before earnings. So I don't like that either. I'd rather see it pulled back and then jump into trade. which had a breakout here today. Earnings are tomorrow night. Tesla's still at 590. I'm waiting for this sucker to break out. What's $7? Gosh, I wish I was younger. If I was 20 years younger, I'd be working for Elon. I don't care what I'd be doing, I'd be working for him. I'd guarantee I'd work. I'd guarantee he'd give me a job. I wouldn't leave him alone until finally said, "Damn it! Just hire this kid. Get him out of my hair. Put him up there in corporate office, sending us coffee. Just get him out of my hair." Ladies and gentlemen, announcement. We are about ready to orbit the 200 SMA. We are about ready to orbit the 200 SMA on the 1 minute time frame. Repeat. Lasers on. Scotty, Captain Kirk, we're about to orbit the 200 SMA. Jim, are you okay? Hey, Bobby. Bobby actually put something in here worthwhile. Let's give Bobby a hand. Thank you, Bobby. Thank you, Bobby. Retail traders were brought up this morning because of Bitcoin. And they're talking about Hood. Hood's had a real good run. This one here got a lot of shit because of retail traders. So it could be out of resistance. See that run on, and I think it was cheaper than $4, 13. I think it was a lot cheaper than that. South, yeah, it was around 7 here at the double bottom, triple bottom. Yeah, you had all-time highs. Wow. I'm telling you what, these early candlesticks. Wow. This is worth noting. Yeah. Hello? Yes, this is Richard Nixon. I was pulling up a chart on Hood, and I was looking at the yearly candlesticks. Now, bear with me. It took me a lot of effort to make a trip to China and become friends with China. Now, I've got this Biden administration in here screwing up all my relations that I had with Russia and China. Make sure that he gets impeached, just like what happened to me. And that Hillary, what she got away with, 30,000 hidden emails. Damn, I would have got life for that. But back to the Hood. When I was back in the Hood, HOOD, I realized on the yearly candlestick that there was a double top if I was looking at the body of the candle. So my options here, maybe we could have a good short. Something to think about. God darn, what are you doing? What trade are you in, kitty? I don't want you to be blowing your account up. You in calls or... Oh, shit. You need to message me when you're in trouble. Private message me for sure. I want you to private message me when you're in trouble. We can stop this. It does look like it could have broke out because it's kind of symmetrical flag. And I would have probably started it right here and called that a head and shoulders flag right there. Well, yeah. You got a double bottom right here. I can't believe how high Netflix is. I'm going to look at the SPY calls here. I got to go here pretty soon. go work a couple hours, shampoo and carpet. Back to 580. I want to email Elon and tell him I want to work for him before I die. Elon, will you let me work for you before I pass away? What doesn't respect anything? SPX didn't respect the 200 at all. It did in a way. I'll show you why. It came back and touched it. So that's some kind of, it's like slamming the door on your honey and then, oh, I forgot to kiss my wife goodbye. Jim's still at 570. You know what side of the street I'm on? Big John. Big Bad John. Oh, John, he was a big old boy. He stood about 6'5" and carried a toy. If you looked him square in the eye, he might just happen to knock you for a fly. Big John. Big Bad John. Well, John was a man of stood 7'5". He was the ugliest person that ever stood alive. Oh gosh, SPX. So Jimmy's going to look at SPX. What time is it? There stood one hell of a man. Big John. Big John. Big Bad John. So Jimmy decided to erase it all. He's going to put a clear button. Come on, drop you. Look at that. It's way too slow today. It looks to me like it wants to come back. Did we have a new high today? Oh my God. We had a new high today in the market. So you see where I have 586463? Hi. We've got an inverse head and shoulders, Randy. This is the second time it's come up and kissed the 200 now. Smoochy, smoochy. He's still in his Tesla at 550. $6,000 strikes are at 280, 270. Put your money where your mouth is, James. I will. Just for that. Get ready. 1, 2, 3. Here we go. Big John. Big Bad John.
Hey Jim, which ones are you looking at?
He's watching his stocks. He's getting real close. Where's my double? I can't find my double thing. Where's it at? Spy. Oh, fuck. Where's it at? Don't tell me I erased it. Well, we gotta fix. Okay, get ready. Okay, draw a trend line from right here. $59.80. That's the middle of a pivot, so that's a gap. I'm going to move this, get away from the 6,000s. I'll stay there. SPX. November the 25th. And I gotta go pretty soon. I might wait till 12. Strike 6,000. Oh, Jimbo. Jimbo, Jimbo, what do you know, Leo? Well, I missed that. If I see the word inflation one more time today, I mean, never mind. I had the two words mixed up. Tariffs. Okay, I'm about ready to... Dang, I'm missing good chances here. I should have already been in this trade. There's 280. Gosh, darn it. One more pullback, please. Okay.
that they're going to slow the rate cuts. I don't know that they're going to reverse policy back into tightening. And so I think you're going to see the credit card interest rates on a lag sort of ameliorate.
Okay, Stephen, Francis proves a good point there too, that this could potentially also change under a Trump administration, given their kind of pro-growth, less regulatory, less regulation, kind of at least the headlines that we're seeing. But also, how does crypto play into this and potential oversight there?
Yeah, you're right. I mean, the new administration is similar to Trump. The first go-round was after less, a later touch generally in regulation. So, the CFPB is probably...
Okay, here's my chance.
Leadership probably scaled back in terms of the oversight they have of the industry generally. But, when it comes to crypto, yeah, there's been an embrace of it by the incoming administration. And I think there's probably more of that. Of course, these companies already... Square in particular has definitely
2.25.
transaction medium.
That's what I wanted.
So we do need some guardrails. I think many people agree about that. I think the price rise recently has indicated that there's
we can drop some more
likelihood of becoming mainstream and as a currency medium. So we'll see what how that impacts particularly the private companies, but I think they'll certainly be more attuned to using it, and particularly if there's guardrails. Again, there's some regulatory guardrails that come into place.
Okay, Francis, only 30 seconds left, but want to give you a final thought as it relates to the new administration or crypto potentially.
We just ate 5 seconds up.
Yeah, I'm excited to see what occurs under the new administration. As far as Bitcoin, I mean, Trump, I think, made an offhand comment that he was possibly thinking about paying off the national debt with Bitcoin. Bitcoin's market cap is, I guess, around 180 billion, so that's probably, the math doesn't quite work there. But I'm just very excited to see we are ushering in a digital era. That is very clear. The BRICS, alliance
215
with that, and to the extent that the American regulatory agencies try to block the.
Now we got a Head and Shoulders.
I do think that America lags behind in that scenario, and I do think that Trump and Elon being very pro-crypto while against central bank digital currencies, as far as I've heard Trump say, it's just going to be interesting to see how it plays out. As far as Bitcoin, it's probably just technically overbought. Probably cannot technically sustain that angle. And so you're going to probably see a pullback, even if you have a longer trajectory of growth.
Okay. Francis, thank you so much for sharing your insights. Stephen,
Francis,
appreciate yours as well. Really appreciate
how dare
it.
you?
And thank you for joining us on Trading 360. Download the free Schwab Network app available in the Apple App Store. And tune in 24/7 on schwabnetwork.com. I'll see you back here at 2 p.m. Eastern for the watch.
Join me, Oliver Rennick, alongside Schwab Network's experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking. The checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row.
I don't know about this trade.
You get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop.
Bobby, I'm gonna make you a
bonds, money
independent
market funds, and more. Get more with Schwab Bank
voter.
Checking, the checking account built for investors.
Bobby,
Cut the cord on the way you get market news.
do you believe that tampons should be in men's restrooms?
Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m.
Bobby.
Eastern. Available anytime, anywhere, on any device for free.
God darn it.
Only on the Schwab Network.
Bobby. Do you think the transsexuals should play women's sports? Biological men? Bobby? I'm down $20.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading
Bobby,
platforms.
have you ever thought about getting
The
a
Schwab Trade Desk, our team of
breast
passionate
implant?
traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
I'm gonna add right here. God. We've got a 1, 2, 3. Can Bobby hear me?
Traders through and through.
And foremost, I say, like, don't just sort of set it and forget it trading wise this week. I think
There we
there's a
go.
lot of volatility catalysts. You've got some geopolitical stuff maybe that's taken a little bit of a backseat so far. Some really interesting stuff going on with the new elected government and the appointees there. I know we're going to talk a lot about that in a bit. I think the most interesting thing is how much information is packed into Wednesday. What would normally be sort of a spread out couple of days, you get PCE, there's a consumer confidence tomorrow. That Wednesday sort of economic data slate looks like the full Thanksgiving menu packed into the 7:30 a.m. Central Time hour. So I think that's really the focal point of the week. Coupled that with the fact that people are off and it's going to be a little bit more thinly staffed. All that should play into kind of your calculus here in terms of how you think about trading this week. I'm a little skeptical when markets start the week so hot and fall comes in. You kind of take a little bit of that contrarian view sometimes, but if those numbers come out, solid, particularly PCE, and inflation continues that glide path down, I think there's a chance for some upside here. Historically, this is a positive week, and there's a little bit of a feel-good kind of momentum into Thanksgiving, and that shortened day. Thursday off is important. Remember, Friday is not a holiday; it's a shortened day as well. So everything, I think the theme here is just compressed lots of information into a short period of time.
Yeah, and you also mentioned the fact that all that stuff is before the open on Wednesday too, from like a calendar catalyst list.
Yep.
And so if some of that stuff comes in relatively benign, it's totally feasible to see people shutting it down pretty early on Wednesday. A couple things I want to explore more. You mentioned a lot of the market moves, and ironically, S&P is kind of paying a quiet day today, Nick. But you got a massive move lower in gold.
Yep.
You got a massive move lower in silver. Crude oil is pretty weak now after starting the day, or at least before the open on futures. We're looking at it was relatively quiet. It was around 71. Now it's 69. The dollar, big move, and it's actually off its lows by quite a margin. Bitcoin, big move. So, if anything, if you just look at stocks or just look at the S&P 500, you're thinking, oh, it's a quiet day, I'm not missing anything. But under the surface, some of the other assets, there's a lot going on. But I want to explore some before we get into some of the catalysts, before we get into more of the movers specifically. Kevin and I were on this show last week, and you hit on something that we really weren't emphasizing. I want to explore
SPX, come on, baby.
You said something along the line of like a good risk manager has an exit strategy. And essentially how our conversation went is, we spend all this time stressing about entry, what trade to put on, what stock to look at, bullish, bearish, what. But the money's made and lost actually in the management of those positions.
Do you think Michelle Obama is Michael?
When you decide, hey, this isn't what I thought was going to happen, I'm going to take a loss here, preventing bigger losses, things like that. So from a risk management perspective, but also from, an investor and a trader yourself, explore and go through that particular aspect of it. Obviously, there's not a one-size-fits-all answer to this, but kind of that idea of, hey, the trade isn't just putting it on.
Right. Well, that's definitely the case. And I think that I said you don't want to set it and forget it. I think a lot of people just assume, especially with some of the moves we've seen, if you're a newer investor, you look at things like crypto, you look at things like energies to some extent. You look at things like, the big 7 tech trade, right? The NVIDIA rally to start the year. It's like, well, you get caught in that momentum, and we always sort of say momentum is your friend, but when it turns on a dime, right, you need to have that plan. Look at today's market as an example, right? Like you said, S&P up a bit, it's come in a little bit from the highs.
Yeah, a lot of it.
A month ago, you wouldn't have had that new high, probably, without a big rally in NVIDIA, right? NVIDIA's down 3% today. So having a sort of mindset,
oh, right.
If you're going to be an index trader,
who is this guy?
If you're going to be an individual equity trader, where are your entry and exit points? Like you said, exit being, I think, the key point. And if you're not going to really be as concerned about the true exit, you can trade risk defined. And we
We're
always
$2.
Entry points here because everything we typically bring to the table, and you'll see this obviously in the examples.
That's
later.
part of the plan too, I think is important, which is if you're using a risk-defined option strategy and say your plan is, I'm going to let this play itself out. That can be the plan too. It's just thinking about it even. Sometimes I feel like there's a rush to, get in the trade and there was no thinking about it beforehand. Absolutely. And it's like when you're kind of hung out to dry like that, that's when, some things can really spiral. Good and bad, but some lessons aren't really necessarily learned that way. They're usually learned in You mentioned NVIDIA. You mentioned kind of the dichotomy between performance. And we saw this late last week as well, which is we're actually starting to see a broadening of the rally. Losing the generals. So you're losing the Microsofts, you're losing the NVIDIAs, you're losing the Teslas at the moment. It's still a recipe for green. But for a day where you've got 70% of the NASDAQ 100 and 75% of the S&P 500, this is pretty weak, this rally. We were up 35 points higher than this, I think, in the S&Ps this morning. Quite a bit higher. We're closer to, or maybe even over 21K in the NASDAQ futures. So I look at this and I see it as almost perplexing, Nick. How do you see it? Because I see a lot of mixed messages today.
You do?
I think the Russell... it plays into what people are now expecting from some of the appointees from incoming President Trump. So that definitely was the leader out of the gate. I think you see small cap performance.
Wall Street, these guys, they sound like they're getting ready for a shakeup. I've never seen anything like it. There is definitely a big disconnect between the private sector and Wall Street, a big one, a huge one. But I don't know if that's much of a disconnect between my liberal friends and Wall Street. They used to always constantly complain about Wall Street. They don't say a word anymore. None of them. They don't see how that $7 trillion that was printed affected our economy. They don't see the inflation. They're musicians. They have to travel and pay gas. You can't tell me they don't see it. They were affected big time when the government shut down all the bars and stuff. But did they complain? No, I did. Because I wanted to work. I think I just got screwed here. Damn it. It just tells you, get them first trades out of the way and don't even trade for the rest of the day. Glad I only got a couple because this would have killed me. And I'm going to buy a bunch right now, so get ready. I've got a trend line right here, the 1, 2, 3 that I counted on. I'm going to add them on. Randy? $130. Let's see how fucked I am here. No, I sold Tesla. I mean, come on. Damn it. Okay, let's pray. 1, 2, 3. I'm still in these. $1.25. It got down to 110. Probably got down lower than that. I just noticed 110. Damn it. Well, I'm still going to just give it another second here. Right now I'm bearish. But we got this previous high right here. It's just not that, it's real close. So just give it a few more seconds here. In fact, I should add another 10. And this would really be sweet. It'd be 22 contracts. I'm going to add 10 more. This is big risk right here. Till I get $1. Here we are. Take it. Take it. Very risky. Give it to me. That $1 would have been nice. Do. for years, I've heard CNBC talk always government, 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 money, money, spending, spending, spending. Now, you listen to them, they're all concerned about the tariffs. And then they're talking about Doge, D-O-G-E, coming in and cleaning house. Our government spends so much money that it's out of control. I mean, it's really out of control. And the fuel they burn. We're starting to reverse here. After what I heard this morning about some of that clean energy money going to the protest and people getting paid to protest, I'm pissed. My tax money shouldn't go to that. 50 million. $80,000 desk. I mean, it's just two things. That guy getting on TV this morning arguing about deficits are good. Are you nuts? This economy would be really running along real good if we didn't have to spend so much money. That's my opinion. Do. I'm going to be leaving pretty soon. There's a little kind of a wedge. Oh, here we go. I'm down on these stocks. A couple $100. May as well go get this stuff out of the way. See what kind of shoe I'm wearing today. I'll put my Echoes. Today's sponsor is Echoes. These are the Buy 'em shoes. $170. Kind of a funky looking shoe, but it and I'll be switching to my Brooks Glycerin. Watch me get a couple thousand out of this trade. We got them earnings tomorrow. Dick's. There's my dollar. Got the dollar. Now I'm loaded. I got a pretty good price on them now. Yeah. But getting almost there. We're at 140, 145. $150. Gap did fill. Tesla. 150. Yep, it sure did. Right at my first support. See it? 346.60 is what I called in the video.
Beyonce, 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 party with Beyonce, 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 dance party with Beyonce, dance party with Beyonce.
So somewhere, as long as we stay above this here flag, we had a nice little flag right here that broke out, so trade alert, same situation at the stock is at the mark. And I'm gonna type in 9 EMA on weekly.
And that's daily, Jimmy, not the
I
weekly.
don't know where that support was, or that alert was called out at, which was the 9 here on the weekly time frame. Let's take this, that's the daily, or on the daily, what? Oh, shit, that's the daily. So let's change that. Nine EMA daily. Much better. That'll be my strong buy right around 337, 336 area. Now I'm going to take this to the 20 minute, or let's take it to the 4 hour.
20 minute.
Yeah, definitely back here on this triple top, quad top breakout. That's solid support. That 346 area, that's definitely solid. So if it does pull back there and then reaches up and breaks that 362.24 this week, we'll start shooting up to newer highs, and I'd start looking at the trade a little different. But if we don't hold this here bottom support at 335.93, we could easily pull back and hit this 63 and then bounce right up and break that 63. Now I like to do this.
He likes to do this. Watch. Ah.
Extend that to the right.
That's a good trick, Jim.
So somewhere, as long as we stay above this here flag, we had a nice little flag right here that broke out, so it could easily pull back and hit that 340 and then bounce back up and try to break that 362.24 and go long. Now I've got a price target on this into 2025 for 100% gain right around 750. That's long. And I'm going to show you something here on the yearly time frame. To do that, on the yearly candlestick, we'll have to break that 414.50 area. So that if we break the 384.18, we can easily jump to these next two wicks. One being right there, and the other being right there. Right around that 414.50 area, and then long 500. You know, we'll do it in increments of 20, 30, 40, 50, all the way up to 750 into the 2025. But there'll have to be a good couple catalysts to back that up. Hopefully we can cut regulations, get this environment back on track. I mean, what Biden and Harris have done to our environment is disgusting. It's all these wars have caused more pollution. They're flying their freaking planes everywhere. It's just a joke. It's a money grab for their rich friends.
Jim, you've been on a rant lately. How the hell did that come in there? I'm pissed. I'm an environmentalist. Damn liberals and their bombs.
Well, we've got a 1, 2, 3, and just thinking about it. But I sold some of them contracts at 150 because I had a lot. So I got to try to get the rest of them out of here. 22 contracts is a lot of contracts. At $1.35. And it's actually less than that. Let me do the math. More like $1.25. A lot less than that, $1.15. About ready to get on out of here. I'm gonna get these carpets done before winter kicks in. Bounce. Might take a loss on this in here. Just I've sold a lot of them, so I'm not hurting. I mean, I want to see if I put that hood chart on the. Okay, and just got one of my alerts just hit. Oh, well. Okay, what was that? Tesla marked below 346.60. What the? Okay. George!
13%, as well as cash, which is now around $1.6 billion, down 46%. So I think what's happened here for Best Buy is the business is slowing. And again, with a slowing revenue base and maybe same-store sales not necessarily keeping up with declining sales and not cutting expenses fast enough, this company has actually been buying back shares, I would say, not necessarily aggressively, but mildly, I mean, like I said, the free float of shares is down about 16 or so percent compared to where it was just 2 years ago. Cash is down quite a bit, but their dividend has remained robust as well, which is around $3.74 for about 56 of their total earnings payout. So it's been a generous company for shareholders per se. Right? The questions is what else do they have going?
Well, I'm gonna go do my thing.
Not necessarily as a business. I mean, the business is sound. They're facing some challenging environments in sales, particularly appliance numbers, which are down because obviously existing home sales and people aren't moving has really cut into the appliance and business and water heaters and all those kinds of things that people usually update when they move or purchase homes. But overall, I think Best Buy's numbers really reflect some very favorable shareholder policies, including dividends and share buybacks.
That's really good context, George. And I was just looking at sort of how analysts project performance into the future. The one thing, hearing you talk about the business slowing, it doesn't seem like analysts are fully there. Pricing in kind of into perpetuity, 2% same-store sales growth going out, as well as about 2% revenue growth. So if we are going to see some sort of material downtrend in revenue and same-store sales, the market doesn't have that priced in yet either. So that could be a key risk factor as time goes on. But George, appreciate the setup as you break that down and go through some of those shareholder-friendly impacts as well. Bringing back in Mr. Nick Theodorakis here to discuss trading this name from an example standpoint. Nick, another earnings name, a lot of volatility actually being priced in here. I'm seeing a market maker move that's flashing over $7. So certainly one that we wouldn't be surprised to see a pretty big percentage on after we get these numbers.
Yeah, another one that's in the upper sort of 75th volatility percentile for the current option stats. George mentioned dividend yield. That's what I was going to hit. A 4% dividend yield, 94-cent quarterly dividend there. So definitely shareholder friendly, and with that lower float, I think that's an interesting thing to keep an eye on in addition to the earnings. I think the bar on this one is set pretty low, right? And that's sort of what's reflected here in my trade. They've talked about flat earnings. They've talked about declining sales. And George just covered all that, but I think that bar is set pretty low. If there's a stock buyback talk, if there's something, I think the surprise here could be to the upside, given the fact there's a lot of negativity already priced in, and that's the thought in this example trade. So another bit of a broken wing look here. Front week again, theme continues. Volatility is very elevated going into this quarter's earnings for the stocks we're talking about today, over the 75th percentile in terms of the historical option vol there. Iron Condor is the official name here, but you'll notice the center strike is the same, so we kind of call it an iron butterfly, right, or an unbalanced butterfly.
Iron butterfly.
So the 94 call and 94 put. So it was a little bit higher. It was right at 94 when we built this example trade. So
anybody know that? That's a band.
Continued to come in, and Best Buy has as well a little bit. So the pricing has changed slightly. But the concept here is selling the at-the-money strike and then buying protection around that to varying degrees. So I went $3 wide on the call side. I bought the 94 call and then a bit wider, $6 wide on the put side, and bought the 88 puts. So you've got double the risk to the downside. You could structure this any way you want. Just like we were saying, you could flip this around if you think the risk is to the downside. The point here is you're adjusting your credit with the width of the strike where you want to take the risk. So you'll notice that there's only one break-even point in this trade. That's to the downside. Because the credit is wider than that spread on the upside, there is no break-even to the upside. So your profit goes down, your max gain goes down if we have a blowout rally to the upside, but there's no loss there. You can flip that around, do the same thing on the downside. When it does on the downside, though, even though you're taking in $355 in this case, you still have $245 in risk, because that spread is double the width on the downside. So you're a $6 wide spread for $245. The difference there is the risk.
Yeah, Kevin Hanks always describes this as giving the trade a little bit of attitude. Yeah. And what I always describe it is you're taking that base iron condor, let's say, you shove the two strikes together. That creates a situation where the more right you are in projecting where the stock ends up, the more you stand to make. But by changing the width of the spreads, you can create a risk profile that eliminates risk in one direction altogether. And so I like the thought process here.
Man, I nailed the SPY on my supports.
And I think it's a good lesson for those who are maybe looking at this style of trading for the first time. It's like, hey, we're used to looking at things a particularly standard way, but the adjustments you make and the attitude you give it can then further
SPY has to break the 63 now.
Something that is what you want in the end.
Yeah, you know, the stock has come along. You can't bring in technical analysis. You bring in fundamental analysis. What's really happened here? The stock had a pretty big move.
We don't talk about fundamentals.
But it has underperformed the S&P.
So I'll catch you all later.
Season. If there's a little bit of a tailwind here, you know, that was my thought in building.
Enjoy.
The exact opposite thought. Hey, everybody's going to go buy everything on Amazon and Best Buy is never going to have another sale. You could flip this around, still take advantage of that higher volatility by selling it, and then structure your trade to put the risk where you want it. So it's a pretty flexible strategy because there's 4 legs involved.
Very well said. Break even near 90 and a half. Risk on the trade is around $250 depending on where it's filled, and no upside risk theoretically, which I think is kind of exciting for many, especially around earnings where just so much can happen in terms of volatility. Appreciate Nick Theodorakis taking the time and joining me throughout the hour. Coming up next is Next Gen. We'll be right back.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Hi there.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, to kick off this shortened week, of course, we are seeing green across the 4 major averages. A pretty quiet day, all things considered, when you look at the NASDAQ and S&P, but actually the Russell and Dow being the somewhat of the standouts of the session here, making more significant moves to the upside after the 4 did see collectively a week-to-date gain last week.
Yeah, it looks like a sleepy session on the surface, Jenny, but kind of a big intraday turnaround. A lot of this is led by weakness in some of the big tech stocks. Think NVIDIA, think Microsoft, CrowdStrike, Netflix, Tesla. Those names all red on the session. But look at that move intraday. We started with a lot of excitement today. We saw this actually when we gapped open to the upside last night. It held until about an hour into the trading session and things turned south. So we'll see if things can stabilize here. They all are off the lows intraday. And we actually do have the NASDAQ in green territory again after spending some time in red territory. So we'll see where things go from here. But, you know, it's not necessarily going to be a super macro-driven show because it never is.
I know, and I will say that the macro, I feel like story comes later this week. I believe like Wednesdays when we get some more economic data points, and then it is Thanksgiving. So we have a relatively shortened week here, of course, to break down coverage on. We'll kick things off, as always, with the upvote and downvote. We'll be charting and trading our upvoted names. And for FOMO today, we're talking Procter & Gamble. And it's moving to the upside on a note out of D.A. Davidson highlighting some of the company's strength, actually, specifically overseas, which is interesting for a staple that continues to outperform. We'll also be discussing more on the Alphabet antitrust situation as the DOJ and Alphabet battle heated up last week. And we'll close things out with under 30 today, looking at quantum computing, which is making a nice 25% plus move to the upside. And we'll tell you more why with George Schillis later on.
Yeah, I'm looking forward to the discussions here, Jenny, when we look at some of these names, particularly the ones that have made some big moves this year. Procter & Gamble, we talked about this on futures today. I was shocked to see how strong of a performer that had been this year. So it's not just big tech making moves. It's consumer staples. It's names like Walmart. Walmart looks like it invented AI when you look at that chart if you took the name off of it. So many things going on under the surface. Looking forward to the discussion with Jeff around Alphabet as well. But let's do upvote, downvote, not endorsements, not recommendations. Starting here with Square or Block as it's now known, Jenny. What's the latest? Because this is another one of these names under the surface. I know over the long term it's struggled, but it has been a monster performer over the last month.
I have been humbled by looking at some of these names that aren't like, you know, Tesla, Palantir, and NVIDIA as of late, because Block, I mean, talk about the quiet recovery, or maybe not quiet depending on what you pay attention to, but the quiet recovery in the fintech names. I mean, look at this name. We touched lows of around $55 back at this point in August, early August, and we've risen so substantially since then, about 65.5% since those lows. So now trading just below, or we peaked out around 94, but now we're trading just around $91 a share, marking a 26% move to the upside just this month. BMO today did actually downgrade shares though to market perform from outperform. Price target of $100. That was actually raised from 94. They said they do see tougher. It's very not tougher to see some gross profit upside just given current levels. With shares up about 22% from that third quarter report, this year's beat and raise cycle they said will prove difficult to sustain into 2025 and 2026. They also do see the potential risk to Cash App gross profit growth expectations, and they believe the Rule of 40 target for 2026 does imply a relatively high bar per profit. So they also worry their gross profit upside will become increasingly challenging to deliver without lifting their headcount capacity. All things considered, what you need to know is the concern over gross profit upside from this point. And I will say that Square, Block, whatever you want to call it, it's been on a really nice run though.
You know, it really has, and BMO joins BNP Paribas as a name that's, or a analyst shop that's downgraded Block in like the last week or so. BNP downloaded to neutral, price target of 88 back on the 20th. So basically it seems that analysts are kind of coming to terms with like, hey, this has been a big rally in this stock. We're not saying outright, sell it, but maybe pare back some of those expectations. At some point, you've priced in some of this upside. Is even with the BMO Capital, downgrade, $100 price target still implies some upside. So we'll see what happens. Next one is Tesla. Price targets are playing catch up in this stock, and for good reason. I mean, this is, if there wasn't Nvidia's or SMCI's the last month or some of these moves that you've seen in Bitcoin, I mean, Tesla might be like the lead story on every financial services show, because look at that move. And we're not talking about some little micro cap company. We're talking about Tesla, mega cap Mag 7 Tesla.
I know, mega cap Mag 7 Tesla has made a near 40% move this month. So that is ridiculous. And I will say, if you wanted to discuss the election winners and losers, you'd have to put them in the winners camp. I mean, on a clear, not even an argument at this point. We've risen now 152% from lows made back in April, 138.8 a share. So now trading at as high as 361.93. We have pulled back about 3.5%. Actually did make a new high earlier today, 52-week high, but has pulled back about 3.5% since that level, trading lower today. A plethora of news on Tesla, as there always is. UBS was fundraising its price target to 226 from 197 with a sell rating. And I mean, what in the world? 226, so obviously below where we're currently trading, but they said, given the fact that we've spiked 40% since the election, adding over $350 million worth of market cap, they think that some policy proposals could have emerged that actually favor Tesla. But UBS feels that the removal of EV consumer tax credits is not an absolute positive for U.S. EV all collectively, as well as Tesla demand. They also did mention that if credits go away, further pricing action may be needed, and UBS continues to believe that FSD is improving, but the product is not ready for wide-scale robotaxi deployment, and argues that Tesla stock is mostly driven by momentum. Also, Tesla did have some separate news. They've reached this conditional settlement from 2020, which accused Rivian of poaching its employees in order to steal some of their EV trade secrets. Tesla did not disclose the specifics about the agreement in the court filing, but did tell a California judge it seeks the dismissal of this case by December 24th upon satisfactory completion of the terms. So, guessing the two settled outside of court, obviously, but not really huge market-moving news. I do think that it at least puts a headwind or a lawsuit behind them, but I think it's always interesting to me when you see a sell rating, while they acknowledge all of the various things that actually make this name, in many bulls' opinions, a tailwind.
For basically the last couple of years, the Tesla breakdown in analysts, and it fluctuates, a couple percentage here or there, but it's basically about 40% of them say to buy it, about 30% of them say, yeah, we're not sure, we're going to play it neutral. And then there's the convicted few that are like in this 20 to 30% camp that have just consistently said, hey, we're sellers of Tesla. And a lot of them come down to, they look at this as a car company and say, it's not worth as much as it trades for. And we've made that argument plenty of times, especially after the stock makes a rally like this. But if you think of it as an AI stock and an autonomous driving stock, you can start to talk yourself into some of these things. So the one thing that I think is guaranteed with Tesla is that you're going to have disagreement with this stock, and that disagreement creates volatility. That volatility creates interest, and that interest creates trading volumes. One of the most active stocks of any. Tesla, Nvidia, that is like the market these days.
It is, and that's I think why we talk about it so much, frankly. I mean, it's one of those names that's like, why is it always in the headlines? It always has headlines to discuss. So frankly, from a news cycle standpoint, I don't think we're ever too mad about that, especially from even just like personal interest.
Well, then talk too, it's got a lightning rod super genius as the CEO, where it's like he's got these rabid fans, and then there's some where, I mean, we'll just say whatever you can say the opposite of a fan is. That's what the others are.
The skeptics, the major skeptics.
Oh, I would say skeptic is too soft. I would say people who just outright
full-fledged haters. Yeah, that's true. And I mean, one other name has a price target as high as $400 a share. I believe that's Wedbush, and then low is Gordon Johnson, who has $24.86 a share, still hanging on to that street low price target, which I guess conviction I can respect, but at this point you would have been unfortunate if you held on to a 24. I mean that's just ridiculous. But nonetheless, shifting gears here, Macy's also lowered today after postponing its quarterly earnings due to an investigation into an employee who made inaccurate accounting entries. So a single Macy's employee intentionally made erroneous accounting accrual entries to hide approximately 132 to 154 million worth of cumulative delivery expenses from the fourth quarter of 2021 through the fiscal year that just ran through November of this past year. So during that period, Macy's recognized about 4.4 billion worth of delivery expenses. The company did add there was no indication of the accounting entries having any impact on their cash management or vendor payments, and they believe the employee had the responsibility for just tracking small package delivery expenses, but no longer works at the company, and they believed that they had not seen involvement from any other employees. So those results were supposed to be released this Tuesday. They're now going to be released December 11th as they do look to complete these internal investigations. Macy's did share preliminary numbers, however, that showed net sales dropped 2.4%, actually slightly beating what the street had been expecting. Same-store sales also decreased 2.4% in line with expectations, while same-store sales at their first 50 locations, which is a small fleet of stores that they're trying to test these new concepts out, actually did rise 1.9%. That marked a third consecutive quarter of growth at those specific locations. Luxury brands, though, Bloomingdale's as well as Bluemercury also did notch some positive comp sales. Net income was not disclosed. We'll get that number back in December. So this is like I think, an employee and a public nightmare whenever you have basically, I mean, we're talking 132 to 154 million dollars. That is no small error by one employee.
Yeah, I almost see this whole story, given that they added some preliminary numbers alongside that. This is an early release of earnings. Essentially, is what you got today. You got a 3% move in response to that, and we'll see what happens. But there's numbers to it. It's unlike SMCI, where it's like there's still really no questions answered. I think both uncertainty and certainty were provided on the same day when it came to Macy's. So time will tell, but it looks like an early release of earnings to me, alongside some perhaps accounting mishaps that are going to need to get straightened out, but there's numbers to them already. Let's talk Target. This was the mover last week. Trying to erase that from the memories of traders as it makes a measly 4.5% jump here today. But when you were down over 20%, 4.5% just not going to cut it.
It's not. And I will say, yeah, gosh, Target, if you want to talk a company of strength, we talked Tesla, and recently weakness. Unfortunately, we look at Target because this was our big mover to the downside last week, one of the worst performers in the S&P 500. Today, attempting to claw back some of those losses, and ironically, of our 4 upvote and downvote stocks, this is our only name that's right now trending towards the upside. But not enough to claw back its losses. We're down 13% this month. We've pulled back 28% from highs made earlier this year. And we have risen at least off of lows by now about 8.6%, lows just made last week. And actually, encouragingly so, we're talking a positive note today. Oppenheimer moving Target back to its top pick status while keeping an outperform rating on shares with a $165 price target. The firm did remove Target from that top pick ranking as part of their apparel clearance inventory observations. Now with the reset out of the way, they do see a very compelling risk and reward scenario for the Target shares. They also say that shares appear to be at or near the bottom of investor sentiment, and they believe that Target is actually capable of achieving its now 4-quarter guidance, which has been lowered from where even the company set forth 3 months ago. So the story with Target has been, I think, Target-specific woes, not retail woes, as we talked pretty heavily last week, but at least encouraging to see one optimistic kick off this week, as Target needs some revival here.
Yeah, it does, and I've talked to a few different kind of experts on the retail space in the last week doing the futures show and some of those discussions. It seems to be almost a consensus at this point that Target's not just struggling, it's just outright losing market share to companies like Walmart at the moment, and they're not alone. And it's just more of a function of price point and a value-conscious consumer who's doing more and more online. And if you didn't really like Walmart before, maybe you took the time to browse the online website and you found that you can get a lot of the same things there. Well, once you've made that transition, there's really nothing pulling you back to somewhere else unless it's cheaper. And right now, Target's just not cheaper.
Exactly. And I think it was even really interesting the way that we got the exact opposite tone from Target management on its earnings call. The way that we heard discretionary isn't coming back. Well, basically Walmart said the opposite. I mean, all this
can make sense, right? It's your discretionary purchasing went to Walmart.
Exactly. And even Walmart mentioned that, because then I went back to Walmart's earnings and I saw they said, hey, a huge portion of our growth for this discretionary spend was from this mid to higher income consumers. That just goes to speak to exactly where Target is losing that market share. So I think great point. We've discussed, though, Target exhaustively. We'll give that name a break for today. We'll be diving into more of our tech-focused names, looking at the pretty nice recovery in both Block as well as Tesla. We'll also be talking through some example trades. Stick around. Next Gen Investing. We'll be right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time for our Chart Master segment. So joining us today is Rick Ducat, our Chart Master today and always, to break down the technicals for us of Block as well as Tesla. I have to say Block is actually maybe the more amazing of the two to me, because I haven't seen this name in a while and seen this really substantial recovery since really we touched lows in the last previous earnings call. We've been in a really nice uptrend ever since, Rick.
Yeah, I mean, the thing that sticks out to me right away is just kind of the general cup and handle type shape here. We had a notable high right here. We kind of trended lower for a while, gradually bottomed out, and then started to rally here. You can see this area is where we formed the handle type shape. We hit our old resistance, we fell backward, and then we had a big push to the upside. So it did kind of complete that shape that we would be looking for with this pattern. Just something to point out here. Not going to play out every time, but a good thing to keep an eye out for, in your trading here. But, generally speaking, Trend line broken, downward trend line in yellow there, upward channel in blue, transition into a very narrow, very steep upward channel in white. We're far beyond our moving averages, and look at the notable volume that we've seen for so many days during this rather prolonged rally. We're up about 66 or so percent from this low point here, backing off a little bit off of the 52-week highs that we hit on Friday.
So now, as far as the momentum of this recent trend, I mean, yeah, we're continuing to, I know, see some pullback today, but a pretty nice month thus far. What is RSI indicating to you, though, however?
Overall, still in an uptrend here, above the 50 midline, but not really exactly what you would want to see as you would be bullish in this name here, because it's suggesting there's a little bit of a slowdown. We can see RSI has this kind of triangular type pattern here, bouncing in and out of the overbought area here, but it's looking like perhaps we are making a bit of a push to the downside today, because we are out of the overbought area. We're validating this little kind of trend line I just quickly drew here, but look at price is also kind of falling out of our trend line, out of our very steep upward sloping white trend line there. So all in all, not really the greatest thing here. We also saw bearish divergence. Price made new closing highs. RSI was trending downward here. So kind of a mismatch between momentum and price. However, at the same time, you can see that when we do have these very rapid rallies to the upside, it's often because like we have a bull flag or bull pennant type situation forming. So the question for you as a trader is this another of these bullish consolidation patterns here, or is this the start of a slowdown and a pullback?
That is a very good question, and I guess hopefully not what the bulls want to see, because this name has been an underperformer for the better part of the last several years. I know now up about 44% over the last 12 months, but definitely not immune to these swings of volatility to the downside. So now, as far as some levels we are watching here in block, what are you keeping on your radar into what I can imagine is a pretty pivotal holiday season for the company?
Pivotal is an interesting word because it seems like we're at a pivotal price point here. The +3 standard deviation channel. We take our blue linear regression line, our solid line there, our line of best fit, +1, +2, eventually +3 standard deviations from that line. So that comes in right near 9160. If we were to break to the upside once more, purple line here, +4 standard deviation channel, 9871. To the downside, we had an old resistance level that became support and vice versa. You can see that was our cup and handle level that we had talked about earlier, near about 8750 or so. That would be a key supportive area to watch to the downside. Below that, +2 channel, yellow 21-day EMA, 8350 or so. And long-term look, real quick here, we can see that all the volume is here near the bottom on this 5-year chart. 6575 volume profile point of control, breaking above this 90 level. Looks like an important spot to keep an eye on. Next key point, 150. So could be an interesting ride.
Could be an interesting rise, right? I do think that this long-term chart really illustrates the entire story of block. This is one of those, unfortunately, pandemic winners that has yet to recapture that upside. But say you're a believer in that upside and you wanted to see this uptrend continue. Alex, walk us through trading this name with a more bullish take on things continuing to go to the upside.
Yeah, we are at that last kind of piece of the year in 2024. We hear all this time about Santa Claus rally. Who knows if that will happen or not? But say you're a believer in that and you think there could be some upside in block. Price target of the analyst we talked about was around 100. And so say you think we can get to 100 by the end of the year. I looked at a strategy that will benefit from that, buying a call vertical, the 95-100 in the January 3rd expiration. So this is just after the new year to kind of give us a proxy for like year end in this particular case. And so 95-100 with a 150 debit creates a risk reward of a little bit better than 1 to 2 here. So you're risking 150 with a chance to make 350 if it gets over that, with 96.50 being the break even. You need a move. So it's not the highest of probabilities, Jenny, because I think the stock's right now around 91. To get to 96.50 is obviously a $5, almost 5% rally, more than 5% rally. So you'll need some help from the market. But if you get that, you actually stand to make over twice the risk if you get all the way through 100. So a very bullish strategy, but risk defined in the event that it doesn't play out.
And some time here, and obviously we'll be watching to see where block continues to go, but about $9 in upside from where we're trading, and given the fact that we have some time, I can't believe we're already looking at 2025 expirations. We're at that time of year again where you start to go into shock when you see some of these dates on the platform. But to shift gears and look at Tesla, which has been objectively one of the most interesting names to look at post-election. So, Rick, a substantial move to the upside from lows, actually touched 52-week highs earlier today. We've pulled back about 3.7% since then, but walk us through this chart.
Yeah, what a ride. I mean, this is the kind of chart that you study for years to come, I feel like, because you can see that we had this persistent ceiling around 265 here, bottomed out down here near 138, gradually saw a series of higher lows here coupled with that ceiling, gives us more of an ascending triangle type shape here. So not really saying that meets all the specific criteria for that pattern, just saying that's the general trajectory. Higher lows, persistent horizontal resistance here. Then we had our big break to the upside here. Once again, kind of this bull flag, bull pennant type of situation here, where we had a push beyond our initial highs after we pulled back to a supportive level here. However, we can also see that we are kind of falling off. We hit some 52-week highs today, just barely, but we've backed off significantly. We're below yesterday's close. Once again, heavy momentum during these big pushes to the upside here, far above all our moving averages here. So once again, kind of wondering if we'll see a situation of slowing momentum as we move forward.
Yeah, that's true. So speaking of that momentum, what is RSI showing you today?
Yeah, so kind of trailing off here, and I don't really put too much stock into little cases of bearish divergence here, but it's kind of pronounced here. You can see that we had a pretty big drop off here in the pace of the gains here. We are no longer in the overbought area. We are kind of not able to make our way back into that key threshold of 70 here. And you can also see we've invalidated our upward sloping green trend line. So momentum definitely stalling a little bit here as we look into this name here, despite making these intraday highs today. So look for price to, if price does start to fall off, look for RSI to make new lows along with price. That would be another important sign to keep an eye on for if things start to break down.
So last but not least, here's as far as some price levels we are watching in Tesla. I know I mentioned the fact that price targets range between like a span of around like $380 from $24 roughly to $400. So a lot of different conviction. We're obviously much closer to the $400 level than we are to $24 a share. But what are you watching for support and resistance?
Sure. So once again, standard deviation channels, we can see that this move is less extreme than our last move here. We're between the +2 and +3 channels. So those are coming in at around 327 and 369 respectively. You can see here another area of interest is our recent low that we had after our gap up. So around 330. Then after that, our next set of lows matches up with our 21-day EMA, our yellow line there. So around 309, 310. So those are the areas of interest for the near term here. And if we were to look at our 5-year chart, once again, we can see that the rally recently has been quite strong here. It's taken us above a key point. 300 was an important point, it looked like to me here, our green line. Now we're approaching that 370 level that was marking our best close here before we had that kind of blow off rally into the upper or the low 400s there, but we had quite a bit of trouble closing above 370 after there. So that would be an interesting point to watch.
That would be an interesting point to watch, and I do think this is one of those trends that, again, important to zoom out, but actually making a pretty substantial move to the upside, obviously following that election hype. But now we'll think about trading this name and appreciate it, Rick Ducat, our chart master, for always bringing the technicals for us. But when trading Tesla, there's obviously been heightened interest in doing so. You can just see from the numbers based on options traded. But as far as some now example trades, walk us through the thinking here.
Yeah, similar thought process. Say you're thinking that Santa Claus rally and the momentum, everything else that makes Tesla exciting continues, and you see a test of 400 by the end of the year. I looked at a call butterfly spread, a traditional one in that same January 3rd expiration. Now, a couple things to consider with the butterfly. The expiration you select is really when you want the stock to get to your short strike. So in this case, really the theory would be it's going to get to 400. It's going to be right around the end of the year. It's going to end the year around 400. Now, with that, I looked at the 375, 400, 425. So it's $25 wide on both sides. Gives it a little bit of a window here of profitability between 377.5 and 422.5. All the way out to that expiration date. You're risking just $250. Now I know it's $250. I'm not saying it like that, but the max profit is $2,250. So relative to the max profit, it's relatively small. Now, the first thing that should stick out to you, Jenny, is whenever you see that, well, it's probably not super likely that you're going to be able to go 10x on your risk. You're going to need to be right. Now, what do you need to be right? You need to move to 400 and you need it to be there basically right at the expiration date. So don't look at this trade and say, oh, this risk reward is amazing. These trades, must be great for this reason. You need to be right. It's a low probability event, especially for a name like Tesla. It'd be like catching lightning in the bottle right at 400. But you do have a window of profitability that's almost $50 wide, that if it's just somewhere in there by the end of the year into that first week of 2025, this has a chance to make money. So it's beautiful to see that big 10x profit, but don't set that as your expectation because you'll be disappointed.
I was going to say the max profit, max loss looks pretty good here, but yeah, the importance of obviously strike selection and giving you that spread. Also highly customizable. So if you had not maybe a strong of conviction to the upside, you would update the strikes accordingly. But we will leave it there for our Chartmaster segment. Now coming up next, it's time to look at Procter & Gamble, a name that looks like quite the winner on the year and might surprise you. Of course, the maker of all of the good household items. We'll discuss more why the analyst community is continuing to favor this name coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl?
Schwab, a modern approach to wealth management.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network. Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time for FOMO, and today we are discussing a name that we don't frequently discuss for FOMO, but the chart has surprised us all. That's Procter & Gamble, which is making a pretty decent move to the upside today, but also just continuing to further its really nice momentum to the upside. So here to tell us now more on what the street is thinking, the analyst community is giving more and more conviction to this name, is Caroline Woods, senior markets correspondent for the network. So Caroline, walk us through this note today, because I will say Procter & Gamble is like one after my heart, because this is all of my favorite cleaning products, and I'm like, yeah, gosh, you cannot trade down for this stuff. It's worth paying name brand for.
Yeah, it's everything in my Target cart. Tide, laundry detergent, Bounty paper towels, Downy, Pampers. You know, I certainly spend a lot of money on Procter & Gamble products. And shares of Procter & Gamble are up more than 1% today. It was already having a really strong month of November, now up about 8% in November alone, very close to the highs. And it had its investor day last week. We saw some price target hikes following that, and now we're seeing an upgrade from D.A. Davidson, turning all out bullish following that investor day, up upgraded Procter & Gamble to buy from neutral with a price target of $209 a share. That's up from $160. And what's interesting is D.A. Davidson actually maintained its neutral rating and $160 price target heading into that investor day. So turning much more positive, this newfound bullishness is actually linked to China, and improved commentary around that area. Has greater confidence in the company after P&G said that its Singles Day Double 11 sales in China were as expected, and that its SK2 China sales, so kind of luxury skincare there, have been up year over year since the September LXP launch. So in turn, thinks that Procter & Gamble's organic sales can accelerate to 4 to 6% in the second half of fiscal 2025, and also raised its fiscal 2025 organic sales growth forecast to 3.5% from 3%, and its EPS view by 5 cents to $7.03 per share. So it's important to note, if you look back, for the quarter ended September 30th, Procter & Gamble reported a 15% revenue decline in China, and said sales from China made up 7% of P&G's total fiscal 2024 sales, which was down from years past. So I think this kind of anything upbeat out of China is turning at least this analyst more bullish. And I was going through the Investor Day presentation and looking for specifically for commentary and kind of talk about China. They're using the China's version of TikTok, Douyin, to really try to get products out there more. And as you know, Chinese consumers, shoppers are continuously shop on there. So they've been revamping their lineup of influencers, and actually have seen quite a bit of success in China around Pantene, just repackaging it, and also just in terms of the influencers on the app there. So shares of Procter & Gamble up about 1% right now up more than 20% year to date, about 21.5% year to date. So yes, not a likely FOMO candidate, but a pretty good one, I'd say.
Yeah, I'm glad you said that, Caroline, because I didn't want to be the one to say it. I never would have guessed that Procter & Gamble would be on this show for this particular segment, but here we are. Jenny and I talked about this morning on Futures, and the thing that I said is, I'll spare the viewers me reading through all these different brands, but I'd be hard-pressed to think that anyone doesn't have at least one of these in their home unless they're actively trying to avoid it. It's like that prevalent in terms of just products we use on a regular basis. Analysts largely, though, I see seem to be kind of as you'd expect a consumer staple, sort of in that hold buy camp. Did anything else stick out to you on that front?
Well, I also kind of compared it to some of its peers in the space as well, just in terms of, the consumer staple space as well. But yes, if you take a look at the breakdown for Procter & Gamble, as I said, shares up about 21% year to date, so it's already had an impressive run higher, but 60% of analysts are about there, a little more than 60%, still have a buy rating on shares, not a single sell rating for Procter & Gamble. The median price target, though, is $183. It's trading around $178, so only a few dollars upside from here, basically low single-digit upside from current levels. But and also I should note, D.A. Davidson, which was obviously in the hold camp until this upgrade, actually now has the street high price target at $209. Compare that to a Kimberly-Clark, which is up 14% year to date, and if you take a look, the majority of analysts in the hold camp for Kimberly-Clark, about 55% of analysts have a hold rating. Clorox, 64% have a hold rating. So, I think that it's important to note that despite this kind of impressive run higher, the fact that it remains one of the favorites on Wall Street, just in terms of the analyst breakdown, was notable to me. We'll just have to see if there's some more price target hikes, because it's getting very close to that median price target at this point, given the impressive run higher that we've seen, especially this month.
Yeah, and I think that's also a really good point that we're still slightly below that, but getting obviously very close to what the street thinks is like the full price of the next 12 months. And of course, we can see accommodations to the upside, but right now continuing to impress yet. And this is the thing that it seems like these products, you can add them to your cart and suddenly it ends up being way more than you think. But unfortunately, to me, this is all stuff that you absolutely need. I mean, hence its staple nature. So I will continue to pay. I will never trade down for anything but Tide. I'm a Tide loyalist. So for that reason, I'm excited to look at this name, but appreciate it, Caroline Woods, as always, for breaking it down for us, senior markets correspondent for the network. And so now we trade this name, and I will say, Never would have thought we'd be talking Procter & Gamble at all-time highs on, this point in the year. This name was at one point an underperformer, and it's been able to recover really nicely. So with this upside in mind, walk us through your thinking here.
Yeah, one thing I like to look at when it just comes broadly when assessing names is correlations. How correlated is it to other things like, let's say, the overall market or the bond market? What is it, an investment or a trade in this going to broadly give me exposure? One thing that I thought was interesting is Procter & Gamble really isn't that correlated over the last month to any of the major assets. So it's kind of a different style trade. It kind of gives you a different style of exposure. And so I looked at a bullish strategy here, Jenny, building on the move that we've seen in this stock, kind of that FOMO feeling that it's making a nice move to the upside. And I did a call diagonal spread in which we go out to that December monthly cycle and sell the 180 call. But we're really, the big part of this trade is the January 2025, the 17th to 175 call. So you're buying the January monthly 175 call and then selling against it the December monthly 180 call. Somewhere around a 425 debit would make risk of this trade at $425 a share. With this, though, really, Jenny, you're looking for kind of a grind higher, kind of in that traditional consumer staple fashion, in which that longer dated option is sort of acting a bit as a stock replacement almost for this strategy. And then by selling that 180 call, you're adding a time decay component, or another way of saying it's sort of an options premium component, kind of like a covered call. So in options trading circles, this is known as the poor man's covered call. There's clearly differences between owning a call option that's in the money and owning stock shares. Dividends are going to be different, voting rights, expiration date, for example. But it does give you similar theoretical upside exposure where if you move higher, you kind of have a defined profitability, but it does, of course, allow you some exposure to the upside. And most importantly, Jenny, a little bit more capital efficient. And if the stock does make a U-turn and decide to go lower, you can't lose more than the debit spent. Where, of course, if you bought the shares and you did a covered call, you're looking at something like $17,000, $18,000 for every one of those covered calls. Well, that's fully at risk if the stock were to, for whatever reason, go down to zero.
Yeah, I think that's also a good point here in the same, not with earnings imminent, but we'll be watching, obviously, if it catches a bit from the Santa Claus rally, because this name has been definitely not even needing a Santa Claus rally to be at all-time highs. So really impressive move to the upside in Procter & Gamble. But coming up next, it's time to look at Alphabet as we do continue to see this antitrust battle between Google versus the DOJ pick up. Although shares are in a pretty decent recovery to start off this week, up about 1.6%. after pulling back about 2% so far this month.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time to discuss the latest saga of Alphabet versus the DOJ, of course, threatening to really restructure Google Search, which is a tool that is very close to my own heart. So I am very much invested in this story, even though I think it's just the beginning of what's going to be a more long-term story we discuss here on the network. But to tell us more, I'd like to welcome in now Jeff Pierce, the Senior Manager of Derivatives Trading for Charles Schwab. So Jeff, walk us through the latest and greatest, because as we know, Alphabet pulled back pretty substantially last week, although recovering decently to start off this week, up about 1.7%.
Yeah, I think that the market's showing some stability around the news, and we're also seeing more and more, analysts and news articles kind of weigh in on their viewpoint for it. Of course, we saw Barron's took a kind of a rosier view of Alphabet's position this week, saying that Google is under attack, but Alphabet stock will still emerge a winner. Pete, of course, mentioned the DOJ's proposal for Google to divest their Chrome browser, among other solutions. They said the actions come as investors are already concerned about the rise of AI intelligence. But Alphabet, however, they said is more than up to the task of defending itself. While the future will be more complicated for the company, generative AI has the potential to add revenue as Gemini's AI tool ramps up and becomes more powerful. They also said the government's attempts to break up Alphabet apart could be an overhang, but that appears to be reflected in the stock. And that's really what we've seen since the news broke of them wanting to divest, the Chrome browser, looking at them to prevent exclusionary agreements from those third-party companies like Apple and Samsung. And then, of course, some of the search data that they want them to kind of give up, that search index that they'd like them to give to their rivals for relatively free. That seems to be weighing on the stock. Of course, we saw that last week, but I think that a lot of investors out there are looking at this and hoping that what's going to end up playing out is something more focused on the exclusive agreements, similar to that one with Apple, as opposed to them having to divest Chrome as the ultimate outcome.
Jeff, earlier this morning on the Futures program, I had an opportunity to speak with Logan Gillen from Jewel Financial. We spent a portion of that conversation talking about this. For those who missed, I think it's on some of the social channels too, so could be something to check out as sort of a shameless plug. But one of the things he stressed is sort of what you talked about, which is, maybe this doesn't play out the way that the initial thought was in some of those kind of initial solutions that were presented, but also kind of to Jenny's point, where this is going to take so long that it's at some point Alphabet's going to move for other reasons, and depending on how you feel about broadly the tech sector or some of these Magnificent Seven names, perhaps this sell-off presents opportunity. When you look at this, is there anything that suggests that this could be any sort of a short-term uncertainty, or is this going to be one of those long-term things where it's going to just kind of be clouding the stock until we forget about it?
Yeah, I mean, I think it depends on a few factors, but I certainly could see the side of this being an opportunity. I mean, some of the things you have to look at is, of course, Google has said they're going to appeal the monopoly ruling. The judge still has to decide on their remedies. Google has to, of course, supply their remedies as well. And then for the judges, that portion of the trial isn't expected to start until 2025. And not only that, but you now have a new White House coming in, and that kind of throws a wrench into this. How is the Trump White House going to, want this case resolved as opposed to the Biden one? And so to your point, the time is going to matter. In the meantime, we could see more volatility come out of Alphabet, certainly as we continue to watch them go down this road. There are, of course, a lot of other cases out there as well. We know that closing arguments on the DOJ versus Google for the ad tech is happening today. We've got more cases in Europe and around digital ads and so on. So certainly there's a lot of irons in the fire when it comes to the regulatory side of things for Google. This is one major case. How impactful the ruling is going to be is certainly up in the air, and the amount of time it's going to take to get there, I think, is still a question mark for most investors.
Yeah, I completely agree, especially because I do feel like it's gained a lot of traction over the last week or so. But I mean, this is going to be something we wait and discuss, I believe, in 2025, even through 2026. So I will say we've exhausted it so far. I think it's really interesting, but it's definitely going to be one we continue to look at. So appreciate it. Great insight, Jeff Pierce, Senior Manager of Derivatives Trading for Charles Schwab. Now coming up next, it's time to look at under 30. Today we are talking quantum computing, which is making a nice spike to the upside. So we'll be closing out out the show on a positive note after this name is on a tear today. We'll dive into it more with George Tillis coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab Investing Themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back to Next Gen Investing. It's time for Under 30, and today we're looking at a new one that's quantum computing. And joining us now for more on the name is George Tillis, Senior Markets Correspondent for the Schwab Network. George, stock ticker for those unaware, QUBT. Much smaller name than we typically look at, about an $800 market cap, $800 million market cap, I should say. I'm seeing employees at the end of last year, only 39 of them, George. This is a really up-and-coming company, but the performance has been monstrous when you look at the stock.
It has. I think the stock is up year-to-date over 700 or so %, and it's high, relative to a very small market capitalization. So if you just do the math, roughly speaking, this was a micro-cap company. I want to place it still as a micro-cap company below $1 billion, but nonetheless, I think, what's happening here is there's a lot of parallel technology companies and, of course, technologies that are moving in sympathy with blockchain. Bitcoin is the closest proxy, of course, and then artificial intelligence. Now, if you look at quantum computing, there's always been quantum computing elements to integration of technologies, but what they really do as a business is they produce software, and quantum computing as a whole is all about deciphering and, of course, creating data encryption models and using random generating algorithms to do so. But as you mentioned, this company itself is relatively small with 39 employees. I'm just going off the income statement that I saw based on last 4 quarters. They generated $400,000 in revenues last year, but one of the things about this particular company is that they burned through about $24 million of equity, and that came from share dilution. But irrespective of that, the stock is just moving to the upside because I think there's a lot going on with the parallel technologies, blockchain and artificial intelligence. Now the speculators are latching on to quantum computing names. But there is some, promise to this particular name. I can't speak to its competitors, but they do have, it seems to me, based on the news that's been reported, some partnership with Amazon Web Services to embark on a partner program for quantum computing, which will help with their random number generating technologies and algorithms. And the whole premise behind this as well is, not necessarily data encryption and of course, data deciphering, but it comes down to computing power and what you can do to actually minimize the needs for connecting computing power and reducing latency as well as the workloads for AI. And that's the whole premise behind this technology, just roughly speaking. But irrespective of that, the stock is extremely robust in terms of price action. I mean, it's just going parabolic. But it did trade quite a bit to the upside today. I think the highs were around $9.30, so it's drifted off quite a bit since the highs earlier today.
So I was seeing that, and I was curious about that as well, George, and also the fact that, I mean, this name has made such a run-up today, but where have we seen this name in the last year? Because you read about quantum computing just as like an emerging field, frankly, and you'd think it'd be tied to the hype around AI, but then you look at this chart's price, and it's like, where have we been for the last, 11 months?
Well, that's the thing. Obviously, you go back and look. I mean, from a daily standpoint, it started moving really aggressively in October. So, I can't say if that's a coincidental, movement alongside the other majors out there in artificial intelligence. This company did, like I said, secure some contracts with AWS. They also secured about $40 million in grant money to start building a facility in Tempe, Arizona. So, for what it's worth, that might have been part of that CHIPS Act that the Biden administration has provided many of the larger semiconductor names, and maybe there was a portion of that legislation, which I'm sure is extremely large, that legislation, to provide it to up-and-coming businesses, and maybe QUBT got a portion of that, smaller, startup, portion of that money. So. That's positive, obviously. I just can't value this company financially just because it's extremely speculative and effectively it's all financed by equity. Now, the trend is obviously positive, so I'm not going to go against any trend. If you try to short against a powerful trend, that's just flat out stupid, for lack of a better word. You're just running in front of a freight train. But looking at the price action of this stock, I mean, it can fall all the way to $4, which is a pretty substantial move from here on a percentage basis and still be in an uptrend. So I suggest, you have to consider speculative money when investing in a company like this. That's just, again, using responsible investing tactics. But you also have to think about dilution. Dilution is most likely going to come down the road because this company is burning through about $24 million in cash. It only has about $3 million in cash left on the balance sheet. So for what it's worth, I don't know very much about this technology, but I do know that trends are very powerful, and this has obviously been in one of those powerful trends.
George, I appreciate you going there, because I was going to ask you, but I'll just comment on it here as we say goodbye. A move like this is rare. For every one of these, I don't know how many don't perform from these $1 stocks, but going from $1 to $10 or almost $10 in a month doesn't happen that often. So just know that, this can teach you a lot of wrong lessons too, thinking that you can just catch lightning in the bottle by looking at these names. George Chillis, appreciated as always, senior markets correspondent for the Schwab Network. Jenny, we're stabilizing, but the red has drifted back into the NASDAQ.
It has, unfortunately. So NASDAQ looking unchanged to slightly negative. So we're seeing some mixed activity now. We'll be keeping the markets on our radar clearly, but that'll do it for Next Gen Investing. Coming up next, we have the watch list.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Good afternoon and welcome to the Watch List. I'm Caroline Woods in for Nicole Petalides. It's 2 p.m. here at the New York Stock Exchange. I'm live from the trading floor, and here's what's coming up on today's show. We're going to dive into the appointment of Scott Bessent as Treasury Secretary and the response we're seeing from Wall Street today. We'll cover Bitcoin and how the recent success of the cryptocurrency is fitting into recommendations for financial planning. And our panel is standing by to highlight gas prices around the holiday season and why holiday travel sentiment has changed from last year. Let's take a quick look at the markets before we get to all of that. We have 2 hours left in the trading day and the major averages all back in the green. Take a look at this. The Russell up about 2% right now, just hit a fresh all-time intraday high. Dow Jones, meanwhile, up about 417 points. That's almost 1%. Sherwin-Williams and Nike leading it higher, although NVIDIA is dragging it down a bit. Take a look. The NASDAQ essentially flat right now. We're seeing strength in Amazon and Google, but as I said, NVIDIA off 3.5%, seeing some weakness in some of the other Mag 7 names as well. And the S&P 500 is up about 0.3% right now. The S&P and NASDAQ actually were lower this afternoon, but back above the unchanged line right now. Let's take a look at dollar, gold, crude oil, and Bitcoin. I think Bitcoin is really what's in focus today. If you take a look, it's down about 5% right now, back below 96,000, now just above 95,000. So still very close to the highs, but paring some of those gains a bit. Crude oil, meanwhile, is down about 3.3%, trading below $69 a barrel. Gold lower as well, down by more than 3%, and the dollar is lower as well. All right, let's take a look at the bigger picture with Ted Thatcher. He's president of Bright Lake Wealth Management. He joins us now. Ted, thanks so much for joining the show.
Caroline, it's great to be with you. Thanks for having me.
All right, so I was just talking about the pretty impressive move that we're seeing, especially when it comes to the Dow and the Russell today, a continuation of last week's gains. What do you make of the momentum and the enthusiasm that we're seeing as we kick off a new week here on Wall Street?
I think it's really interesting because essentially we have all this capital post-election looking for higher and higher returns, right? We've seen the markets tick up. And I think it's really interesting is that we're seeing this dichotomy, not just in the equity markets, right? The Mag 7 has been cited again and again driving these returns, but we're also seeing the long-term credit markets demand higher interest as well. And I think that's because investors are assuming some inflation coming here and all these economic policies potentially having inflationary effects on top of the fiscal policy that we're seeing as well.
Okay, so in terms of where this market can go from here, given the fact that if you take a look, the S&P 500 is now up 25% year to date, what are your thoughts around how much room there is to run for the equity market?
Well, I think that the bump that we've seen, again, comes down to really two primary factors. What's happening in terms of the market anticipating new economic policy, and then second to that, what's happening with fiscal policy. Of course, the markets already seem to be pricing in what President-to-be Trump here has mentioned in terms of tax cuts, specifically around the corporate tax rate. He's promised rates around 15% coming down from where they sit today, over 20%. But in terms of where the market still has to run, I mean, it's hard to think that we're going to see lower financial market values in a lowering interest rate environment. And Jerome Powell, less reportedly, given the news around the election, but has promised essentially that we are moving into a lowering interest rate environment. Now, how quickly we get those cuts, we could talk about that, but ultimately, because of that, I think we do have room to run.
Well, the Fed has embarked on this lower interest rate, policy now with the Fed cuts that we've seen, but interestingly enough, we have seen this tick higher in the Treasury yield really since September. The 10-year yield is coming off a bit today. It's back below 4.3%, but overall, if you take a look at the chart, it's been on a path upward despite the fact that the Fed is cutting rates and is expected to potentially cut again in December. So what does that signal to you?
Well, I think that it signals that the market is assuming some rate of inflation. And so there's technical indicators that we could look at, and then we can look at the practical side as well. One of these technical indicators that I've had my eye on is essentially the spread between what the 10-year Treasury is paying, that risk-free rate that we always talk about, and the rate that we get on junk bonds as well as credit grade bonds. And that spread on the junk bonds is near a 17-year low, actually, and on credit bonds, a 26-year low. Again, telling me that I think the market's demanding a higher yield because it's going to assume some rate of inflation here. I think it might come because of the uncertainty around all the tariff I'll say syntax and notes that Trump has made, and ultimately trying to figure out how much of that we're actually going to get. So again, a technical indicator of that spread. Now, on the practical side, I think what average Americans were anticipating was maybe trying to get some relief in terms of housing, and we just aren't seeing it. The Fed started cutting back in September. Today, three-quarters of a percent now has been cut between then and today, despite across that same time frame, mortgage rates, again, sitting higher in that 7% range on a 30-year mortgage.
Okay, so what does all of this mean in terms of where you expect the Fed to go from here? Do you think that we'll see another rate cut come December? And then what about next year? Because that seems to be where a lot of the uncertainty is. And will that do the trick in terms of finally bringing mortgage rates down?
Sure. I think that ultimately Jerome Powell is still looking at the data point around unemployment. And we did see some softening in the jobs numbers last week. And so I do anticipate he continues this trend of interest rate decline. It just really it's going to end up coming down to how much poor economic data we get. And sometimes that's an interesting balance, right? Poorer economic data basically meaning we're going to get lower unemployment rates, and that having at times really, of course, positive effects on the markets. But in terms of where the average American is sitting and what they can expect, if the job market continues to soften, I really think that Jerome Powell is going to see the analytical argument to continue these rate cuts.
Okay, so that's one mandate that the Fed has, maximum employment. Then also, obviously, it's to bring inflation back to the 2% target. We've been seeing some three handles when it comes to the core CPI and PPI. We'll, of course, get the Fed's preferred inflation gauge, the PCE, later this week. If that comes in hotter than expected, could that potentially derail this rally? Because there's already some concern that maybe the Fed might have to pause come December.
Certainly. I think that if we are going to see hotter inflation, it's going to be an argument against these rate cuts. You'll probably see a lot of, if that does happen, I would expect Jerome Powell to kind of do some of the word salad that we've seen a lot the last several years of, we're keeping an eye on it and those types of things. Ultimately, retail sales are also going to be, I think, a big informant here. What are we going to see Americans do, not just, in terms of the economic number coming out later this week, but also just across the holiday season. There'll probably be a little bit of a push. Americans have been very durable. We've been surprised to see this year. But is that, a moment in time, maybe for December, maybe we don't see a cut, perhaps, potentially. But it's hard for me to think we get into 2025 and that we don't still see a lowering cycle in general.
That being said, and given the fact that people are looking for higher and higher returns, as you've said, and how high we've already seen the market go, where would you be comfortable putting money to work right now?
Well, we've seen the tailwind that the interest rate cuts have had on certainly those small cap positions. It's a nice place if we are going to enter that long-term lowering interest rate environment. That tends to be certainly a tailwind for those small caps. That paired with the fact that all this discussion around tariffs tends to favor those companies that are more domestic in nature, more closer to home, a lot of those small caps as well. I think that that's a nice play as an alternative to what's been running, the markets up in big tech lately.
Mm-hmm. Okay. And finally, I do want to ask you about your book called Launch Your Retirement, a financial planning guide to go from saver to spender. And the title threw me off. In fact, I actually Googled it to make sure I had that right because I thought the goal was being a saver, not a spender. So tell me why that's no longer the case.
Well, when you make the biggest transition of your financial life, going from your savings years into your retirement, into your spending years, that's really where you get that freedom to finally say yes. As we advise clients, I think oftentimes our job is to sometimes say no, put that extra money away, save, of course. But I think that the most rewarding moment we can have as advisors sometimes is getting to say yes and that you've prepared yourself well. And making that transition and outlining the steps necessary has been something I've been really passionate about for a long time and why I wrote the book.
Okay, so seeing as I'm a million years away from retirement, I still have to save at this point, and then I can spend a million years from now. That's what you're saying.
Hopefully not a million years from now, no. But yes, absolutely. I'm tracking with you.
All right, noted. I'll keep those carts, those items in my cart. Ted Thatcher, Bright Lake Wealth Management, thanks so much for sharing your insights.
Thank you.
Coming up on Options Corner, Rick Ducat joins us to highlight unusual options activity from the day and how investors are looking to trade on recent news from DaVita, Home Depot, and NVIDIA. Stay with us. We'll be right back.
Power your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. It's time for Options Corner, where we analyze unusual options trades seen throughout the day. Let's welcome in Rick Ducat, Chartered Market Technician here on Schwab Network. For this, Rick, thanks so much for joining the show.
Hey, good afternoon, Caroline.
Good afternoon. All right, I was just taking a look at your email, and you say these are Texas hedge trades, and I'm trying to figure out the Texas connection between kidney dialysis, home improvement, and chip making. So maybe first you can address that, but then you can get into the bullish move that you're seeing in DaVita, which has been a huge winner this year.
Sure. So Texas hedge, kind of a tongue-in-cheek name for when you're doing a double directional bias. So in the case of the trades today, it would be that you were doing two sets of long calls at different strike prices here. So that it was kind of a joke, you know, bigger Texas-sized type of trades, that type of directional outlook here. So that's kind of the thinking behind these types of trades here today. And DaVita, you know, our first name, kidney dialysis centers, medical care, you know, kidney health. That's what kind of company this is. No recent news, but Berkshire Hathaway recently increased their stake in DaVita by 18% to about $5.9 billion. Plus, they're hitting all-time highs, you know, just in our recent trading sessions here. Big recovery after earnings. You can see that kind of V shape there. Now, to get to the trade here, like I said, two sets of long calls, same expiration month, different strike prices, plus 975 April 17th, 165 calls, and plus 975 April 17th, 185 strike calls at a 25.10 net debit. So they paid, I believe, $8 for the out of the 185s and $17.10 for the 165s. So $2.4 million debit paid is the max loss here. You put those two trades together, it gives us a break even of about 187.55, so about 11.5% to the upside here. So looking for a nice move here in this name still as we progress you know, over the coming months here. You can see the Texas hedge style type long call spread here. It kind of has that flat part and then a more gradually sloping area and then a steeper area once you get past the farther out of the money strike there. A $1 move beyond that farther strike equals $2.4 million in profit for these options here. Expected move is 28.40, so that would take us near like 196. So break even's well within that area. Here's what's really interesting: 1,900 you know, options trading here out of the 2,100 total. So 91% of the total options volume in this name was this spread today. The sizzle is 10, 5 times the 5-day moving average of options volume, Caroline.
Okay, all right. So I learn something new on this program every day. So I've learned what a Texas hedge is. And fun fact, a few years ago on Overlooked Stocks, George Sillis introduced me to DaVita. And now randomly when I see the kidney dialysis centers, I think of George Sillis. So fun fact there. All right, next move you were seeing was in Home Depot. Shares of Home Depot up about 1.7% today. Having a good month following earnings. Fill us in on what you saw with Home Depot.
Yeah, another one at the highs. Home builder sector seems like it's getting a nice bump today after a drop in yields here. And you know, not a lot of specific news, so I'll just get right to the trade here. You can see that the chart looks pretty darn good here. So two separate trades here, and I'll separate them by their expiration month because it was two large spreads. So the first one, minus 1,318, December 20th, 400, 450 strike call vertical, so a short call vertical at a 27.29 net credit. The other leg, plus plus 2307, so 2307, January 17th, 445 calls, and the same amount January 17th, 470 calls at an 882 net debit. So there's our kind of Texas hedge type trade here. So let's kind of break it down here. The first leg, our December 20th leg, this was done at a $3.5 million credit, which is the max profit. The max loss for this one would be about $2.99 million here. Kind of an unusual structure for a short call vertical because the 400 strike calls that they sold are already in the money. So that's kind of unusual. Makes me wonder if it was perhaps a closing trade or perhaps combined with some kind of covered call strike type strategy with existing stock shares. We can't really know for sure here. But the break even for this leg, 427.29, which we were above last time I checked here. It's like 0.1% to the downside. That's where they would be wanting to stay below in this neutral to bearish type trade here. Okay, so that's leg one, a short call vertical. Leg two is two sets of long calls once again. So 445 and 470 strike calls in the January 17th series here. Risking $2 million, but the sky's the limit. You know, unlimited max profit potential here. Break even for this one, 453.86, about 6% to the upside. $1 move from the break even to 470 would be $224,000 of profit. So $1 move in the underlying would be, equivalent to that. And beyond 470, it would be $500,000 of profit for every move beyond that point. So you put them together. Now when we put our kind of profiles together here, it almost looks like a back ratio type trade here with two break evens between like 414 and 456. So thinking about it, we put it all together, neutral to bearish, below about 427 for the next month, then looking for a huge upside move. That's kind of the thinking behind this totals trade, it seems like.
Okay, so as we can see here, Home Depot currently just below 427 right now. All right, actually just above now. All right, and finally, NVIDIA is actually the worst performer on the Dow and NASDAQ today. Shares are off more than 3.5%. And you saw some bullish options activity. So someone's buying the dip here?
Extremely bullish. This is like a double Texas hedge. It's 4 different sets of long calls. And once again, 2 different expiration months here, so I'll break it down by the expiration months here. $64 million debit total trade here, so really very large. Leg 1 is our November 29th leg, so these are very short-term options here. Plus 21,998 November 29th, 141 calls, and the same number, same expiration of 144 calls at a 129 net debit here. So about $2.83 million is the max loss, which is the debit paid. Unlimited max profit. Break even, 142.29, looking for a 4.2% move to the upside. Every $1 move beyond 144 would equate to $4.5 million in profit. So this is a high risk, high reward potential trade here on this short-term leg here. And what caught my eye, the expected move is only a little less than $5. So at this point, they would need a bigger than expected move at the end of this shortened holiday week for this one to work out. Otherwise, it's the $2.83 million up in smoke. That would be a pretty rough potential loss here. And that's the small leg of this trade. Leg 2 plus 30,000. February 21st, 138 calls, same number, same expiration, 148 calls at a 2065 net debit, $62 million debit roughly or so. Unlimited max profit. $62 million debit is the max loss here. Break even, 153.32, looking for like a 12% move. This one, $1 beyond that break even, $5.9 million of profit here. So really a pretty interesting series of very, very bullish trades in this name.
All right, Rick Ducat, appreciate that unusual options activity. Thanks so much for breaking it all down for us. Coming up, we'll cover Bitcoin and how the recent success of the cryptocurrency is fitting into recommendations for financial planning. Stay with us. We'll be right back after this quick break.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab. Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl?
Schwab, a modern approach to wealth management.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Knock, knock. #1 broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the Watch List. I'm Caroline Woods, live from the floor of the New York Stock Exchange. It's time to focus on Bitcoin as the cryptocurrency looks to push past $100,000, although hit a bit of a roadblock today, trading below 96,000. Let's welcome in our next guest. Tatiana Kaufman is General Partner, Moonwalker Capital, and author of Myth of Money. She joins me here at the desk. Tatiana, thanks so much for joining us. Great to have you here.
Thank you for having me, Caroline.
So I see your new book here. It's called Myth of Money. I'm curious. I need the cliff notes. What's the myth here?
The myth is that the current financial system was made for our favor. So I think a lot of what I talk about in the book is allocating your capital into alternative investments to make your money work for you.
Okay, so it's all about breaking out of what you say is the failing financial system. I'm curious, how does a new administration potentially change this failing financial system?
For sure, so it's a really, really exciting time for us in the market. Obviously, Bitcoin has gone up to almost $100,000 this week. So we're all counting down to that last final mark till it hits 100K. And that's all as a result of renewed faith in the markets since the Trump election. And so what we're really looking forward to here is a lot of deregulation for the digital assets financial class, and also new pro-innovation regulatory framework that will allow for new products and new cryptocurrencies to come to the market.
Okay, so before we get into your view on what happens after 100K for Bitcoin, I am curious just in terms of why you think the current financial system is failing.
So I think what a lot of people haven't learned in school, and unfortunately have to learn the hard way now, is the way our system is structured is it's very inflationary. So a lot of people's wealth has eroded 30-40% over the last 4 years since the COVID regulations have come in. And people are starting to realize that they need to store wealth in alternative ways, whether it's in gold or in real estate or in things like Bitcoin.
Okay, so let's talk about your expectation for Bitcoin. You say you're waiting for the moment it hits 100K. It's gotten very close. it's trading around 96,000 right now, so off about almost, or actually just below 95,000 right now. So I'm assuming you're expecting that soon, but then what? Where does it go? What's your price target for Bitcoin?
So I think in the short term, we're going to see one of two cases. The first case is we're going to have some sideways action between 110 and downwards to 80, and we'll see some chop. The second scenario, and that will come either in the short term or in the medium term, is once we have the Bitcoin Act, which is currently under consideration, passed, where the US government will be buying Bitcoin into its reserves, as well as other countries and other corporates for their treasury assets as well, we could see a 500K Bitcoin or $1 million Bitcoin. Sky is really the limit here.
And why? What would drive it there?
So Bitcoin is inherently a scarce asset. You only have 21 million Bitcoins. And the Bitcoin Act, for example, proposes buying 200,000 Bitcoins a year, which would significantly drive up the price as there's a finite supply.
And what about use cases? I was talking about this with a guest on a previous show on Trading 360, just in terms of, President-elect Trump has talked about, the one rule of Bitcoin is you don't sell your Bitcoin.
Yeah.
But do you expect more people to actually start using it in terms of an actual currency?
For sure. So I don't think that Bitcoin is inherently the type of currency that you buy a cup of coffee with. There are places where people do that. So for example, El Salvador, which I've written about extensively, they use the Lightning Network for those types of smaller transactions, but you don't necessarily need it for that. That's not the prime use case. The prime use case of Bitcoin is a store of value. So when we think about money, there's usually three characteristics that people ascribe to money, the economists ascribe to money, and that is method of exchange, unit of account, and store of value. So there's thousands of methods of exchange around the world. Every currency around the world is a method of exchange. Unit of account, however, there's only a handful. There's the dollar, there's the euro, there's the yen, and now there's Bitcoin. But when you talk about store of value, none of those things are considered stores of value because of their inflationary properties. So if you're a high net worth individual living in the US, you're not storing your value in a case of cash. You're storing your value in buildings, in businesses, in sports teams, in gold, and now in Bitcoin. So Bitcoin is that similar type of property, it's just digital, which makes it that much easier to move, to sell, to trade, to transfer it across borders. So it's basically it's property but improved.
And how much of a portfolio do you think should be allocated to cryptocurrency at this point? And has that changed now that we have a very pro-crypto president coming into office?
Absolutely. I think if you don't have at least 10% of your investment account in Bitcoin or Bitcoin-related assets, you're going to fall significantly behind. So that is our advice at Moonwalker Capital.
Bitcoin-related assets like what?
Sure. So Bitcoin ETFs are Bitcoin-related assets. MicroStrategy is a Bitcoin-related asset. Bitcoin miners such as Hut 8 and Mara are also Bitcoin-related assets. So there's other ways. Coinbase stock is another one. So there are assets that derive their value from Bitcoin and they add exponential leverage onto it.
So with MicroStrategy up 540% year to date, Coinbase up almost 80% year to date, you'd be comfortable buying in at these levels, or would you be waiting for a pullback?
I think we might see a small pullback in December, as usually around the end of the year for tax reasons. We see some of these valuations decrease, but I don't see a significant pullback coming in the near future.
Because of President-elect Trump?
There's just significant momentum in the market right now, and we're going to have more upward momentum in 2025.
And you talk about making room for other cryptocurrencies. ETH is up today, was up about 6%, now up about 5%. What are some of the other cryptocurrencies you think will see this adoption momentum like Bitcoin has?
So we've had a lot of issues with regulation in this country over the last few years with Gary Gensler, who's now stepping down. And we've had significant brain drain where when people were trying to issue cryptocurrencies for certain technological innovations, they had to do it abroad and they had to leave the country to do so. And so I'm hoping that a lot of those innovators and founders will come back to America and choose to innovate here.
So can you talk to us about any other cryptocurrencies that are on your radar or that are that you're as bullish on as Bitcoin? Or is this really, I mean, we mostly just talk about Bitcoin. Is there a reason for that? Because that's the one to be in?
I think Bitcoin is the most proven asset class in our world, so that's the one we feel most comfortable recommending to people. However, there's certain financial infrastructure coins that are being built on top of Bitcoin right now. So like Stacks is one example, and it will allow Bitcoin to be more usable and more mobile, and be built into financial infrastructure such as borrowing and lending and collateralization, which we see in TradFi, but that is still being built out in digital finance.
Okay, so talk to me about how you think this all will change in terms of how people financial plan for the future. Even just as soon as next year, when we see President-elect Trump actually take office, how will the conversation be different as you look ahead?
I think previously, whereas banks were scared to recommend crypto investments and ETFs to their clients, where it was as harsh as a Bank of America would freeze your account if they saw a transfer to Coinbase and they would consider that suspicious activity. Now the switch is going to flip, and a lot of investment advisors are actually going to be pitching these ETFs and other Bitcoin derivatives to their clients.
And that's strictly because there's going to be less regulation around it. I guess what I really am trying to wrap my head around is, President Trump has talked about Bitcoin, and I think that's certainly bullish for crypto, but why is it that he's going to be so good for crypto? And I mean, we're seeing it priced in right now, so we're seeing it happen right now, but why the bullishness?
You have to understand that these financial institutions, they have a lot of oversight and they have a lot of checks and balances, right? And even these institutional investors, aside from banks like endowments and sovereign wealth funds, they have several checks and balances above them as to where they allocate their capital, and nobody wants to make the wrong decision. So the fact that you now have an incoming president of the United States giving you a complete green light that this is now a legitimate asset and it will not be prosecuted, and the financial activity around it will not be the financial innovation around it will not be prosecuted, is giving these decision makers the green light to go and allocate capital in a way that they were too scared to before.
Okay, so if those investors who maybe have a little FOMO that they didn't join in on the party are sitting there listening to you talking about Bitcoin at potentially 500,000, but potentially 80,000 before then, so definitely some volatility. What's your biggest piece of advice for those looking to get in?
My biggest piece of advice is don't wait, because this may be the last few weeks that you might be able to buy Bitcoin at 100K.
All right, we'll leave it there. So great to have you, Tatiana Kaufman.
Thank you so much. Thank you.
All right, that was Tatiana Kaufman from Moonwalker Capital. Thanks so much for joining the show. Coming up, we'll dive deeper into what some are calling the Trump effect and where the market goes from here. The watch list will be right back after this quick break.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rand.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Caroline Woods in for Nicole Petalides. It's time to dive deeper into the Trump effect we've been seeing in the market. For that, let's welcome in David Strzeski, CEO of Sound Planning Group. David, always good to see you. Thanks so much for joining the show.
Hey, great to be with you, Caroline.
All right, so I don't know if you just heard my last conversation with Tatiana Kaufman, but she was saying, when it comes to the Trump effect, we've seen some stocks reverse course. We've seen some gains paired, but Bitcoin, for the most part, has held on to a majority of the gains, trading around 95,000 right now. So that being said, she said, if you want to get in, do it quickly because this might be the last time you can get it for under 100K. What are your expectations for Bitcoin? Would you be a buyer on today's dip?
I am a, full disclosure, a Bitcoin investor as well as other crypto assets. And so I personally see Bitcoin going much higher in the future, especially with what I believe to be much higher inflation coming here as we continue to progress forward into the future. And so, Bitcoin's going to do very well underneath that. The US dollar will likely do worse underneath that. But I don't think that happens, right away. So will we see a Bitcoin above 100,000? Yeah, I think we'll probably close the year out above 100,000. And then, it's off to the races if we end up getting a Bitcoin reserve here as a nation. And I think it's important to know, though, why would this be such an important idea? There are 32 different halving cycles that takes place essentially every 4 years. The point I want the viewers to understand is this. We have about 1 million coins that are going to be left of the 21 million total capacity of Bitcoins. We've got about 100 years that we're going to be mining that last 1 million. So I believe that Bitcoin is going to become very scarce and that we don't recognize what we actually have right now. Each coin, by the way, breaks down to 100 million individual pieces. And so it does have the ability to, break down into more fungible sizes, depending on where the price discovery ultimately goes.
Okay, so would you be a buyer today at 95,000, or would you wait for a bigger pullback given the huge run-up that it's already seen?
I think that people that are coming in maybe for the first time, the idea here when you're going into a new idea, especially as it's seen new highs, is that you don't necessarily want to go all in right off the bat. You want to allocate at various portions. So yeah, when we see dips, that's when we want to buy. But if we look at and take a playbook out of Warren Buffett right now, he's sitting on excessive amounts of cash in general because I think he, like myself, is expecting that sometime Q1, Q2 at the latest in 2025, we're going to be seeing some pullbacks. And who doesn't love a good sale? I think I'm more interested in finding great buying opportunities, and I think that Bitcoin is a great buying opportunity, especially if we've got time and the next couple of years in our horizon for that investment. If you're trying to get rich tomorrow and buy sneakers with it, not the investment for you. Very volatile. You could lose a lot. You could go down a lot.
All right, so I would bet that Warren Buffett is not sitting on that pile of cash to buy some Bitcoin, but I guess I could be surprised here. Just in terms of broadening it out and looking at the overall market, you talk about much higher inflation in the pipeline. That obviously would have implications for the Fed. This market certainly wouldn't be too happy about that. So how are you looking at this market heading into year end, given all of the enthusiasm we've been seeing, given that seasonality is on its side, and then looking ahead to 2025? Where does it go from here?
All right. Well, we've got 56 days until January 20th. And so what's amazing is the Trump effect, as we just started out talking here. This guy gets elected, and then all of a sudden Putin wants to talk peace, Iran wants to talk peace. All these things begin to shift. Stock market goes to record highs, crypto market to record highs, real estate's at record highs. By the way, when things go to record highs, that's an inflationary idea. Because we could get overheated here. Now, what I personally believe occurred is that when Powell dropped rates on September 18th, that he made the Arthur Burns mistake of the 1970s. And what happened is Arthur Burns ended up dropping these interest rates at a time that, we kind of thought that inflation was cooling down, but it was right in front of an election, specifically Nixon. And what ended up happening is he cut those rates and then inflation reinvigorated here. And so I personally see inflation coming in real hot right now. You can't print money like we're printing money today, spending like we're spending today, and not see inflation. I mean, Milton Friedman gave us that idea and understanding that inflation is a monetary phenomenon created by central bankers. And so the central bank in the printing is also ultimately causing a lot of the inflation that we're seeing. So I foresee a recession, although I think that, if we're talking about the storms and the various clouds out here, I think that we're going to see, the best team in place to address this. And what I mean by that is there's not been another president that I can at least remember who's coming in with this idea of actually cutting spending, like in a meaningful way. And so how in the world do they do that? How do they sell that to the average person? What are the effects of that? I'm sure that there will be positives and negatives because nothing can be done perfectly. But ultimately, those are the ideas that we need to be able to have conversations about in order to go forward. But I see a lot of volatility as we move here to the end of the year. There'll be ups, there'll be downs. Look for buying opportunities when certain things go on sale. But I think that various parts of our market and the economy, like tech, might be overvalued. Not out of the question, not a bad idea, but maybe it got, a little overheated here in 2024. And, it might come back down to earth here in 2025 and then, pick back up into the races as we go into the second phase of AI, which is going to be adoption into our lives and making our lives easier and lower cost.
But many would make the case, even before the election, this was an S&P less than 2% away from all-time highs. So many would make the case that's because the economy has been more resilient than expected, and inflation has been coming down to target, and the Fed's in this rate-cutting cycle, which should be bullish for the market. So if you think we're heading into a recession, which I know you've kind of held firm on, and if you think that inflation is only going to get hotter, to me, that sounds like we should expect for more than just some volatility heading into year end. How does that play out next year?
Well, first thing I want to say is you need to make sure that you have your parachute in place before you get on that flight. Right? So we've got to have our anchors in place here. And so one challenge I believe that we will see coming into 2025 is that we've got more issues that are going on in banks that I don't think it has actually erupted yet. We've not really been talking about it, likely because we've been going into a presidential election. But the point here is that there are challenges at the foundations of who we are as a nation. If we think of, 70% of GDP has historically been the U.S. consumer's spending. If we look at GDP right now, it's actually now the vast majority government spending. The vast majority of new jobs today are government jobs, not the consumer getting jobs, and a lot of illegal aliens are getting jobs right now. So I see the consumer struggling, and so I personally look at recessions based upon how the middle class is doing, better or worse based upon the policy, based upon the season, based upon where we are. Higher interest rates are a big challenge. I think it's interesting now that we're beginning to talk about a 50-year bond. I've been mentioning this for multiple years now, and I think that we're going to go to a 50-year mortgage. It's going to be the only way that we can keep rates as high as they need to be for the investor, but ultimately get the price down far enough that we're going to be able to purchase homes in the same way that the average American is going to be able to afford. Because let's just be honest, our income is not keeping up with the cost of living. That's why unions are demanding 10% per year, raises, or they're not going back to work. I mean, 10% a year, that doesn't sound like we're at 2%, Mr. Powell. That doesn't sound like anyone's doing, so exceptional right now. So I think as we look at 25, there's parts of the market and the economy that are going to do well. Think pro-America, pro-North America, pro-reshoring, friend-shoring, oil that's going to drill here in the United States, metal miners that are going to be here in the United States that are going to do things with a pro-America first identity in some of what they're doing. And it's not about just throwing the rest of the world away. We just need to understand that as a nation, there's a lot that's slipping right now. And so this is why it's important that, President-elect Trump here gets back in, and that he's got guys that he's bringing to the table like Elon Musk, like Vivek Ramaswamy. I mean, I can't tell you how excited it is for me as a business person to be looking at that and hearing some of these ideas and saying, wow, I wonder what creativity is going to come out of this. I wonder how they're going to be able to do it.
All right, we have to leave it there. David Strzeski, appreciate your picks, appreciate your insights. Sound Planning Group, thanks so much.
Thank you, Caroline.
All right, still ahead, we'll bring in our panel to highlight travel trends for the upcoming holiday season. Stay with us, the Watch List will be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to the Watch List. Thanksgiving is almost here, leading to millions of Americans looking to travel. For some upcoming holiday trends to look for, let's bring in our panel. Patrick Tahan is head of petroleum analysis at GasBuddy, and Kenny Zhu is research analyst at Global X ETFs. Patrick and Kenny, great to have you both here with us. Patrick, let's start with you because I saw the latest GasBuddy survey that said 72% of Americans plan to travel by car this Thanksgiving. That means I'm going to be sitting in all kinds of traffic as always, heading to Connecticut on Thursday. But tell me, how does that 72% compare? What's the takeaway here?
Ultimately, it's much higher than where we were for the pandemic, and it's even a little bit higher than pre-pandemic back in 2019. And I think consumer sentiment, last year being hit with so much inflation, now inflation has slowed down. Gas prices in 32 states back below the $3 a gallon mark, and really have been in many states for the last couple of months. That has now spilled over in Americans' willingness to hit the road for Thanksgiving. A lot of folks still hadn't hit the road so much for a big trip on Thanksgiving the last couple of years. And now the opportunity is right, especially with a lot of stations, 100,000 gas stations in the U.S. now below $3 a gallon.
Okay, so Patrick, people weren't traveling by car in previous years because they weren't traveling at all. It's not a case of they shifted from plane travel to car travel now.
Yeah, exactly right. I mean, even last year, there was a lot of folks that hit the road, although, well, compared to this year's numbers, it really is a fraction of that. But yeah, I think the flexibility is what really is driving consumers' appetite towards vehicles this year. Although to say it as well, the TSA is expecting record-setting numbers. I think the airfare portion of this has a little bit been unbalanced because of a lot of the forced retirements of fleets that caused airfares to go much higher in the last couple of years. But even airfares, I mean, people are really getting out and about in very high numbers. A lot of them, though, really opting to take their car.
Okay, Kenny, I want to bring you into the conversation. What's the takeaway here about the consumer? I'm not sure if you heard our last guest, but he was talking about how much the consumer is struggling. Yet, this earnings season, and we'll continue to hear from retailers, especially this week, it seems like this is a resilient consumer that is definitely price conscious, but continues to spend. So what's your call on the consumer?
Yeah, no, that's absolutely right. I mean, if you look at the most recent CPI reports, I mean, we've kind of hit a little bit of a pause in terms of the progress against inflation. And to an extent, you know, we think that kind of illustrates the continued strength of the U.S. consumer. Gasoline prices in this winter season are currently at pretty attractive levels. And overall, we think that's kind of a gift for the U.S. consumer going forward. I mean, looking at refinery run rates in this sector, they've since recovered to near 90.2%. That's right around the long-term average, around 89%. And gasoline stock draws actually came in a little stronger than anticipated, while crude inventories remain elevated. Overall, we think that illustrates a higher consumer, the strength in the American consumer, and that overall highlights the strength of the economy in the current season, in our opinion.
But Kenny, if you take a look, you know, aside from our last guest who thinks we're heading into a recession, the economy has been pretty strong. And then you take a look at oil prices, and it doesn't necessarily reflect a strong economy. I know that is also reflective of China, but why the disconnect here between what's going on with oil and what's going on with the consumer and the overall economy?
Yeah, certainly. I think it's good that you brought up China, right? Because that's really one of the biggest global energy consumers in the world, right? These are global commodities markets, and oil's no different, right? Crude oils has continued to trade in that $60 to $80 status quo, and we think it's going to stay around that range in the near term. But, you know, over the past year, OPEC's kind of pinned its hopes on a recovery in Chinese consumption. That never really materialized. But, you know, drawing your attention to the U.S. economy, I mean, it's been a drastically different narrative over here. I mean, the U.S. consumption figures have kind of come in continually above average versus expectations. That we think just kind of highlights that the U.S. economy is doing a whole lot better than many of the other consumers out in the world. And we think that kind of highlights the strength of both consumption here as well as recovering factors in areas like industrials and manufacturing.
Okay, so Patrick, bringing it back to you, what is your outlook for gas prices, and what's the read-through to the bigger holiday season that is Christmas, another popular time to travel?
Well, I think heading through Christmas, Americans are going to continue to be real happy with what they see at the pump. Now, there are some wild cards. Russia's war in Ukraine, obviously some escalation happening there to keep an eye on. But on the same frame, you have OPEC, which is mulling cutting the oil production quotas, or increasing, I should say, oil production quotas. They would be cutting their oil production cuts at their meeting here that is just a little bit over a week away. So, you know, it's going to be interesting. I think OPEC may have a little bit of pressure on its members not to increase quotas, but you're starting to see some dissension amongst the ranks. And with President Trump likely to ratchet up pressure and sanctions on Iran, I think that's going to open the door for more oil production from OPEC. That should keep gas prices modestly low really through the winter. But next spring, I think U.S. consumers are still going to see that dreaded $3 a gallon mark sign reemerge.
All right, Kenny, we only have about 20 seconds. What does this mean for investors in terms of where they should be investing their money?
Yeah, we think there's some interesting opportunities right now, right? Because the risks are kind of weighted to the downside in the coming year. They're currently in a range right now, but we think areas like the midstream energy sector is very interesting, particularly if U.S. Production volumes continue to rise, right? So going into the next year, if those production volumes continue to remain constant, despite what's happening in oil prices, midstream transport volumes are more tied to those figures, and we think we like that sector as a whole.
All right, Kenny Zhu, Global X ETFs, and Patrick Tahan of Gas Buddy. Thank you both so much for wrapping up the show with me. That's going to do it for the watch list. Be sure to download the free Schwab Network app available in the Apple App Store. And, of course, tune in 24/7 on schwabnetwork.com. I'm Caroline Woods. Thanks so much for watching. Market on Close with Oliver Rennick is up next. I'll see you there.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Good afternoon and welcome to Market on Close. I'm Oliver Rennick. Thank you for tuning in. Got an hour left in the day here. It's certainly an interesting start to the week, following on to strength late last week. Markets pushing higher, Russell leading. A little bit of chop, a few things kind of moving around in a different way today, and seems to be a good bit of conviction. A lot of stuff from the morning that caught our eyes held. Some of it's extended, and for the most part, pretty big moves today, no matter where you look. As far as stocks go, the Russell being way out in front, Russell 2000 making an all-time high. We've been waiting on that for what seems like forever. So to get small caps really breaking out meaningfully on the chart, joining in the rest of the stock market at records is certainly an impactful and relevant thing for a lot of investors who've been looking for that trade. It's kind of a rotation style market. Got banks doing really well. Tech's been kind of mixed. Nvidia is down. It's been down all day. You've seen yields down all day. and the dollar lower too. So things that definitely are noteworthy here, especially on the macro, some tying it to the announcement of Scott Bessent as Treasury Secretary. Some just looking at charts and seeing answers there for technicals. I think it does make some sense to see the dollar run into some resistance after trying to get to multi-year highs. And I have for the last about 2 weeks, pretty much since mid-November, I think it was November 14th, a risk radar was about the notion that yields should slow down a little bit to the upside, basically due to some flattening of the curve. And if you look to 10s to the 2s, that's finally happening here. So some of it you might be able to attribute to news flow and exogenous items like Treasury appointments. Some of it you might also just be macro related, given that the odds of a Fed cut in December have been going down. The pinch on the curve makes some sense, given last week the 10s didn't push higher in yield, but the 2s were. Today you're getting a little reversal in everything, so maybe that does have something to do with policy, but the fact that you're getting a pretty meaningful push down in the 10s and 2s curves, taking it back to basically that kind of gap up that we saw about 3 months ago. So it's a notable move, and the ascent of the yield seemed to run into a bit of a wall around 4.45 for the 10 years. So definitely some interesting stuff on the macro front. Dollar chart basically similar in that it had this big powerful move and is reversing some of that, but the dollar chart, I think you can just go pure technical for now. A lot of talk about how the Trump admin wants a lower dollar. How do you actually get that, particularly after the dollar has been ripping following interest rate cuts? That's a fun one to unpack, because if you're trying to design policy around a lower dollar, how are you going to do that if not through just lowering rates? A lot of folks think lowering rates is the way to go, but of course, bonds have been selling off, yield's been going higher, dollar's been going higher, basically at the low from when the Fed cut. So it's definitely a tricky proposition at this point. So I would just go with the technicals. You can see the multiple events in which the dollar over the last year and a half, 2 years basically post-COVID, has come up to where it is and then had trouble going further. So technically we put in a multi-year high outside of that big run-up that would let into the Fed rate hikes. So dollar just seemingly getting a little bit of resistance. By the way, it's also come back a tad here throughout the session, but bonds haven't. The bid into bonds is very real today, and it definitely marks a bit of a tone change. Question for coiners is if there will be tone change in crypto markets as well. Bitcoin down just shy of 5% today. Obviously, we've had magnanimous moves across crypto markets, and MicroStrategy leading the way. I'm looking forward to a conversation this afternoon with Andy Constant joining us from Damped Spring to take us through the math of the convertible bonds issued by MicroStrategy, how that matches up with the stock as a trade. That should be a really important conversation. Watching Bitcoin very closely as any sign of waning animal spirits. Maybe it's not connected to the rest of the market. Maybe it's just doing its own crypto things. Kind of has been, but it's hard not to link that also into some of the Trump 2.0 policy trade, because it was one area where the incoming administration did notably stand out. So just keeping an eye on some of the recent trends, getting a little pushback here, whether it's bonds, Bitcoin, or the dollar. One thing that's consistent, though, and the best thing about today's session is the strength in the financials, and namely the regional banks. KRE continues to break out. They're technically just gapping up, now 33% on the year. That is a big move for the regionals. It also makes me think about the market overtime that is going to kick off for this week, starting today with the CEO of the one and only Charles Schwab Corporation. Far from a regional entity, but along the same lines, I talked with our new incoming CEO, Rick Wurster, who's going to take over the helm in January. That's on Market Overtime this week. We talked to him last week at Impact about the details around the balance sheet, not only for rates and what it means, as the market seemingly has moved on from that as a risk for banks, but also the potential for crypto too, to change the game. So make sure you check it out. Very deep conversation that I enjoyed very much with the big boss, the big boss. All right, that's Market Overtime. This is Market on Close. I got Jenny Horn with me here in the studio in Chicago. Jenny, let's talk some stocks here, because the Russell's really ripping. Small caps are doing well. We know that seasonally this is a pretty good time of year. Bloomberg did a really good kind of expose on that whole subject today. Take me through it.
Really interesting. So, I mean, I know that we talk about the Santa Claus rally, which I think that we can say we're safely like in that territory now, but I I didn't realize S&P 500 has risen from the Tuesday before Thanksgiving, so tomorrow, through the second trading day of New Year's 80% of the time, with an average gain of around 2.5%. According to the Stock Traders Almanac, but small caps, it is a pretty good rate, 80% of the time, but small caps do even better. The Russell 2000 has an average rate 3.3% jump since its inception in 1979. So the S&P 500 and Russell 2000 are on track today for their 6th straight session in the green, their longest winning streak since September. The small cap index would have risen about 6.2% over that given time frame, while the S&P 500 is up just shy of 2%. So I mean, the divergence in performance has become really interesting, especially because I feel like this market has been so heavily skewed in like the AI trade, the NVIDIA trade, but you're seeing more and more of these names that have been beaten down now pick up nice momentum and not show signs of easing over the last week or so, with the rest of the market sort of starting to moderate post-election.
Yeah, this is a big move because we've been waiting for it for a long time. The small caps. Bloomberg kind of cut straight to the point, calling it the riskiest parts of the market, which, I mean, it technically is true, but that's sort of a way to describe it that I guess some can kind of debate, but it's really not. It's kind of high beta. That's the point. You get a bigger bang for your buck. Generally, when you go down the small cap into that world, you lose a little bit of the quality factor that we've talked about a lot with Liz Ann Saunders, Kevin Gordon, the equity research team at Schwab. It's been all about quality. So there is some very real truth to that if you're just going to buy the outright index, I think as Liz Ann put it to us last week, there's still like 40% of unprofitable companies or something like that in the Russell.
Which is ridiculous, but I mean, unprofitable companies, sure, from a fundamental standpoint, could give you hesitation for investing, but I mean, those are still companies that trade phenomenally. And we talk
they're
about
looking great right now.
Or some of the most unprofitable companies are some of the ones that have seen like the most upside as of late. I can understand. I mean, we still have a elevated inflationary environment. We still have major geopolitical risks and relatively higher interest rates. So that's, I think, what the skeptics are arguing is these are companies that are not only more risk averse or more risky, but they're also more exposed to like inflationary headwinds, perhaps like disappointing holiday spend, like all the market dynamics that we're concerned about into the back half of this year. But I still think that you look at the period from November through January, which is typically the best 3 months of the year, because of the fact that companies and pension plans tend to increase their stock buying that began earlier this month. The market also tends to somewhat drift really into the Thanksgiving holiday period before then rallying. So we're seeing that today to definitely kick things off. So today is definitely not bucking the trend of what we've seen historically for the last, I mean, we're talking now 30 plus years. With equity valuations though at these highs, I do think there is in the thinking of like, could we see things being taken off the table in like your Apples and Nvidias? I mean, it is kind of the case today, but it's not having a huge impact on the overall market.
Yeah, we're cruising along anyway. Some pretty serious skew towards value and away from some of the momentum tech names. But, you know, those have been kind of struggling a little bit outside of a few names for a while. So I guess the market was kind of ready for this type of rotation. The last point I would say is that they do add in the analysis that when the markets are up pretty big, to your point, that kind of Thanksgiving Santa Claus rally doesn't quite pack the same punch, but it still should pack a punch.
But it did last year too, and I feel like last year we were so quick to say like, hey, well, we've been in this really nice momentum, we're going to see maybe some of this fade, and then it didn't. I mean, so many of these names were ripping into the back half of last year. That's the reason why, if you look at 12-month performances of a lot of these stocks, they're better than their year-to-date performance because of that Santa Claus rally. So I think it's too soon to say. I do think the nature of an election year now, like post-election volatility, has been unique in the sense of like Bitcoin and crypto has been taking off outside of today. But I do think that a lot of these small cap names have become more and more compelling with inflation still running rampant. They're doing, I mean, amazingly so in this like earnings cycle we're sort of at the end of now.
Yeah, true. All right. Hey, Russell, not to be messed with today, 2%, very little pushback as well. Even with the NASDAQ red, some of the tech stuff lagging. VIX down anyway, Russell ramping up, so pretty good start to the week. Thanks, Jenny, for the look at the small cap strength. One of the subjects we talked about last week, an impact among RIAs. We heard a lot of discussion about municipal bonds, some of it connected to Trump 2.0 policy. Let's talk some more about how S&P Global Ratings is seeing policy. Nora Wittstruck joins us as government's Chief Analytical Officer. Nora, thanks for being on the Schwab Network.
Thanks so much for having me here.
So, firstly, when you are thinking ahead to January beyond, like how much visibility is there? What types of things are you putting in your models that are new?
Well, I think not everything's new, right? Everything that is old is new again. So we have some ideas about, very preliminary what Trump's decisions around immigration could mean for certain sectors within U.S. public finance. And we're monitoring those now.
Okay, so why am I hearing so many folks? I used to be a muni bond reporter, so I'm pretty attuned to the muni bond chit chat, and it's been like distinctly loud lately. Like years, I haven't heard so much talk about muni bonds. Is it because people are sitting on a bunch of gains? They want now tax-free stuff? Is it that people rebalanced their bond portfolios a year ago and 4.5% ain't quite cutting it? They want to sprinkle something else on there?
I mean, I think there's a lot around what these policies might mean when it comes to renegotiating tax policy. And at the end of 2025, when the Tax Cuts and Jobs Act expires, we'll see what might be more credit relevant in 2026 when it comes to those types of discussions.
Okay, so thinking right now, one of the policies that it seems like you're having to recalculate expectations around is immigration. Take me through that. We've got like all these major things kind of up in the air. This one probably we haven't discussed quite enough. What does it mean to you?
Well, I think, there's a couple of things that we're watching in regards to immigration, some of which could be actually credit supportive for credit metrics that we rate amongst, state and local governments, higher education, K through 12 institutions. And some might have a bit of dampening effect on credit quality for those sectors. For example, in a recent publication, our economists outlined the fact that the Bureau of Labor Statistics reported the highest labor participation rates since the pandemic at about 84%. And some of that is a boost from immigration. So if you take, immigrants out of the equation, there could be a return to a tighter labor market, which could also cause some dampening of economic growth and maybe a bit higher inflation.
The other policy we're trying to figure out is what happens if they start laying off federal workers. If there's a big DOGE job cut that comes, could that fill any of the gap? If we're getting fewer immigrants, but there's a bunch of folks looking for jobs.
I mean, it's quite possible. I'm not on our economic staff at S&P Global Ratings, so I think all of that will sort of play out over time, and we'll see how that lays into a number of other economic metrics that occur relative to some of the president-elect's policies.
In terms of states, local government changes, anything that we should be looking at in particular if we're trying to find kind of the juicier parts of the muni market?
I mean, again, I'm not an investor, so I won't tell you what I think is juicy or not juicy when it comes to muni bonds. But I think generally, state and local governments have a lot of cash that they're sitting on from the pandemic and the way that the economy has grown since the pandemic in terms of their
She paused on us.
More than that, you get two more than that when you buy the convert. So that thing could easily be worth 40 points. And so the convert looks like good value if master shares are good value and a $60 zero coupon bond that matures at 100, which pays, I don't know, roughly 10% returns over 4 or 5 years, is good value. And so the convertible market.
Oh, good value.
And so they bought it. Many of them hedge it. And to hedge it, they need to hedge that call. And a long call is hedged with short stock. And so a fair amount of the value that the convertible bond arbitrage community does, and was my business for most of my career, was short the stock and be long this option.
Okay.
And that's allowed Michael Saylor to sell a significant amount of proceeds. The convertible bond arb likes it, and he's counting on being able to short the stock to shareholders who seem to want to pay 2.5 times the value of the assets for the shares.
Well, they're dumb.
Okay, so any price action wise, does any of that hedging by those who own the convert, would that be applying any pressure to the shares right now, or is that just kind of nature when there's also stock sales going on?
Well, it usually happens relatively simultaneously, that the deal gets done at the same time as the shorts occur. And so, no, I think that's probably in the past when the deal
Intel might have a buyer
a few days ago. So I don't think that's putting any pressure on it at all at this stage.
Okay, and you mentioned in there that it obviously makes most sense if the pricing of the equity is correct, if there's value in the equity. So how much of this, though, does
Bob is back. How did I put Bob in there?
The stock being able to rise, Bitcoin's price with Saylor's break-even moving up as he's
I don't know how that happened.
Really high levels.
Yeah, I mean,
Shit.
the company uses its cash to buy Bitcoin, and so obviously its liabilities, its shareholder equity, and its convertible bonds go up if the value of the assets go up. But with that premium of 2.5 times, there's going to be a headwind as Michael Saylor should be and really is in the business of issuing stock and convertible bonds. What he uses the proceeds in is almost irrelevant. That happens to be Bitcoin. But anybody that can get 2.5 times multiple for the assets of his company should be in the business of doing that. And so the selling of
this guy knows what he's doing.
Of equity and convertible bonds,
300 to show up.
Bitcoin should over time cause that premium to converge to close to zero. And so Michael should keep doing that, and I think that's his intent.
How much clarity do we have on what needs to happen for the underlying price of BTC the more he becomes an owner of this? How long can he continue this trade? And then when the trade, whether if there's a limitation for Bitcoins, and then also like, it doesn't seem like he has much intent of like closing out that trade. He wants to hold them forever. So like, is there sustainability to this, or does it fall on its own weight eventually if he either runs out of supply or if he has to hold on to what he's got?
You know, if Bitcoin goes up and Master follows it up at that 2.5x premium,
then we're golden.
He can do this.
There's a breakout.
Endlessly. But the issuance itself is going to cause the premium to go down. And I could
But the
imagine
SPX
a world
didn't
in which
break
the
out.
premium falls so much that it goes to a discount. And if it were to go to a discount, his business should be buying shares back with proceeds from selling Bitcoin. Now, that may be heresy for most of your viewers, but if I were in Michael Saylor's shoes and I saw the thing at a discount, I'd sell some Bitcoin and buy the shares back. And just keep doing that premium harvesting.
Well, that's where it gets interesting, because he doesn't seem like he would ever be at the point where he wants to sell Bitcoin. And the question is, does he kind of back himself into a corner? And
why would you want to sell Bitcoin? I mean, in 20 years, it's going to be $34 million a piece. 34 million. 20 years.
$8 billion of these zero coupon bonds that are going to mature over the next few years. And the market cap of the equity is 80 billion, and the value of the Bitcoin, last I looked around 36 billion. To the extent that 36 billion were to fall below 7 billion, that's when he would have to sell Bitcoin to pay off his debt if he couldn't do new financing.
Okay.
And so that's the really far out of the money risk to the strategy. But again, it would require Bitcoin to fall, what did I say, from 36 to 7. That would be a 75% drawdown before there's any real tail risk of that nature. Now, Bitcoin could fall 75%. It has in the past, but that's not my call. I think the call here is, if you want to invest in Bitcoin, Master is not the way because it's the most expensive. The converts are actually fair, but not only if you're short the stock. And there are many other ways to buy a levered bet in Bitcoin that are far less expensive. And so I think the risk to Master stock is entirely in this premium.
Okay. Andy, one other point, your point about kind of the nominal level at which Bitcoin would have to fall to really stretch the trade for Saylor. What about the rate of change in the speed? So let's say there's a fast collapse, maybe it's not as nominally as big as what you're describing, but then that would totally erode, at least to a great degree, kind of erode the option element of the coupon bond. Would that apply any kind of reversal trade if there were a speed fast enough to which, like, okay, this is going way out of the money now to the, that 672 strike or whatever?
Right, so Michael's doing something that should stabilize the price of his stock. By issuing $7 billion now of convertible notes, he's got somebody on the other side of that trade who, when the stock rallies, they sell it to increase their hedge. And when the stock falls, they buy it to decrease their hedge. And so that's what we call positive gamma. And the convertible ARBs are loaded up with that. So it should dampen the volatility of Master stock because of the existence of these convertibles and the fact that they're hedged by convertible bond arbitrageurs. So I think it'll dampen the speed of declines on Master. Now, that doesn't mean it'll dampen the speed of declines on Bitcoin, because the option is on Master stock, not on Bitcoin. And so you could see
Bob, December swings
volatility on the Master stock, even though Bitcoin is moving along.
All right. Hey, Andy, just real quick, and I guess this one's kind of more from your gut, from a trader perspective and your history in markets. When you see how much he owns now and his portion of Bitcoin going up at higher average prices, when the supply obviously is limited and going down, do you think there's a tail wagging the dog situation where if MicroStrategy comes under pressure, it could move Bitcoin price up? Is it now like a major catalyst itself?
I don't see him as a seller, and I don't see him as a forced seller. So I don't think he's necessarily going to cause it to go down faster than it otherwise would. And I don't think he's, listen, I don't know. Is 386,000 coins a lot of coins relative to the total amount of coins outstanding? Yes. Does he have some concern if he owns a lot more? Yes. But like the U.S. debt, it's probably a long way away from those sorts
Yes, and they're dead.
concerns.
All right, appreciate the math. Appreciate
They don't look too good.
Andy.
Pleasure, Oliver.
Yeah, very helpful to understand how it works. Any constant CEO and CIO at Damn Spring Advisors. All right, and the train keeps running. Though today's a little bit like the idea of it possibly calming some of the volatility in the stock, though. All right, when we come back, we're going to talk some more about the underlying asset, BTC, as well as the impact on gold and the dollar from today's move in interest rates. We've also got developing stories, some U.S. representation in Formula One building.
Doo-doo. NVIDIA. Oh yeah. NVIDIA. So this is 2 earnings now that we've had 2 fake outs that the market did not respect NVIDIA's earnings. And I'm going to keep saying it, market cap, the silent secret now, secret. Yeah. Wow, I tell you what, I got down there and shampooed carpet, and then I got a call from the electrician, and we're trying to get the parking lights working, so I had to stick around for that. And I'm sore, but I like shampooing carpet because it stretches my muscles out. And I'm going to sleep good tonight. I can't believe I'm 63 and still not as strong as an ox, but I can outrun a lot of kids half my age. So my 2 favorite stocks are down today, Tesla and NVIDIA. Hike.
We've seen a really disconnected, disjointed market over the last several months.
I want to hit gold, but to close out the crypto convo, because we also got options on the ETFs now too in the last week, alongside MicroStrategy, alongside the other levered funds. What do you think?
Jim.
Chiming in our conversation with Andy there, what's the preferred way to trade it at this point? How do you kind of rank the
This
different
thing I got to
vehicles,
be watching close.
Well, I think the easiest way is to trade options, whether it's on one of the ETFs or on MicroStrategy. It would seem like people, retail traders would maybe think there's a little more risk with MicroStrategy just because you're talking about a $400 asset with incredibly high volatility as opposed to one of the new ETFs that's trading right around $40 or so. I do think options is the absolute way that retail and everyday people maybe looking to hedge a Bitcoin position, the way that they're going to go about doing it. There's also, though, the micro Bitcoin futures at CME is a way to do it also, where you can get in at a much higher levered position at a lower cost.
Okay, all right, well said. All right, let's talk that gold sell-off also happening simultaneously with the other stuff today. Gold's really having trouble. What do you think is going on here?
So what's the deal with Sava?
Crude being down too, geopolitical stuff, or you go the macro route?
Yeah, I think you have two things.
Oh God, what the hell's going on?
What probably will be confirmed, or who will probably be confirmed, the new Treasury Secretary, who, that's why we're seeing the dollar kind of ease up a little bit today, because people are looking at this and saying,
Oh,
okay,
boy.
he's not going to be, let's say, quite as hawkish as the administration might want on tariffs, et cetera, et cetera. So you've got that, and then you also have geopolitical events where, you know, the supposed agreement, and I say supposed because nothing is written in stone yet, between Lebanon and Israel is taking a little bit of bite out of the geopolitical risk arena. I'm not sure I would put so much on that, although the market is right now, Oliver, because we know that can change in a heartbeat.
Okay. Gold down, but not too far out just yet. Still above the low from earlier this month. So big sell-off today. Big red candle. Thanks, Scott. Appreciate it.
You got it.
Good stuff. Let's go to Jenny Horn with the developing story. Jenny, looks like U.S. is going to get a little bit more representation in Formula One in a couple of years.
I guess so, yeah. It's not going to be immediate because, of course, this doesn't go into effect until 2026. But Formula One earlier today did announce they approved the entry of GM and Cadillac as the 11th team on the grid. The announcement, which is part of this application that was initiated by Andretti Global, to shake up really the F1 world and provide a much-needed boost to the fast-growing U.S. market with the arrival of these American car manufacturers. The much-awaited decision also does follow a year-long saga marked by drama within F1 after Andretti Global did apply to join the grid and gained the approval of the sport's governing body, only to then get rejected by the Liberty Media-owned commercial side of F1. But the added promise from GM does become, I think, definitely a breakthrough. In a statement, GM did say it will be building to power its own unit by the end of this decade without giving a specific year. But Mario Andretti, which is a former A1 champion and patriarch of this Andretti dynasty, will serve.
Hogwash. Now, this is what I didn't get. Tell me if you think this is a good advertisement. Because if you think it is, I need to. Did I miss something? Is this payback? Is this another Bud Light? This is Jaguar. I don't want to sit here and do acid and watch a commercial. Are we at the Olympics? I already messaged him. I said, what the? I said, I'm turned off by this commercial, man. Nothing rebrands draws backlash. Yeah, see, I mean, what the hell's wrong with people these days? Basically, you buy Zim here, you will give you a nearly $5 dividend next couple weeks. YouTube, you think that's a good commercial? Am I missing something in life? Yeah, I'd like to have me a pink Jaguar, please. Make sure that it's got a, what do you call them things? A buffet in the back seat, just in case I need to wipe my ass.
Or 3 weeks, it's still a greater than 50% implied probability of cut. but it's getting closer and closer to an expected pause. And I think the next few weeks of data are going to be really important, starting with this week's PCE report. PCE is proven to be sticky if we're looking at those year-over-year numbers. It's expected to rise to 2.8%.
I'd say it's been about an hour.
Back to the June meeting, the Fed had revised their projections of year-end inflation. And
I told them about the backdoor lights.
June was actually for a 2.8% year-over-year change, which is what expectations are for this week.
And they think it's the fixtures.
That lower in September.
He flipped the timer switch and it stopped the breakers breaking.
Projections were wrong, but if we go back to June, they talked about base effects.
He knows what he's doing.
We have base effects that could result in a minor uptick, but we're also seeing stronger inflation in the here and now in those monthly numbers. The monthly read is expected to be 0.3% for, again, this is what we saw last month, and that's moving in the right direction. Something that I look at a lot when we're looking at those inflation indicators are we need 1 and 2% increases.
They're going to call you and give you an
just
assessment.
Want to get closer to that 2% level. So it's going to be difficult for the Fed right now if inflation proves sticky. And then looking ahead even more, I know we have plenty on this week just to talk about, but if we look at next week with the jobs report, if we get a stronger than expected report there, that would further support the case for a pause.
Okay. To your point, though, this week is we do get GDP, we get core PCE. To your point.
I'm at home. I won't be able to do that. They'll probably make a second trip. It's 300 to show up, I think. It's 300 to show up, I think. Electricity was getting to the poles. He told me it might take a half a day. Do 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 do. Less than one more minute.
Ameritrade is now part of Schwab.
Damn, you almost got to hear the rock and roll Jim today.
Tailor-made for trader minds.
Woo! There goes my ding-a-ling. Thanks for letting me take out here this afternoon and do a little extra work. I had an opportunity to do a couple stalls at my job, so I went in there and I done some carpet cleaning, stretched my muscles out a little bit. And I'm working on some lights for the IRS building, so I had to stick around there and wait for the electricians. Now I'm going to go in there and cook me a couple burritos and enjoy the night. Had a pretty good day today. I think it would have been a fun day all day today if I'd have stuck around. No losing trades. Ready to open. Well, we banked it in 2 minutes this morning. I could have been off 67 bucks a contract times 20. But I got out of a little soon. I got 600 instead of 1200. Then we played the Tesla a couple times and back on the SPX. So I'm going to head on out of here. What happened to Tesla? I think it's just consolidating. Rotation, it sounds like, but same thing with NVIDIA. It's had a pretty good run. Sava's got slapped around today on bad news. I'm telling you, if you're not a very experienced trader, you need to be careful in this market right now until, I think Putin, this is my opinion, I think Putin's a little scared. I think he's a little scared, and if you push a man like that in a corner, he might do something stupid. But if his own army goes around and shoots him, they'll be able to save a lot of people over there. I get this, I freak out a lot because we're being threatened. I'm not used to being, I just don't like killing and war, and I just don't think we should be in that situation, but our politicians got us there. They're mostly invested in war stocks and pharmaceuticals. Hopefully Trump can go in there and clean house, clean the DOJ, clean the FBI, get back to, Hillary could have been prosecuted, but Trump didn't prosecute her, didn't go after her. Same as Clinton. We kind of went after Clinton for jailbait, having sex with a woman a third of his age in the White House. Sex is a hard thing for a lot of people, man. I like to be stimulated, so I always had this thought that if I was always satisfied sexually, I could do real good at trading. But that's that. What else? I didn't trade anything when I was gone. I wanted to, but I figured I did well enough. I didn't have to. It's hard for me not to want to trade. I don't know what I'm going to do when I retire. I'll probably be doing it until I can't see again, until I can't see or think. You got to be very careful. And, my trades, that's why I like trading these squeezes. You hear me say, we're going to break out in another minute. It looks like it's going to break out in a minute. We're going to know anything here in a couple seconds. I'm going to give you 5 minutes before we get ready to break out. I'm identifying them squeezes and them flags. Right now, for like Tesla, we could come in tomorrow. This thing pulled all the way back to the 200. We're on the 1 hour time frame, and we pulled all the way back to the 200 EMA and SMA. So this could have been a flush. It's back to where it started Friday morning. The rhetoric is different now about Elon. It's like these liberals on CNBC are biting their tongue. They bring that idiot Mark Cuban on there that says half of the women in the country are stupid. I'd like to take a piece of him. And then he's talking about conservative women. They're not smart. I don't think you should say that to the DOJ if it's a lady. Mark. Don't you know better? You're a multi-billionaire and you're downgrading women? Walmart pulled back a little bit. Tomorrow's a big day for earnings. You can go back and watch this earnings video that I did. So Jim, I watched it. Okay, well, that's weird, man, leaving here half a day and coming back. It's definitely... BBWI had a real good earnings. Bath and Beyond. I went in there and I said, hey, you got any... I forgot what I was looking for. Shampoo for men. Had a real good day today. It'll pull back 50% retracement, and then I'll look at it once that alert's triggered. Well, yabba dabba doo. Okay. See this here flag? I want you to look at this here on BBWI. I was talking about this in the video. Yeah, it's a bull flag right there with a head and shoulders. Boom. All the way up to the top. Okay, well, everybody have a good day. I'm going to quit talking.